So can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show. A little millennial takeover on this beautiful Friday.
We did not plan it. We're all green. You got green on too.
I know, but it's not like the. Thank you, guys. Thank you. It's not the like lime green you guys got. Right.
It's a Kelly green. It's an Irish spring green.
That is
bright.
That's really bright.
Yeah.
That's very Irish of you.
Yeah, there you go. I don't know.
Yeah, James was like, "Where's the party shirts?" I was like, "This is a party polo. Look at this color. You can party in this shirt.
It's a ridiculous
quite easily."
green.
Yes.
The problem with that is that is green.
Yeah, the DJ air horns.
Well, they could probably superimpose like whatever they want.
That's a green
shirt.
green screen
Yeah.
green.
Yeah.
Oh, yeah, let's have fun with that on social. Okay, yeah, I'll do something about that
yeah.
later. Maybe you're under the sea. Maybe some fish, some aquatic life.
Ooh, that could be good.
I could be doing a lot of things today.
Yeah.
It could go a lot of ways.
Yeah.
You open that
I do like that whenever like a news person or spokesperson inadvertently wears like a green dress
Yeah.
or something, then they just Photoshop stuff.
Well, when we were in COVID, I used to wear this Under Armour. It was like a yellow
Oh, yeah.
Under Armour zip up, and I used to invert the background.
Oh.
So I used to make the Zoom background like my shirt. So the same thing can happen here.
Ah, those were the days.
Yeah.
And now we're in 5 days a week.
Yeah. As
Sometimes.
foretold.
Only when there's good lunch.
Yeah,
Coming
and
on Friday.
today is legendary. One for the
Yes.
record books.
Diego, good one.
It's actually, I was like, you want to do remote? You want to come in? He's like, well, Diego's the lunch, so.
Nick and I formed an alliance. We need to manipulate you.
It's the lunch alliance.
Yeah.
Like
I was like, would you like to form an alliance? And Nick is like, I would like to form an alliance.
Yes.
And so we did.
Vanette, I've been here long enough to know that I don't want to be on the other side of your of the war with you. Okay, I will always be on your side. No, I don't mess with you.
No. What's on tap for you guys for the weekend? It's the freaking weekend.
Well, one of my friends that lives in Knoxville is coming to town.
Okay.
So I'll
Up
see
from
him-
Tennessee.
Yeah, I'll see him tomorrow. Football Sunday, obviously.
Is he staying with you?
No, down the street though.
Nice.
Yeah.
Has he been to Chicago before?
Yeah, he's from Chicago.
Oh, he's from here. Okay.
Yeah,
But he
but he
lives in Knoxville now. Gotcha.
Yeah, making the tour. Tonight, going to Lake Geneva.
Wow.
My brother's bar. They have this
Magpies.
Magpies. They have this cool thing that they do where
Your brother owns a bar in Lake Geneva?
my other brother, not Chris.
The cool
Right.
brother.
No, not the one that lives in Hawaii. I love how your brothers have the most random ass side quests.
Yeah, then there's this guy over here stuck in this room all day long.
Yeah, but
One's a bar owner, one's like surfing in Hawaii, kite
know.
surfing,
Yeah.
like
what am I doing?
yeah.
Shilling options day to day.
Wait, are you the oldest or the middle?
I'm the middle.
Oh, okay.
That's why I'm so chill.
Yeah.
You know?
Yeah.
They were insane when I was growing up. It was like chaos, and I had to be the middle.
The eye of the hurricane.
Something
Probably
like
a
that.
rare occurrence. Is it a rare occurrence?
No, I think it's pretty
usually
normal.
Well,
Yeah.
isn't it usually the oldest is like the one that messes up and kind of
Are you older than Gina?
yes.
Yeah, so
I'm the
you're
oldest.
so you're the oldest.
Yeah, I was the troublemaker, and then like everybody else kind of gets progressively less and less of a
Yeah.
troublemaker, and then the youngest is the one that gets all the freedom.
Sure.
That's
Yeah,
usually
Sure.
how it is.
Yeah.
But yours was flipped.
But you're going to Lake Geneva tonight, which
Yes.
is a choice just because traffic is just insane.
So they do this thing. The bar is called Magpies.
I love that name though.
It is nice. It's cool. They have a really cool outdoor area, but in the winter, they take these barrels that you sit in. So like think of like an oversized wine barrel.
Oh, okay, yeah.
Gigantic.
Oh, I've seen those.
Yeah.
Yeah.
So they put them in their back patio area where normally is just like turf where people.
Oh, there we go. We got some footage here.
Wow.
Yeah.
Look at this.
This is really nice.
Yeah. So.
Oh, I love
Doxing
the
you.
vibe.
Sorry about that.
But
Ooh, that's good whiskey. I've had that whiskey.
so yeah, in the winter they put these barrels out there and they do a barrel dinner. So it's like a 5-course meal.
Oh, wow.
And you sign up for it, and
Sure.
then they bring you the meal as it comes, and it's like a cool dining experience. So
Yeah,
we're doing that
well,
tonight.
post it on your socials. I want to see.
Yeah. There it
That's
is.
really good.
Beautiful.
So wait, how long has it been open?
A couple of years.
Okay.
Yeah, they converted it from a different bar, an older bar, but yeah, they have a really cool outdoor area, as you can see. But yeah.
Well, we
is
might have
right
to
on Main Street.
coordinate because then next summer, if they want 200 motorcyclists to ride up, because we do a ride up to Lake Geneva. So
Yeah.
if they want to have us,
By all means.
You're gonna take a skim off the top.
no, we pay and tip well. We're
No, I know
that's
you
good.
should make it a racket though. Motorcycle club. You gotta come and I'll bring my crew, but I want a 10% kickback, something like that.
But that's a
Yeah.
cool idea and a cool experience. So
Yeah.
fun.
So yeah, that's tonight.
all right, well, how you top that?
No, I can't top that. I don't have any wild plans. I mean, we're supposed to get snow this weekend. Which
Yeah, I think
would be
Sunday maybe,
pretty
yeah.
interesting. But yeah, I don't have any like amazing plans. I wish I did.
Sometimes you need that though. Sometimes you need
Yeah,
a little,
it's been a lot. It's been a lot. So I think we're gonna.
You just chill, little Netflix and chill.
Yeah, but next week my 5-iron golf league starts. So
How does that work in the winter? I don't-
5-iron because it's like on the simulator.
Oh, I didn't
They
know
do,
that's
like-
that's what the simulator is called.
Yeah,
Oh,
well,
okay.
it's like the company that does it, like
Gotcha.
5-iron golf. It's in Lakeview,
Gotcha.
but they're all over. And so you go there and they run. Well, this is the transition. So it's the same team that did the bowling league.
Oh, okay.
But bowling is a little bit, it's hard to get the crew to commit to a late night bowling.
Sure.
Golf in your mid 30s, easy to get the commitment from the rest of the crew. So we're doing golf.
Are you off of the IR though, the injured reserve?
Are you making fun of me?
No, I'm asking if you're okay. I don't want you to make it worse.
Yes, the pain has subsided a little bit. While I was in San Diego, I had a wonderful Thai massage. I had a nice, very small Thai lady just step all over my back, which was fantastic.
with the
That's
bar.
awesome.
Yeah,
There's
with
a
the
place
bar.
here in Chicago that I go. They have the thing on the ceiling, and the lady walks. And I'll give you her number. She's great.
I would like that. I was a little concerned because
But she's a Midwestern sized lady, so it works, yeah. Because that's what you need. Like, no offense to small Thai ladies, but I need like a nice Polish woman to.
I had a little bit of a problem because I was in a place I'm not normally in, and I was looking for massage, and massage can go a lot of ways.
Sure.
And so I found this place. It had
Looking
great,
at you, Robert Kraft. No.
Yes. It had great reviews. It was close to the hotel. I was like, okay, this is perfect. I called. I set up an appointment, and then I got a text with an access code to the building, and I was like, oh no, this is one of those places. When I really was looking for a massage.
Right, you were looking for a legitimate place. You're in a stable, loving relationship. You're just looking for.
Well, that doesn't influence that sort of thing. These are that sort of thing is a non-committal thing. But I was looking for a real massage. But it ended up being a real massage, which was fantastic.
That's great.
Which was great.
That is great.
Yeah. So I feel better.
That is good.
Did the cupping?
Yeah.
Cupping's great.
Yeah.
I've done cupping, and it releases all the fascia and all the stuff, and
Great.
yeah, good for you.
Yeah, so I'm good. I'm ready for golf.
So
I'll probably take one swing and pull my back.
Yeah, like you should do some exercises, some PT.
Well,
and
that might
stretching.
be in the cards for this weekend.
There you go.
Go get some golf balls.
There you go.
Yeah.
There
so
you go.
That might be part of it.
Well, I was going to say it's like this is how you know like all the signs that your neighborhood is changing because next to my gym, so in like the same, you go into the entrance. So if you go to the left, it's my gym. And now if you go to the right, there's a new place and they have pickleball.
Oh, yeah.
It's like in my neighborhood though. And I'm like, it's over.
Oh, yeah. Oh, yeah. Tony from Mexico, Tony Rihan, big pickleball guy.
I've never played pickleball.
It's the best.
So they have a bunch of racket courts, but they have pickleball lessons.
Yeah.
So
Pickleball's fun.
But do you need lessons to play pickleball or?
I mean, it
you
depends.
you need to learn how the game works.
Yeah.
It's similar to tennis, but it's different enough to where you need to like actually learn the rules. But yeah, I mean, if you want to improve, then yeah.
Yeah.
I don't know.
Hey, if you want to play with the noobs, it's
Or just get a lesson from him. He's our resident pickleball.
Yeah, but no. But I'm very like nose up. Like I don't play with new people.
Have you seen like all the?
I need the competitive.
Have you seen those TikToks though, where they like are interviewing like orthopedic surgeons or like foot and ankle
they're
surgeons,
like,
and they're
"This is
like,
the
"What's the
greatest thing
one
ever."
thing you would never do?" And they're all like, "Play pickleball."
Yeah.
Like that scares me a little.
Yeah. Yeah.
Well, I mean, they've also said that tennis is one of the best sports you can play.
Because like cardio
Yeah.
and just like the exercise.
But maybe pickleball is just more violent on the limbs because you're in a smaller space.
Maybe.
Yeah.
Tennis, you have longer strides.
And it's
You go
quick.
place
Like
to
it's
place.
quick movement.
Yeah.
Lateral movements.
Yeah. I don't know. Maybe I'll give it a
I think
try.
you'll be fine.
It is
All right.
fun. It
Yeah,
is
we'll
fun.
see. We'll see what's doing. The last live event with Tom and Tony is kicking off
Yes.
today. So shout out to everyone who is trying to get to Austin or is making their way to the show right now. Please travel safely. But yeah, everyone got down there safely. We don't know who's coming back, but everyone got down there.
That's true.
So Liz and Jenny and Bat got down there safely. Tom's down there. Garrett, Brittany. I don't know if Beth went or not. She
No,
was here
Beth
late
went.
last night. Yeah, she was sick, under the weather.
Yeah.
But the most of the Tasty crew is down in Austin, and TP who lives there. So make sure you say hi to everybody and have a good show. So hopefully some lively trading. I'm not sure what the markets are doing right now, but
They're down a little bit. You got E-minis down 24, the NASDAQ down 135. Been a tough week.
yeah.
Been a little bit of a little, So been a little tough week. Should be good trading though.
Well, no
Tom
more
and Tony.
October. It's just sad November now.
Yeah, it's
Sad Vember.
sad, cold.
Yeah, Bitcoin futures almost below 100K.
Yeah, that too. They were below 100K just a moment ago.
Yeah. Can't keep their wings up.
Yeah, no.
Well, we have a great show for you today on this fantastic Friday. So we're going to get into a lot of that today. On the top of the 8 o'clock hour, we have Jamal in the house for the weekend stocks. He says, is AI a bubble? Oh, Mikey, how was broadcasting from the CBOE? I saw the show. It looked great. It sounded great. How was the energy from the floor?
It was electric. And we got lucky with the day yesterday where we actually had some market movement.
Yeah.
That created some chaos behind us.
Is it hard to not just be turning around and be like, what are you doing? What should I be doing right now? Like,
I mean, it definitely, there were a couple times where it was very loud. I could barely hear myself talk.
oh, wow.
So, yes. But, yeah, it was cool. It's awesome. They have a great setup there, and we're excited to do it going forward.
Yeah, and their own production team, shout out to them. They run all this stuff over for the Liz and Jenny show and now for you and Jamal. So every Thursday at 11 a.m.
That's right.
And if you missed yesterday's show, you can check it out on our website. So
That's right. Yep.
It's on the site somewhere. Don't ask me where. Options Trading's Concept Live.
Right.
But Jamal's going to be in for Weekend Stocks. That's at 8 o'clock. And then at 8:40, we have Fast Market. Mike and Nick are going to take viewer trades and take a look at that in Fast Market. Try to put on as many trades as possible. Obviously, a lot of things have been moving.
Oh, wake up there,
Hey.
sweetie pie.
Is it your mom?
No.
Your alarm?
I always just forget how early it is when we're doing this. This would normally be when I'm coming to work,
Okay, yeah.
getting out. But
Yeah, I got you. Wah, wah.
I know.
So fast market's going to be at 8:40. And then 9 o'clock, we have a market measures for you today. Safety. Be careful with probability of profit. What?
It's an interesting one.
Pop?
Yeah. Not that pop that you got. That
I know. I need that.
crisp
That good.
DC you got. That
Good. Uh-huh.
No, it's a discussion on probabilities and also like probability of touch and just understanding that pop is dynamic. There's,
Okay.
when you put something on that has a 70% probability of success, you should expect, there to be a high probability of that being a losing trade at some point within the duration of the trade. Like, just because it's a 70% pop doesn't mean that it's only 30% that you'll have, a losing position at some point during the duration.
Gotcha. That makes sense.
A little bit about like just the dynamics of probabilities and how things change for a trade throughout the duration. It's a good one.
And then at 9:20 today, we got live from the trade desk. Jason in the house. I love Jason.
He's the best.
Yeah, he's just an interesting person. He was a photojournalist and then like a very avid viewer of the Tasty show. And then he's like, "Can I come work here?" And then now he works on the trade desk.
We literally grew up across the street from each other.
Shut up.
Yeah.
Like, I used to party outside of his house. And I was seeing him driving. One of my friends lived across the street from him. They lived in a cul-de-sac.
Yeah.
And we would have like driveway parties.
Yeah.
We'd be on the driveway playing beer pong, whatever. And then we would see him like driving. He would be going.
Did he have long hair still then?
No.
Oh, okay.
Shortish hair.
Yeah.
But yeah. And then we started working here and we were like, the Spider-Man meme, like, didn't we go to high school together? Yeah.
Oh my goodness! Well,
Crazy.
talk about that at 9 o'clock. Well,
world.
Jason's going to be in from the trade desk and counting down all the top trending tickers over at Tasty Trade, and then we're taking phone calls, or if you want to drop us a question in the chat.
Yes.
Not now, calm down, cool your jets, chat. But at around 9:30. So if you have questions for Mike and Nick, we would love to hear from you. And if you are in the chat, we would love to hear from you. So that is our run of show for today. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. No leading story. Top story. Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's November the 7th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
It is Friday, and it's the first Friday of the month. There's supposed to be a jobs report, but there's no jobs report because
There are no jobs.
government shutdown. Yeah, government shutdown. So the data that did come out from Challenger Gray and Christmas yesterday was really bad, like the worst that's come out since like 2003. So I'm just putting that out there. But then it would have been fun for Tom and Bat to trade if there were like a jobs report today, because sometimes it moves the markets. It just makes
They
things.
got a nice little dippy do to trade.
Right? Yeah.
Tom will sell some in the hole here, no problem.
But that brings me to the first headline. JP Morgan says investors should buy any dips as the as the stock bull market rages on. JP Morgan.
Come on.
It's prime time for the dip buying crowd, JP Morgan said. Analysts said they recommend buying any dips until at least 2026. They state economic growth, strong earnings, and the easing of key headwinds are bullish. Ooh. What are your parameters or metrics for when you personally buy the dip, whether it's in an index or in a stock in your own account?
Size. That's the number one.
Size is
you don't have to go full bore on everything. To buying the dip doesn't mean like, oh yeah, now I'm going from cash to 100% all in right here.
Right.
That's not what buy the dip is. Buy the dip is getting a little bit of long delta into lower moves, even selling into higher moves sometimes.
Okay.
You got to do this dynamically. And with options, you can do it dynamically. But it's all about size. It's always small size. You can do diagonal spreads, poor man's covered calls. You could sell out of the money puts, but you're not going full you're always keeping cash on the sideline. So you can buy more if it goes lower, put new positions on, stay neutral, all that stuff.
How about for you, Mikey?
I look at implied volatility too. So we've gotten a couple of big moves to the downside, but it wasn't necessarily paired with a big spike in implied volatility. So when that's the case, I'm more inclined to buy the dip. But if we let's say the E-minis sell off 100 points today, and the volatility futures flatten out in terms of being in contango, which they are now. I think that's where I might wait to see if we get a bigger pullback before stepping in.
Okay.
But I think there's also a big difference between equities and indexes, like S&P 500, NASDAQ. Those are dips you can more confidently buy with historical evidence that they've recovered, where equities, maybe not. Maybe you reach a high and you never get back there.
Sure.
So I think there's always something to be said about that. But yeah, I think trading small and just looking at implied volatility's reaction to these moves too.
Yeah,
Interesting.
I saw a tweet somewhere. The Bank of America just got back to its 08 high.
Oh, I saw that tweet too. I was like, good job.
Sometimes things don't just go straight V bottom back up.
No, that's true. It's a wandering path and journey, maybe.
Yes.
I don't know. Let's get into, I have a bunch of earnings from last night. Jack Dorsey's Block, a.k.a. Square, a.k.a. XYZ, saw nearly $2 billion in Bitcoin revenue in Q3. That made up a third of its total revenues. That's pretty good. The company did report third quarter earnings of $461 million on revenue of $6.11 billion. Block grew gross profit 18% year over year. What's XYZ doing this morning?
Not having a good day today. It's down $10. That's well outside the expected move. You had about an $8 straddle yesterday, so not a good move.
Finally, something that's outside the expected move.
Yeah.
How are the markets in there?
They're all right.
Yeah.
They're tradable.
It's not one we traded, but
yeah, it brings you back to July, early July price points. So
might be a putty sale or something like that.
Oh, so now you guys are buying the dip.
I mean, it's easier to do into
Just kidding.
15% down move.
Right? Yeah, of course.
Yeah.
It's a smaller price stock, so we can do pretty much whatever we want.
I'll be looking at XYZ on the open.
Yeah.
There you go. Put it on your radar. Another earnings news, MP Materials, their quarterly loss widened after halting sales to Chinese customers. The quarterly loss for MP widened to $41.8 million or 24 cents per share. No revenue from rare earths concentrate sales this quarter, but the company does plan to produce 200 metric tons of dysprosium and terbium annually by 2026. Oh, not more terbium.
MP down about $3 here. It's part of the government portfolio.
Sure.
So you gotta be careful with this one. But volatility has really come out of there significantly.
2 weeks ago, it was trading at 100.
Yeah.
Now it's at 48.
Yeah.
Oh, no.
Big volatility there. So just be careful with your size if you're trading that one.
Yes.
In other news, Take-Two, TTWO, their earnings got slammed. Their earnings were actually really good. But they're like, hey guys, Grand Theft Auto 6 is getting delayed again. And then everyone just freaked out. But they're like, our numbers are good. And they're like, we don't care.
Yeah.
We want to rob strippers. I don't know. I've never played the game. I don't know. But
That's pretty accurate.
Okay. So, yeah, they trounced analyst estimates again for their fiscal second quarter. They earned and adjusted $1.46 a share on net bookings of $1.96 billion, but again was not enough. TTWO.
Yeah, the GTA 6. How long? It's been like 2 years now or something like that. Like it's been like a really long.
I thought you guys would know better. Yeah.
It's been a long time. Yeah.
It's been a long time. I
The
feel
can keeps getting kicked down the road.
What's the deal here?
it may have been like even like a COVID thing. Was it that far back?
I'm not
I
sure.
can look and see.
It's been a really long time.
Yeah.
But Yeah, stock is down $14 ish
Oh, wow.
to 238, but it's had, a monster rally, but
Yeah. In anticipation of this.
Yes.
Will you get this when it comes out? I mean, it's one of those
a
I got Battlefield because I just love that franchise, and
Yeah.
What do you even though I'm not a gamer anymore, I lost all.
Yeah, my hands are covered in rust. But
Oh, you used to be a pretty serious gamer.
yeah. But it's one of those things where it's like riding a bike. Like if you do it again, the first couple of games you're not going to be there, but then.
But every millennial
later,
deep down
you're
has
going.
that gamer in them.
Yeah.
I mean, but
Halo
I miss the Wii.
Yeah, but that was.
But I'm a girl.
No, yeah, that's not it. We're talking
First person shooter,
Halo,
Yeah.
the original Halo, that was
Halo 3. That
Halo
was
3.
I think I had Barbie's dream horse, and you got to pick the horse, and then you could ride it in a meadow.
I guess there's something for everyone. That's fine. That's not the gamer that I was really thinking of.
And I always did like to be Princess Peach in Mario Kart.
Oh,
Yeah.
yeah.
So.
I mean, Mario Kart's a classic.
Yeah.
Or Mario Party. Those are all classics.
Yeah, it's good. Anyway, so. Well, I'm sorry if I don't want to shoot people on my time off.
No, well,
Well,
it's okay.
Hey, Airbnb also reported their earnings. The shares did rise on a revenue beat and a stronger than expected forecast. Revenue increased 10% to $4.1 billion, according to the company. And for the fourth quarter, Airbnb says they expect to report revenue of $2.66 billion. They say people are cutting back on travel, but they are still finding ways to use the service and site. Airbnb.
125 right now.
Yep.
Well inside the expected move. $10 expected move, $5 up move. So should be a good one for anybody that traded it. I did not.
Okay.
I'm not big on the Airbnbs. I've kind of lost my.
I soured on them too.
I soured on them.
Where are you at with them, Mikey?
I'm in the same boat.
Yeah.
I'd rather just be in a hotel these days.
Yeah.
But I mean, the one exception is if you have a big group of people.
Sure.
Yeah.
That's the only exception, really.
Like a big group of people in a remote location.
Yeah.
Or
Yeah.
a not as dense location.
But I think you have to have a bad experience. We had an experience where I was with a group of people and they were cutting a cigar. They were cutting a cigar in the foyer, that's connected to the house. And we were just going out back to sit around a campfire.
Sure.
The dude cutting the cigar was the person who booked the Airbnb. They get a message saying, you can't smoke cigars in our house, as it's happening. It's so you're just sitting at your computer watching what's happening.
It's okay, big brother.
That's a little much.
Exactly. It's you can't. It's not going to happen in a hotel.
Yeah.
It's very odd.
That's.
So.
Whew, I just got
that's
the
not
chills. Where else are you looking at? Anyway.
Yeah.
All right. Hey, moving on. Opendoor is an AI company now. Says Opendoor. That's what the CEO says. The stock still fell after earnings. The online real estate and sometimes meme stock said they will achieve break-even adjusted net income on a 12-month go-forward basis. Yeah, they're we're leaning into AI. We're going at it with full velocity, said the CEO. What are you doing in Open?
Nothing.
Yeah, stock down to $5. I mean, I would. If you're bullish here, I think you just buy shares. I mean,
Sure.
It's one of those where you can't really get that spicy with your positioning here. It's a $5 stock, so you can buy shares, buy calls, something like that.
Yeah, but
You only go to
yesterday it was
zero.
higher than that. Yeah.
Yes. No, I'm saying, but you're not going to go here and sell puts.
No, you're right. You're right.
150% implied volatility, so nothing's going to. Your short premium isn't going to move here. If you do spreads, they're not going to move. You got to kind of just be directional.
Yeah. And with this one, I think normally we say you can buy leap call options if you want to too, but this implied volatility is so high that you're probably just better off with the shares.
Yeah.
If you look at these options, the 20 strike options are trading for $2.
Yeah.
Oh.
So it's if you get a move from 5 to 20, this is an interesting scenario where you're probably going to make a similar amount if you actually got that move with just owning the shares relative to the call. So $5 stock, we're just buying shares if we're bullish. That's pretty much it.
Okay. Moderna reported their earnings yesterday, and they are cutting costs as COVID vaccine sales decline. During the quarter, Moderna notched $1.28 billion in operating expenses, which was down 34% year over year. The stock was up yesterday when the news came out. In total, Moderna's sales came in at $1.02 billion, beating expectations of $880 million.
Moderna down like 30, 40 cents, trading at 24. I mean, it's pretty wild, this ride. When it was during COVID, what did it get to? Like 200?
Yeah.
Well, it was literally like, you know how you say the stocks are like, oh, they didn't cure cancer, but during COVID, like they literally
That's
like
a 450.
That's
That's pretty wild.
That's crazy.
That's like what
That's the ultimate short.
90% down move.
Yeah. The ultimate short is if you thought it would be like how it is today, where people are getting COVID, are still dealing with COVID, but obviously it's not like a pandemic situation anymore. Crazy move though.
Crazy. Did you guys get your flu shots?
No.
I gotta get mine. I think they have them in our office lobby. Like I think you just gotta go downstairs to the office. You say no.
I just say no.
No.
I get a flu shot every year. All right.
I'm a healthy boy. I'm not getting.
You're a healthy boy who makes questionable decisions, though.
I test my body. Regularly.
Push it to the limit.
Yes. But yeah. Nothing for me.
Okay.
Yeah, not for me.
All right. Well, you good luck out there. Hey, big news of the night is that Tesla shareholders approved Elon Musk's $1 trillion pay plan with over 75% in support. He actually did meet all of the metrics for his previous pay plan, which is being held up in legal limbo, which was a $55 billion payout. But this new payout could see him become the world's first trillionaire. But he has to reach for the most extreme tranches. He has to get Tesla to a market cap of $8 trillion.
Yeah.
Be so for real. So there's different tranches that get, so the first tranche gets paid out when Tesla hits a market cap of $2 trillion. So Tesla's currently at $1.54 trillion. So that's doable. And then it increases in increments of $500 billion up to $6.5 trillion of Tesla market cap. So.
Yeah. I mean, I think this makes sense. If you get to an $8 trillion market cap, all the shareholders are very happy with that sort of
Sure,
thing.
because it's never happened before.
Of course. I mean, when I asked my dad, like, did you ever think that there would be a company that would be worth $1 trillion when you were trading? And he was like, I don't even think I knew what $1 trillion was.
Right,
at that point.
right.
We'd like joke and say like Googleplex. Like that was like the infinite money. And now we have like a handful of $1 trillion companies. I mean, Nvidia at $5 trillion right now, in 10 years, why wouldn't Tesla be at 5 or 6 or 7?
Sure, using its AI products and its robots and its cars.
I don't see that being like so out of whack. But I saw that like the net present value of this, based on the current cash flows of the company and the value of the company is like somewhere around like 30 or 40 billion, which, sounds like a lot, but for a $2 trillion company with, somebody like Musk, it makes sense.
But there's still headwinds, though, tied to like his political leanings, his tweeting, his supporting of things.
Yeah, everything
like the
has
sales.
headwinds.
I'm just saying, like sales in Europe have fallen off of a cliff. And like, if you're gonna get that market cap, you need a global presence. You need to compete with China. And so it's just, I think the road ahead is hard. It's harder than it was.
Well, he doesn't get paid unless
Right. Yeah.
That's the incentive. I mean,
Yeah.
This is perfect. Better than just sinking $100 billion in his salary and saying, that's it. We're just going to burn that cash. This is all incentive based.
What's Tesla's stock doing after this?
It was
news?
up right after the news, after the close yesterday. I think it got up to like 455-ish or 460. It's currently at 441. It's had a really nice rally. I mean, it's been kind of chopping between 400, 450-ish since around the earnings announcement. But yeah, I mean, it's been strong for sure.
What's the IV in there?
31 IV ranks, so it does have relatively high implied volatility. But 400, mid 400 price stock, it's a tough one tough one to trade. You gotta be like defined risk. And, just
but
a tough one for everyone.
I think there's opportunities.
Yeah.
There's high enough implied volatility that even defined risk, like you can do a 100-point wide iron condor in like December, and it's
I'm adding it to my trade list.
viable.
I know that Jamal's probably going to talk about this when he comes in at the 8 o'clock hour, but the AI news this week, the tea has been crazy. First, you have Michael Burry with his little Palantir puts coming out, and then that sent the market, into a tailspin and panic. And then Deutsche Bank was like, yeah, we need to hedge all of our data center risk. And then OpenAI was like, yeah, we're going to come out at $1 trillion IPO. But then OpenAI was like, we want a promise of a federal backstop. It's like, we're too big to fail. And the people were like, you want a pre-guaranteed bailout when you have, and so it's been a crazy week. And then the OpenAI CFO, she was like, well, I didn't really know what the word meant and I used it wrong. I was like, girl, what are you doing?
What is you doing?
And then so now Trump's AI/crypto czar, that's a job description. But he says that there's not going to be a federal bailout for AI. His name's David Sachs. And what are your thoughts on just all of the AI shenanigans? Basically, it's just companies passing hundreds of billions of dollars back and forth between each other. But things are getting dicey.
Yeah, it's kind of a weird thing. Like for me, if a company's going to get bailed out, it's got to be a company like Boeing,
Sure.
the airlines, like everybody's using them. It has to keep operating.
Right. Like our steel companies.
Yeah.
American steel companies. Yeah. Something.
Exactly. But these companies that are going nuts trying to just be the first to market for the AI initiatives, I don't think there should be a bailout either. But yeah, I mean, when you look at Open, it's been very volatile. It was $1 3 months ago. Now it went all the way up to 11. Now we're sitting at 5. So certainly there is some realized volatility in Open.
You can't trade Open though.
No, that's Open AI. Yeah, Opendoor is certainly different.
Yeah.
I mean, this is there's obviously an infrastructure need here that is probably something that the government should address and should take ownership of. I mean, like if they can build more data centers and facilitate the power needs, I mean, this is probably a good thing. But yeah, a lot of this, the reason there's so much investment in this is because it has the potential to change a lot of things.
Sure.
And, when you think about the internet and the Googles and the Apples of the world, I think this is probably right in line with it.
Well, we will see what happens. Meta projected that 10% of its overall ad sales in 2024, which came out to around $16 billion, came from running online ads for scams and banned goods. That included fraudulent e-commerce and investment schemes, illegal online casinos, banned medical products, and other contraband. 16 billion. That is wild.
That's insane.
Yeah, I mean, Meta down 5 or 6 right now, but this is something not directly like this is very clearly like crappy Temu stuff that you see on Instagram where you buy it and it takes 4 months for you to get your shirt. That happened to my friend over there.
Oh no!
You still have that shirt, right?
Which one?
The one where you ordered it off Instagram and it took
those are 2 of my party shirts.
Yeah, it took 6 months for you to get that shirt.
Yeah.
Yeah, that's what this is.
Yeah.
But I worry about the interwebs and our parents. There are a lot of things that are very, scary.
That seem authentic, right?
That seem authentic. There's videos, there's voice, there's products, you got to be careful on the internet.
But even as us as a company, no one from tastylive is going to try to sell you a course. We don't want anyone's WhatsApp. I'm just saying, we get impersonated, right?
Exchanges. I mean, we get those emails and those chats all the time.
Right.
I'm talking
to TP.
Through WhatsApp, and he's asking me to send Bitcoin to Kazakhstan. And it's like,
I was like, girl, no.
Come on, guys.
No. Please don't. Yeah.
You gotta know, that this stuff exists. It's sad.
Right. But if you want to send me Ulta gift cards, that's okay.
Directly
Directly
to
to,
the
me.
office.
Right,
Yeah.
yes.
With your name on it.
Yes, Vanetta, yes. Anyway, could Marvell get a buyout bid? That's interesting. Marvell Technology, their stock saw a slight bump in early morning trading yesterday after a report indicated that SoftBank could consider buying the U.S. chip maker. The SoftBank made an overture to Marvell several months ago, but the two sides couldn't agree on terms. I think SoftBank also reported their earnings yesterday. I'm not sure what Marvell is doing. It's up small, maybe.
Yeah, it's trading at 91 now. It's actually $2 lower than where it closed yesterday, but it's kind of middle of its range. The high in the low 120s, and then the low in like the 70s. So it's trading at like 90ish and change. It hasn't really participated in like kind of the blow up of all the, and blow up I should say glow up
Glow
of all
up.
the chip stocks.
Yes.
So, yeah, maybe it's someone. Usually when you have these sort of announcements, the tradability of the stock becomes just nil. So we'll see what this looks like on the open.
In other news, speaking of opportunities, Microsoft stock is suffering its longest losing streak in years. Analysts say investors are rotating out of laggard big tech stocks, maybe like an Amazon or an Apple, in favor of momentum plays. But they may also be spooked by Microsoft's higher AI spending. What is the opportunity in Microsoft?
Microsoft below 500 for the first time in a little while.
Yeah. And this has been just like a straight line down. It was 550 a week and a half ago. Now we're sitting at 500. So, yeah, I mean, at the end of the day, it's still a Mag 7 stock. It's not going anywhere. I think it's one of the biggest opportunities on the board if you are bullish in general.
Okay.
For this market, just because implied volatility is in the 20s and you just had a 10% haircut in the stock price. So,
Yeah.
certainly opportunity. I actually have a couple of bullish positions on there.
Okay.
I've got the 530 call calendar where I'm long January and short December. And I put that on for $500. So that's how I'm playing it, just for a little bit of a reversal, and we'll see if we get it.
You've had good success trading Microsoft this year, based on your tweets.
Yeah.
I've seen. Yeah.
I'm sure Fast Market today will have some bullish positions in a Microsoft.
Yeah, but I said it
Nvidia.
first.
I know. I think people are looking at these stocks.
Yeah.
Like, okay, Microsoft at 550 was hard to get long, and now it's at 500. Maybe it's a little bit interesting.
I know, Nikki, you especially love these projections, companies set to make X amount by year, whatever. Well, Apple could make $133 billion a year on humanoid robots by 2040. That's according to Morgan Stanley. In a research report, the investment bank claims that Apple's nascent robotics work for like a small like home robot could be eventually worth upward of $133 billion per year or more. Robots. Everyone's getting into robot. I love this. I have favorite robots, actually, like brands of robots.
Really?
This is the new one. This one is Neo. This is the new home helper robot. He's, I think, 5'6", costs $20,000.
Short King.
I love Short King. It costs $20,000, but supposedly he can do tasks like empty the dishwasher and like carry like laundry.
Are you saving up for one of these right
and
now?
help you around the house? I like his little face.
Until he's
Do you
strangling
have like
you.
a special account, like where you like a couple bucks a week you put it?
Yeah, I squirrel it away
Yeah,
for
you
my robot money. Look,
Yeah.
What's your favorite?
my favorite robot?
design?
Pepper is my favorite robot. Is
Are these
the cute little
publicly
face.
traded companies?
I don't know if Pepper is a publicly traded company, but it's
Oh, yeah,
just the
Pepper.
cutest. Yeah, Pepper's a really
This
cute
guy.
robot. Then there's an industrial robot, Baxter. I really like because he has like a little face, but he's really more just like industrial arms. But I met Baxter once at a trade show, and I was so nervous.
Baxter looks like it could do some damage here.
Yeah.
Is that the dog one?
No, it's like a transformer.
Oh,
Yeah. The dog ones are good though. But yeah, I have favorite robots. But
There you go.
if Apple makes a robot, I will give them my money. What are you doing in Apple?
I actually got some short delta in Apple yesterday.
Okay.
My thinking being, you've seen kind of the down move in some of like the Microsofts, like down $50, $40 from the highs, 10% move. Nvidia is trading in the 180 handle. It's been quite some time since we saw that. Apple sitting at highs, was pretty strong yesterday. It was up like $1 yesterday. I was like, you know what? If we're going to continue lower, maybe there's a little bit of juice to squeeze from here versus something like a Microsoft that's already down, 10%. But
Okay. I see the insight there.
yeah.
Skipping a story here, President Trump has announced deals with Eli Lilly and Novo Nordisk to slash weight loss drug prices and to offer some Medicare coverage. The agreements will lower the prices on GLP-1 drugs on Medicare and Medicaid, and it will offer treatments directly to consumers at a discount on the Trump RX website, which is launching in January of 2026. The deals could see the popular weight loss drugs be offered for as low as $149 a month. It was sort of wild, though, during the press conference, the executive from Novo Nordisk passed out.
That was crazy.
And then Dr. Oz was like trying to help him. And then Trump's just standing at his desk. He's like, YOLO. And the press photo is just wild because it's just like chaos over here.
Yeah.
And I was like, what? What is
He had like
happening?
his legs up.
Yeah. It was like he literally, he just hit the floor. And I was like, don't lock your knees when you're standing, homie.
Yeah.
Things we could look at. We could look at Lilly here. We could look at Good RX. You could look at Novo Nordisk. I don't know. Look at XLV, the healthcare ETF. I don't know.
Yeah, Lilly's tough because it's a $1,000 product.
Sure.
NVO is $45.
Okay.
So a lot more palatable.
Okay.
But yeah, definitely some volatility there. NVO is sitting at the annual lows.
And Eli Lilly is at highs.
Yeah. So if anything, I would be scooping some NVO.
Yeah.
Yeah.
But I mean, $149 a month. I mean, that's pretty good.
Right?
Everyone gets skinny.
Yeah.
Seriously. Perfect.
Yeah. I just don't like the shot. I don't know.
Oh, you want a pill?
I want a pill.
Oh, okay.
I don't like the shots.
It's a small needle. My parents do it. My dad does it every
If you
week.
want to put him to sleep, just jam a needle in him.
I don't like.
You're squeamish about needles.
I don't like.
Yeah. Oh, poor baby.
Needle guy.
Peloton is recalling 833,000 more bikes over a seat post issue.
Yeah. What year is this?
The company received reports that the seat post broke and detached during use. Please be careful when you sit back down. What are you doing in Peloton?
It's trading at $7.
I know,
Actually
I
up on the day.
I haven't traded this in many moons. I was trading this when it was at like 60.
Oh, wow.
And it had bad earnings, dropped dramatically.
I know Katie got stuck in there and Peloton owed her a lot of money.
My fault.
That was your fault.
That was my fault.
You're like, my bad.
Yeah, I don't see a future for this company at all. No,
Wow.
I mean, there's just no. I get it, but it's not like it's not going to sweep the nation like it did.
Sure.
You're
Sure.
not big.
There's nothing they can do to change the way.
Yeah, that was like a lightning in a bottle moment,
Exactly.
kind of.
That was a special time.
Special time. Hey, skipping to the last story here. Interesting news in the sports arena. DraftKings is getting the bid to take over ESPN Sports. After ESPN, they signed a 10-year, $8 billion deal or $10 billion deal with Penn. And then they're like, no, we're canceling that. And then they're like, DraftKings, you're getting the call. But they'd only been in the deal for like a year and a half, 2 years. I do not know I don't understand ESPN. I don't understand the moves they're making. I don't understand what the company's doing, the direction they're going, why they're just making everyone angry. But ESPN announced they are going to partner with DraftKings to be the exclusive official sportsbook and odds provider. Both changes take effect in December.
DraftKings getting absolutely murdered over the last month. It's gone from the mid 40s. It's down probably 50-ish%. It's trading at $25.90 right now.
Wow.
This is one where it's gone from the mid 40s down to the mid 20s in the blink of an eye.
Yeah. 2 years ago, we were down at this level at 26.
Yeah.
Kind of crazy, but
I think they got some problems. I think the sport, you got all the insider betting, Chauncey Billups running freaking Cosa Nostra casinos in the background. You got,
Prediction markets.
Yeah, prediction markets are coming. The UFC stuff about rigged fights and whatnot. It's like, I don't know. This The prediction markets, obviously, I think that's kind of the biggest thing weighing on it. But the sports vibe right now is very
They pulled off a YouTube. Yeah,
there's just a lot of things happening in the sports world that are kind of just
Yeah.
Which is sad.
Don't like it.
Yeah, I don't like it. Then you have to watch a 10-7 freaking.
That was terrible. That was the worst game I've ever seen.
You burn your eyes watching that game on Thursday night, and you're like, okay.
What are we doing?
What are we doing?
This product is going down.
Hey, finally today for my video of the day, I like to find videos that I would like to call a trader taste test. See if you guys would eat it. And so, Mikey, this one is for you. This is a famous influencer. I like his food videos. But this is a viral sizzling cheeseburger in Tokyo, which I believe you are headed to very shortly.
As long as the flight stays active.
I think you should be okay. But Japan, always going next level. Watch this.
We're in Japan trying the viral sizzling cheeseburger. The process of this burger is insane. They pour in this Brie cheese bechamel, then he layers the burger on top of the sizzling cheese sauce. The guy took cheeseburger very literally with this one.
Look how hot that is.
Doctor on standby. Also, look at the lace on the actual patties too, and almost like a Japanese style brioche bun. I'm kind of in a mental pretzel right now. Like, I'm trying to formulate my thoughts, but this one is so new to me. I almost don't even know what to think right now. I'm like shocked with how much I'm enjoying this, because seeing this boil in front of me with a Brie cheese fondue, I was a little bit scared and slightly intimidated. But the flavor of the bechamel and the Brie cheeses, he said Parmesan and two others, is like actually really unique. And the
anyway, thank you, John. Would you eat this, Mikey?
Take that and just dunk that in. You get real American with it, and you just.
I was just telling Nick that I'm not really a big melted cheese person. Like, I'd rather have the cold sharp cheddar Gouda cheese.
Oh.
But this I would get down with.
Well, I will give you it's at the American Diner in Tokyo.
Yeah, you got to get some of that. That's right up my alley, right? Looks beautiful, amazing.
Nikki was all in.
Yeah,
I'm all in.
What's coming up next, boys?
We got confirm and send, a couple viewer emails, and then we're getting into the market with Jamal after that for this week in stock. So we're gonna take a quick little 90-second break. Come back with that confirm and send coming up next. We'll see you in a minute.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Mikey, we are back, my friend, and we got a couple confirm and send questions, but we're going to get to the market real quickly here. We'll just talk markets for a second. E-minis down 22. They've been chopping around this mark for the better part of the session here, between down 25 and down 15-ish. NASDAQ down 125. You got the Dow down 116, and the Russell, the weakest of the group, down 17. Oil catching a little bit of a bid. We're back to around the 60 handle, 59.94. You got volatility futures above 2060 here, up 75 cents. The VIX itself up to 2041, so a little bit of a bid in volatility here going into the morning session. Bonds down 10 ticks. They had a nice little rally off the lows yesterday. Gold and silver both a little bit higher here. Gold's back above 4,000. It's been very choppy around the 4,000 handle. Silver up 43 cents, outperforming gold a little bit here. And as we mentioned this morning, we did get a Bitcoin print below 99 or below 100,000. It was at 99.4 on the futures. Spot got down to 99.5 here, but we are hovering around the 100K mark. The weakness continues. They say markets don't bottom on Friday, so maybe that's in store for us today.
We will
more weakness.
We will see what the market giveth.
Yeah.
But yeah, interesting to see the continued downside moves here. You're seeing a lot of products that released earnings move to the downside. Not much bullish movement here. That's for sure.
Yes. Shall we get to it? Couple questions for confirm and send. Let's do it.
Let's do it.
See what the peeps got for us today.
Confirm and send. Does extrinsic value premium decay faster for out of the money, at the money, or in the money options? So, from a percentage standpoint, it's going to be out of the money and in the money options. So when you think about extrinsic value, if you think of extrinsic value as a bell curve, the at the money options are going to hold on to some level of extrinsic value the longest, because at the money options have the most uncertainty of whether the option will be in the money or out of the money at expiration. Out of the money options and in the money options, because in the money options have a similar representation of extrinsic value and certainty or uncertainty of being in the money or out of the money. Intrinsic value will still be in those in the money options, but extrinsic value will go to zero first in those out of the money and in the money options as that bell curve shrinks as you get closer to expiration. So at the money options will always hold on to extrinsic value the longest, and that's simply because of the uncertainty of whether that strike will be in the money.
The umbrella analogy.
The umbrella
again.
The collapsing umbrella analogy.
Did you use that for your whiteboard at one point? I think you did.
I did it. I did it in San Diego the previous weekend.
Yeah.
I was.
But the
walking
original
on stage like
whiteboard, right? You just do this.
Yeah. It's a collapsing umbrella of extrinsic value. That's all. That just follows the stock price.
An absolute classic.
That's all it is.
Well said, Michael.
Thank you.
Next one, please. How do you use individual strike implied volatility in trading? Is there an IVR type metric for that I can use? It's an interesting one. So with per strike implied volatility, it's one of those things that I think is good to know and good to understand, but it isn't something that I hyper focus on. So volatility on a per strike basis can have one of two kind of shapes to it. So it can be kind of an inverted umbrella where you have a smile.
Yeah.
So, at the money options have lower implied volatility relative to the out of the money options, and it goes up in a smile fashion. Or you can have a smirk. So typically when you have a skew, it'll smirk to that side. So you'll have higher implied volatility on those options versus lower implied volatility on the skewed side. So the skewed side holds value further out of the money. The non-skewed side has higher volatility out of the money because those options get very, very cheap. And really what it comes down to is the value change of those options. A 5-cent option has really high implied volatility, and that's because if it goes from 5 cents to 6 cents, that's a 20% increase in the options price. It's a big increase. That same penny move for an at-the-money option that's trading at $5 and it goes up to $5.01, that's not very volatile from a value change. And so that's really what per strike volatility is telling you, and it's an intuitive look. And so for most trading and most traders, I think it's just something that you should understand that, the P&L volatility of tail type options is going to be much wider versus at the money options that are going to hold their value, like your umbrella analogy. So I think overall, it's a good thing to understand. It's not something I hyper focus on. And no, there's not an IVR for specific per strike volatility. And I don't think I think if we had something like that, it's way too deep in the weeds.
Yeah. Yep. Cool. I try and keep my portfolio delta neutral. My challenge has been in deciding just what exactly neutral means. Should I literally be aiming for 0, or is there a range you would consider as being neutral? I think it's just that. Having exact 0 delta means you are on the platform every day, adjusting every minute. Like it's not practical. So we say a range. So it depends on your account size. The
risk tolerance,
and really, if you just think of like plus minus 1%, I think is very neutral. So if you have a $10,000 account, plus minus 1% is plus minus 100 deltas in SPY beta weighted deltas. If you have a $100,000 account, 1% is 1,000 deltas. So just keeping it percentage weighted, I think, will be helpful. But yeah, anywhere that's within 1% of your account size in delta, from a macro perspective, like S&P 500 beta weighted delta is going to be pretty neutral.
Yeah, I think the easiest way to think about just capital allocation is what your positions are versus just being cash secured. So, 100 shares of SPY, we'll just call it $60,000 just to make a round number. If you had a $120,000 account, if you were just buying the market in cash, be 200 shares of stock. So if you're trading at a $100,000 account and you have 200 deltas in either direction, you're basically cash secured to your cash value. Now, with options, you get leverage. So, we want to be a multiple of that, 2, 3, 4x that cash secured, because we're not afraid of the market going to 0. That's not like our outcome matrix here. And so I think that's kind of a way that you can quantify total delta. And you can skew that to your own risk tolerance. If you're more risk averse, you go to lesser deltas. If you're okay with risk, you go to higher deltas. Last one, please. Do you have a target number of trades you aim to make weekly in order to generate enough occurrences? A good question. What do you think, Mikey?
I don't, because with a smaller account size, you can't really go nuts with occurrences. But I think it's also important to remember that there's 250 some odd trading days in a year, and even if you're placing one trade a day or a couple trades a week, that's still going to add up to a lot of trading over the course of a year. So the number of occurrences, you'll get there over time. Whether you get there sooner or later really depends on your account size and your ability to place trades. But yeah, I think being patient and picking spots more intelligently is, I'm going to favor that more than just throwing on as many trades as I can to get to a certain number of occurrences where I might be throwing on bad trades that I don't love. I'd rather not do that. I'd rather wait for trades I really like to get to that number of occurrences over time.
Yes, and I think a lot of people get caught up with number of occurrences being like new trades. This is something that I talk about in the whiteboard series that is now over. We just had our last one.
It's crazy.
But you have to think about all the adjustments are occurrences, and those play into the probabilities as well. Like if you roll up a put and that put expires out of the money, that's 2 puts, trades that you have taken extrinsic value out of. So when you're rolling and managing a position, those are all adding to your occurrences over time. It's not just simply opening trades as occurrences. It's all of the management and adjustments and scalps or, like that all goes into it. It's not just the opening trades.
Mm-hmm.
Good stuff. I just sold out the puts in the bonds at 116 here. It's the spot we've been trading at for the last couple sessions here with kind of being the lower spot. So I sold a put there, 26 ticks. I've been scalping out of some NASDAQ futures here. I might buy them here around 25.75 has been where I've been trading them, 25.75, 78, buying the dip. Doing my part, Mikey. Doing my part.
That's all you can do.
I'm trying.
That's all you can do.
Very good. We're going to take a quick little 90-second break and come back. We got Jamal for this week in stocks. Then we got the opening bell. So we got some, and then trade ideas, fast market. Should be fun. So stick around for that. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a moment.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. Oh, we got it. We get it.
Mikey, we are back, my friend, and E-minis trading down 24. You got the NASDAQ down 125, the Dow down 136, and the Russell down 16. Volatility popping, oil up a little bit, bonds getting killed, gold and silver both rallying, Bitcoin hovering at 100K. Been a scary week. Is there anything good in store for us here, Jamal? Can you quell our fears a little bit for us?
Well, maybe if the Bears win again this weekend, that will be like something that'll be good in store for us on that front. I mean, I hope that's what you were talking about. But outside of that, in this market, I'm not sure.
Who do we got this weekend?
I actually don't know. Doesn't matter anymore, guys.
Doesn't matter.
New York. We got the Giants at home.
Oh, we got Jackson Dart. Oh, okay. Jackson Dart. I like Jackson Dart, man.
He lost his mojo without Scat. It's not the same.
The scat man was a sad.
Just the frat boy energy that they had together, just banging heads against each other just all day long.
It makes your life a lot easier when you have a check down back that just rolls through people.
Yeah.
So.
No, right. I know, right.
But yeah, hopefully we can.
Well, then that's good. That's good for us then. That's good for us then, isn't it?
Yeah. It is. It is indeed.
You think? Yeah,
we just got to double Wan'Dale Robinson and hope for the best.
Yeah, the Swiss cheese that we have at cornerback right now.
Yeah.
Needs to.
We almost got Flacco'd. That was very scary.
Dude,
shout out to 41-year-old Flacco for 470 yards. I mean, I have pains rolling out of bed, and I don't get whacked by big 25-year-old dudes all day long. So good for him, you know.
Good for you, man.
I'm sore rolling out of bed. I sit in a freaking chair all day long. That guy's 41 and he's getting, hit by 300-pound 25-year-olds all day long. Athletic. Not me. Beautiful.
Not me.
No, not you. Yeah. Not you. Yeah, it's been a while. It's been an interesting week, man. I mean, obviously, this is the second week in a row for the S&P 500 being down. It's been a little weak. And honestly, I mean, let's be real. We kind of needed it. I mean, markets were getting a little carried away. Every day you came in, there was a new deal, some AI deal. So-and-so was passing money to this person, who's passing money to this person, or OpenAI or Meta or Oracle or AMD. And to be honest, if you've noticed, you really haven't heard that much this week. Yet we're still kind of down. But what you have heard is a huge chorus of, is AI a bubble, right? All of a sudden, that news is popping up as every earnings we get seems to be, for whatever reason, even if they beat, the stocks have been weak. We noticed that trend starting last week, and it's carried over into this week as well. And I think that's been the theme of the week, really. All of a sudden, everybody's like a little bit nervous, a little bit skittish. We see this when we get to highs. And I would say this pullback that we've had has been a needed pullback, a pullback and not a correction yet. I think until we get to corrective territory, we don't have to worry about things. But you mentioned VIX. I mean, it's climbing up there. It's at 20 now, right? At least the futures are. I can't remember exactly where the index is. You look at the futures, there's only about 30 cents difference between the front 2 months. That roll market's only 30 cents. So something to keep an eye on here. If we keep sliding down today, I think maybe that gets closer to being flat ahead of a weekend. And nobody wants to hold anything to a weekend after a week like this.
I said that this morning, the old adage that markets don't bottom on Friday. Maybe we get a little bit of a pullback or continued pullback today. It's certainly looking like that. Volatility, I think, keying in on volatility and where it's at right now. We haven't had the explosion in volatility. I feel like the pain underneath the surface has been a lot worse than what the indices and volatility is kind of telling you. We were talking about Microsoft as like one of the names where you got a 10-15% pullback in a week. And that's a lot bigger than what you're seeing in the markets, 2 or 3% from all-time highs. So, that's kind of, I think that's a good sign, given that that's kind of been the move that you've seen to highs, right? It's been kind of a dispersion trade where you're having these huge moves underneath the surface to the upside in your NVIDIAs and your Microsofts and, single name equities. And the the market has kind of grinded higher for the most part. 1% moves up, and then you have these like 5% moves in NVIDIA. Like that's kind of the dispersion that we're seeing to the downside as well, which, in hindsight obviously makes sense.
Yeah, I mean, the trade that I've been doing a little bit here and there is exactly those big names. I mean, look at, you mentioned Microsoft, nice little pullback there. Look at Meta. I mean, look, everybody was clamoring over themselves. I don't know how long ago was it 3 weeks ago? I want to say a month, but it's probably only 3 weeks ago that it's at the price that it is now, and people were clamoring over themselves to get it. And now all of a sudden, people don't seem to want it. But the trade for me has been going out to Jan, getting long. And then being short D's on some of these different names, just in case this pullback lasts a little longer than we all think.
Give yourself a little bit more time and play into the upside volatility. Let things kind of churn a little bit at the lows here.
Yeah, I think
exactly.
Meta and Microsoft are two I've got my eye on. I'm more worried about Meta than Microsoft though, because Meta's got some issues. I mean,
that's a correction.
Oh yeah,
that's bear market. Meta's a bear market.
That's a gap down after earnings with no green bars. I mean, yesterday was I wouldn't even call that a green bar.
No.
But you're seeing some big red bars here, and it's down another 10 points pre-market.
Yeah, some pain there.
And Palantir, I mean, even faster, actually. I mean, at least some of these, they waited a week or so to fall the way they did after earnings. Palantir was immediate, basically.
Mm-hmm. Yeah. But, you got to put it into context, too. It's been kind of chopping in the 170 to 75 range for most of, like, the trade from August till now. And when you look at, longer time frames, these things are still, it's not like they're giving up months of price action. It's days and weeks. So, there's you gotta put that into perspective a little bit. Yeah, we got somebody in the YouTube chat sold some 175 calls and Palantir. It's a nice little trade. It should be profitable this morning here on the weeklies with this trading at 171. Speaking of, do you put any weight into the Michael Burry portfolio allocation? The context of it just boggles my mind. The way the media covers it is just so misleading. But does that matter to you?
Not at all. Not at all. First of all, that's what he's supposed to do. He's supposed to go out and try and make that type of trade. The only reason, obviously, it's news is because this is the dude who predicted the crash in 08, right? Like, to some degree. I mean, but that was a whole lot different. Obviously, he saw something that a lot of people, from what I remember, he saw something a lot of people didn't see, like the whole mortgage-backed securities and all that other stuff. Like, not the few other people saw that, but not as many people did. I don't put any credence into that. The same as, it's like some of these CEOs this week, a couple of CEOs, I think it was from Morgan Stanley and maybe another, and Goldman, I think, came out and said, we're going to have a deep correction soon. Somewhere between 6 months and 2 years. Well, no shit. I can tell you that. I mean, come on, man. Like, how is that news?
I agree. Vanetta always tees me up and says, gives us these news of projected revenues or whatever in 2035. And I'm like, that is, the meteor could hit by then, right? Like, don't we have possible alien spacecrafts passing through the around the sun right now? Like, we could all be gone.
I was joking with my friends about this. I'm like, it all started with the NBA betting scandal that trickled into the UFC betting scandal that layers into the UFO alien release, and it's just all coming. We're all coming to a head at the same time with all these different avenues. But yeah, this could be the end. You never know.
What do you think the market does if we do have if Roswell all of a sudden says we actually have aliens and they start showing? What do you think happens to the market?
I think we just rip higher. All the
I know, right?
all the space travel companies just moon everything's got.
Oh my God.
Then Microsoft and Apple and they'll all get involved and they'll say we will lead the charge to find these.
We've
aliens.
actually been speaking to the aliens for the last year.
How do you speak to them? You need these glasses powered by Meta.
OpenAI
you know
partners
you know how many
with the
articles there
aliens.
would be? You know how many articles there would be about certain stocks to buy based on the alien land?
Yeah. No, OpenAI would partner with them for $100 billion. That would be that's the next one. OpenAI getting $100 billion investment from the aliens coming from the meteor.
Yeah. I don't see how it goes. I don't see how the market goes down from that. It's got to go up, right?
Oh my God.
I think so.
So
the last other thing I've been watching is the dollar. Dollar's had a strong week for those who haven't noticed. And it's done varying things. I mean, early in this week, we saw the dollar go up and markets dropped, Bitcoin dropped, gold dropped. Kind of made sense. Then we also saw a time this week yesterday actually, where all three of those were down and the dollar was down. So I don't know what the heck is going on there. But point being, dollar did have a move this week. It actually touched par. It did get rejected there. We'll see if it actually can punch through in a meaningful way at some point. But that's definitely been something to watch. And we've seen, obviously, Bitcoin's been weak. We saw it hanging around that 108, 107 to 110 level, finally broke down to 100. It's at a level again. Gold still kind of running in place at 4K. So I think those three things, dollar, gold, Bitcoin, have been fascinating to watch and see. We'll see what they give us for the next week here.
For sure, the dollar has been strong, giving it up the last like 2 sessions or so here, but it's certainly been strong. I've been leaning long dollar into that move, took a lot of that off. I've kind of flipped the books a little bit, so maybe a little. I hope we have a little bit of dollar weakness via my positions, my little baby FX position.
I mean, there's got to be, but I need to talk to Glenn here because I mean, I'm down in all 3 positions, and 2 of the positions have offsetting U.S. dollar exposure. So one of them I'm long the dollar franc, and I'm also long the Aussie dollar, which is technically short the U.S. dollar, but they're both down.
Well, Glenn's out in Austin for the event, so you'll have to wait until Monday to give him a little spanking.
Yeah.
For his bad takes.
But yeah, these positions are so small. We just hold them until they work. That's the strategy.
I hear you.
It's kind of nice to have positions like that we just hold. We don't have to worry about them.
Yeah.
All right. So what do we think for today, Jamal? More selling, little bounce.
What's the expected move today? What's the expected move for today?
So E-minis, you got another 43 points expected move. That puts you at like 66.80 or 67.60.
So we're talking about range, higher or lower?
Higher, lower, inside.
I'm going to say higher.
Higher. There we go. I like that. What do you think, Mikey?
I think we got to go higher.
I think we get a little bit of a bounce too. That's all 3 on one side. Fade that for sure. You can't fade the consensus is what I would say, but I agree with you. Mr. Jamal, thank you for joining us here in the morning. We're going to take a quick little 90-second break so we can jump out of here and get back for the opening bell. Then we got Fast Market coming after that, so you want to stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live. Thank you, Jamal.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, my friend, we are back for the opening bell here in just a minute, just to give a quick little market update here. E-mini S&P 500 futures down 25, 67, 22. You got the NASDAQ down 140, the Dow down 100, and the Russell down 17. The Russell and the NASDAQ, the weakest of the group today. Oil catching a little bit of a bid. /CL 59.88. You have volatility futures at 20.69, up 84 cents. You got the VIX itself up $1 and change, 20.61. Bonds down 11 ticks. Gold up $18. Silver up 51 cents. Bitcoin hovering out around the 100,000 mark. Ethereum at the 3,200 mark. Definitely been some selling here in the morning. Looking to hopefully catch a little bit of a bid to get out of some of these positions. We'll buy the dip. I've been scalping out of the micro NASDAQ. I sold a put in the bonds here around at the 116 handle. So we'll see what happens here on the open.
Ding, ding, ding.
There's the bell. The machines are on.
Yeah. Someone in the YouTube chat has a Palantir position. They've got 200 shares and then 2 short calls at 175.
The weeklies?
For next Friday.
Next Friday.
So they're asking what to do. So Palantir opening at 175. Those options are $600. I think if you're comfortable with the 200 shares, and you're
if they sold this, do you know when they sold this?
They must have been when it was in the money.
Yeah,
because it was $1,500 for each of these calls. So if you want to keep the trade on, I think you take this opportunity and roll. You buy back the 7-day. And you roll to December, you could roll to the December 185, which is where the cost basis on the shares are. You pick up another $350 per contract. You could move to the 185 or the 190. I think that's where I would go if you're comfortable with this upside bias. Alternatively, I might cut this down to 100 shares and just get rid of 100 shares in the short call, buy that, close that out, and keep the 100 shares with 1 short call.
If the size needs to be.
If the size needs to be adjusted. But either way, I think the move is buying back the short call expiring for Friday, roll it out to December and up 10 strikes and still pick up $360, which is what that credit is right now.
Yeah, if you right click on the option, you can view the option in chart, which is just the option price here. So, that's a home run sale. Obviously, you own the shares, which is problematic with where the price is right now. The stock trading at 175 and change. You've lost some money there, but all else being equal, you want to be long the shares. You had a nice short-term hedge here, about as good as it gets. So I think if you want to be long the shares, your hedge did exactly what you needed it to do.
Yeah.
And taking that off gives you $1,500 in capital that you can put to something else. As a position here, you could roll the call and buy a put and collar the position. That's another kind of thing that you could do here.
Yeah, the offensive roll with covered calls is to roll the call up and out to the next month and do that for a credit. and high IV products allow you to move it in a really big way. Like looking at this, like you can roll this up 10 points going from the 7-day to the 42-day, and you still pick up $400 in premium. If you wanted to be even more offensive with the shares, you could roll it up to the 190 and pick up $2. But I think given the price point of the stock now, I would just go straight to your cost basis on the shares, pick up more premium and neutralize it a little bit. But yeah, the world is your oyster with the stock at 175. It's easier to make that adjustment when the stock is not, or when the strike is not in the money.
Yes.
So I think you got to act pretty soon here, especially with that 7-day option expiring.
Yes.
Next Friday.
E-minis near the lows, down 38 here. You got the NASDAQ down 175, about another one of the little micro NASDAQ contracts going to play it to kind of stay above this 25,000 mark. Anything else kind of sticking out to you in your positions here? I am looking at Microsoft, which is up a buck and change here. I got a snowflake call spread. Maybe I take off here. I got a couple downside put diagonals that are kind of coming into play here.
Yeah,
bought the dip in Costco. That one's looking. Do I close that for $200? You got probably take
$9.29. Yeah, I have an SPX 0-day iron condor that I put on yesterday. That's slightly in the money right now. The put side is 66.90, 66.85. So we're right there. I just need the market to rally 5 points, 10 points.
Where are you at?
66.90, 66.85 in SPX.
I think I'm going to do the 66.50, 66.40 short put spread.
Just for today?
Yeah.
Yeah, I like that.
I'm going to see where I can get filled here.
I like that.
As a way to say, you know what?
You know what?
Come get me.
It's
230. Come on, Mr. Market. I see you.
But yeah, I think the big Microsoft's up.
Yeah, I told you. Yeah. It's bucking the trend a little bit. Let's see if Apple's down. Apple down $2. I also got that IBM position yesterday. Short a little IBM.
IBM. What a company.
It's that thing. That's been quite the move.
DraftKings had earnings yesterday. They're down $1.
Yes.
Down to 2-year, 3-year lows. But yeah, I think Meta's interesting, but I'm going to wait until we catch a bid here. Because I do want to play this to the upside, but I have a calendar spread, which is a really small trade in here. But if I'm trying to play something more substantial, I want to see a kind of a flattening out here.
Some of the biggest movers today when we go to the S&P 100 list, this is the one that I like to look at here. To the downside, AMD down $8 and change. You got Tesla down 15 as well. Cat, which had a $70 up move on earnings, it's down as well. You got John Deere as well taking it on the chin. Oracle has been a pig. It's back to basically where it was when it announced the $300 billion gazillion dollar investment, whatever that was. Eli Lilly down a handful. On the upside, you have Intel. I know there was like some Tesla Intel sort of partnership news on the docket yesterday. You got Coca-Cola in there. I don't know if that's one that's you can hide in all that much. McDonald's is in there. Starbucks catching a little bit of a bounce. Netflix catching a little bit of a bounce, up $6. When we go to the high option volume, just to give you an idea of some of the ones that are moving here, Opendoor, which had earnings in there. You got your SMR in there. XYZ. Oh, that's my Costco call diagonal. I just closed out for a couple $100 there. Costco must be having a nice little bounce because I put that. Yeah, so it rallied about $3 because I put that well above the mid price here. Took some profits there. MicroStrategy, another one that's getting killed, 220 there with Bitcoin now below the 100,000 mark. On the upside, you have a firm. I got short that into earnings. I cannot believe that stock is up today. Peloton, you have volatility futures. You got DoorDash is up a little bit. So it's it seems like not looking like a great market here.
Yeah, MicroStrategy getting killed. That's interesting.
Murdered. Absolutely murdered.
After their moonshot.
Yes.
To 500. But yeah, MicroStrategy down 7%, Bitcoin down 1%. So a little disconnect there. Bitcoin futures under 100K. E-mini selling off down 50. Is it all over? Are the aliens here?
It's certainly looks like that. My NASDAQ position not looking pretty here.
Yeah.
Apple's selling off a little bit. Oh my God, Bloom Energy. There we go. I needed that too. I'm addicted to trading this thing. It's just one time I'm going to get my face ripped off here, but I'm going to see if I can close out of this call ratio I have in here.
Some people calling out ETH positions. Do you have one?
Oh, I'm long stock in ETH and IBIT.
There you go.
And I feel the pain.
Someone in the chat, is assignment mandatory if my short put expires in the money? Considering risking assignment and selling calls against it because my short put's barely in the money. No, I mean, it can be assigned if it's teetering, but it could be in the money at the close and then not get assigned with after hours movement. So if you want to avoid the assignment possibility, just roll the put out in time, add some extrinsic value to it.
Yeah.
And that will help you out. But if you want the shares, then yeah, I would wait to get the shares officially and then sell a call. Because if you sell a call now, assuming your short put is assigned and then the market rips higher, you might end up with 100 short shares of stock on Monday. So wait till your put is actually assigned if you're trying to convert it to a covered call.
Yeah. E-minis at the low of the session below 6,700. We're down 54 points here. Not looking pretty here.
Where's the buy the dip crew? Where are you?
They're gone. They're gone. They've forsaken us. We're the only ones left, Mikey.
Yeah, Volatility's futures are flat here. We have a slight backwardation in the X contract now. 10 cents, which isn't that much, but still notable.
Yeah.
So yeah, we're in the 21 handle all the way through the F 2026 contract. So things are looking a little hairy here.
Yeah, they're not looking good today.
The VIX up 10%, up 2 points, up to 21.5. And yeah, a lot of two-sided action with some disconnect. Starbucks somehow rallying.
Yeah, it seems like they're coming for the pigs. I mean, Starbucks hasn't caught a uptick in forever. I mean, it's been trading around 80 for the last year or so, it seems like.
Yeah, people in the chat looking at Meta. Time to get long Meta. Not for me. I need to see some kind of buying action here. Like this is a big liquidation.
Yeah, that's a tough one.
Yeah.
Yeah. I have some long delta there. Put ratio and or put broken wing butterfly, and I also have a call diagonal spread there. So that one's not looking good here.
Yeah, I've just got the calendar spread, but again, if we catch a little a bottom here, we see some flattening out of this price chart, I'll throw on a diagonal spread, get some more delta there.
Trying to do something with this BE position, but the markets stink here.
Is this the first backwardation we've noticed this week? Yeah, I think we tinkered into it last week, but you're not going to see big backwardation unless this sell-off really picks up. If the E-minis are somehow down 100 points today, you'll see a more sizable backwardation for sure. What were you just filled on?
I just got filled on my BE call ratio. I put on another little long NASDAQ here. Volatility expanding pretty significantly, so that doesn't make me feel good. But you got a nice round number there, 25 and change. You got the E-minis right around 2,700. You know, unless you're betting for big one to the downside. I think it's an interesting spot here.
Micron down 8. This thing's been flying around like crazy.
That stock, I mean, that was
it's the new NVIDIA.
It really is. It's part of that basket. Speaking of, where's NVIDIA at? 182 and change.
Yeah, that's crazy.
I mean, we were at 210. That's the big question. It's like you talk about, corrections. That's a 10% move to the downside in a week or two. Now, how do you psychologically say, you know what, that's where I get in? Because you kind of shied away from Meta, that's a 20% down move. You're like, I gotta see this stop. That's the hardest part about it.
Yeah, I think I'd rather be long NVIDIA than Meta.
Fair.
But I mean, we've seen we've seen a 5% move in the E-minis in the highs.
E-minis down 50, bouncing a tiny bit. NASDAQ bouncing a little bit here, up about 20 or 30 handles from there. Russell looking weak. Russell, NASDAQ looking weak here. Oil catching a little bit of a bid, which helps a little bit. Gold and silver really kind of just chopping around here. Beautiful. You want to take a quick little 90-second break and come back and see what the peeps got for some trade ideas?
Yeah.
I'm ready to sling them.
I mean,
volatility's high. If you've been waiting for a dip and you've been cash on the sidelines, maybe you look at some diagonal spreads, put spreads, naked puts, stuff like that. I mean, get a little bit of long delta here. Who knows? Cool. Let's take a quick little 90-second break. We're going to come back with fast market trade ideas submitted by you, the viewer. And if you got more trade ideas, you can put them in the chat. Mikey's going to be calling those out throughout the rest of the session. So we're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a moment.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, my friend, we are back, and we've got fast market trades. You ready for these?
I am.
Play some music for us. Fast market. E-mini S&P 500 futures up are down 48. We're hovering around 6,700. You got the NASDAQ down 280. Volatility 2115. Volatility is a little bit spooky right now. Volatility, spooky season has continued into this week.
Yeah. Little spooky.
Not like that.
Little spooky.
Little spooky.
Yeah. If you're a bull.
You guys didn't like that one? Thought that was good.
If you're a bull, it's a little spooky out there.
It is a little spooky.
But yes, we are going to lean on our friends submitting trade ideas for fast market.
If you got some trade ideas, you can put them in the chat here.
Indeed. But yeah, it's been a good ride for us this year with fast market trades.
Yes.
So let's see what the peeps got here.
Yeah, let's do it.
Okay. IBM. Ooh, from Carlos in Tastyless Country.
Must be up north, Carlos. You're sorry.
Sell a December 295 put for $2. $2 for stock at 5.6% below current price if exercised. Exercised, like, what's that? The girl?
Exorcism?
There you go. Yeah. Not bad.
I'm sorry, Carlos. I have some short delta here. I cannot do this. Volatility is relatively high, so you got an IV rank at 22 and has been picking up a little bit today, and you got a little bit of a down move. So you're getting a better price if you're looking at it now. The December 295.
I mean, yeah, it's $6 now.
Yeah.
So a lot has changed from yesterday's high, but yeah, I think this one's a little expensive for me, anyways.
Yeah.
I think you could do a put spread here. I mean, a similar $2, $3 put is the 280 strike now. So that's significantly lower.
I cannot participate, unfortunately, but thank you for bringing us to us. Are you going to get in? You guys sell a little put spread?
Yeah, I'll do a little small put spread. I'll do the 285, 280 for $1.20.
Support the P.
Actually, you know what? This bid-ask spread's a little wide, so I'll bump this up. Let's see if I get $1.40 out of this thing.
There you
go. $1.40, I'll leave it at. See if we get a little sell-off and get filled. But yeah, I'll be in sympathy for you.
Beautiful.
What else we got?
Next one, please. Marvell. 100 strike call for next Friday with a Monday 570 SPY put. And this is in it to win it on Reddit. My man, thank you for your continued support. Marvell trading at 90 right now. So you're trying to play this to 100. Okay, I can get on board with that. Let's see. So you got earnings coming up the 28th. So we'll play this into the earnings expiration. These markets stink in that expiration, so I'm not going to do that. I'm going to do. So you want to play for 100 print here. I will do the 90-100 January D's call diagonal spread. It trades at got a mid price that's about 537, but these markets do not look great. So I'm going to start this well below the mid price and work my way up here. 525. So this is sort of like a poor man's covered call-ish, a little bit heavier delta because you're right at the money with the long option. Okay, 530. So that one I'll post that one to the follow page here. The 570 put in SPY, that has got, and you're doing that with a Monday 570 put.
Monday.
So you're trying to buy like, you're trying to scalp this one. This goes to our, or maybe it's a 670 put. You're doing
maybe 670
as like a synthetic short stock.
Yeah.
Okay.
Because the 570s are zero bid.
Yeah, you at a penny.
Yeah.
Okay, so you want to get short into Monday. How would you do this? Would you just do, you know what I'm going to do? I'm going to do just a 50-50 shot for you. So we're going to do just an at the money long put spread. We'll do this $5 wide. So I'll do the 668, 662, 63, 663. So that's $5 wide. I'm going to mark this at 220-ish. I'm going to try and get filled like 223-ish.
Yeah, I think if you're playing for a Monday sell-off, I think you could also do like a short-term, long the 7-day, short the 3-day.
Mm-hmm.
Like the long 7-day 665 put, and then short the 3-day 658 put for $5 even. Your trade to the upside in Marvell was $5, so you could just do a $5 here, $5 there type trade.
And then if you get no movement in the market and Marvell, you lose on both.
Yeah.
That would stink. But I'm with you. I took a little short delta for you, and Marvell call diagonal spread playing for that 100 mark.
Lovely.
So we'll see if that plays out there.
Cool.
Beautiful. So we're 2 for 2. Did you get filled on the IBM?
Not yet.
All right.
Not yet.
Oof.
What else we got? Oracle, Jackie and Reno. Oracle back at support, super bullish. Selling the 230-220 put spread in December, taking it off before early December earnings. Okay.
Oh, you're at the money now.
Yeah.
That's a tough one. I'm short the 200 puts right now. I did this at 335. It's marked at like $5. Oh, I just got out of one of my MNQ. We got a little bit of a rally, 2,500 or 25,000 on the E-mini or on the NASDAQ. E-minis, that would be fun. But NASDAQ just rallied a little bit. I scalped one of those.
Lovely.
Oracle, you interested?
Yeah, the 230-220 at the money is basically a risk one to make one proposition here.
Mm-hmm.
I don't mind it. I think I would do something like this into the sell-off, like get more premium and take off some risk and really play for an upside move.
Mm-hmm.
The nice thing about the December contract is that you do have the bailout potential if we slide and then on earnings they rip higher. So yeah, I can do this. I'll do the same strikes just at the money.
There you go.
430 and change here. 435, I'll leave it at. See if we get filled.
Beautiful. Thank you, Jackie.
Thank you, Jackie.
Next one, please. SPX. All right, so slightly bullish. Let me look at my SPX position, actually. Because we got a little bit of a bounce. I should have put the GTC in. It has not moved at all. I'm going to put the GTC in for, we'll take 70 cents out of it. That's usually what I've been looking at, like 20%-ish. So I sold it at 230. I'm going to put the order in at 160 to close this one out.
All right.
On my 0 day, but 160. Okay. Matt, Spokane, Washington, slightly bullish SPX, especially Friday. What about a bullish iron condor? 20 delta shorts, 40-point wide put spread to a 20-point wide call spread. So kind of like a dynamic iron condor. I did this morning prior to this slide. So I have the short put spread in. So I'm with you, Matt, but I'm not going to add to the trade. We're just doing one today.
Yeah.
So I'm with you, but I like that. A little bit, this is kind of like a synthetic strangle type position with the 40-point wide put spread.
Yeah. And you could do this, if you didn't have this on for today, you could do this for Monday.
Mm-hmm.
Or do it for next Friday.
Yeah.
But yeah, a 40-point wide put spread with a 20-point wide call spread is looking like the 65.90 short put and the 67.50 short call. So totally viable. You pick up $800 for Monday. You can make it even wider if you're doing it for next Friday. But yeah, I'm with you. I have a 0-day SPX trade that I need a bullish move here. I need a 10-point rally for the 0-day, and then I have a December 10-point wide short put spread that finances a 5-point wide call debit spread. And that one's down a little bit into the sell-off, but that's a longer-term trade.
All right. Next one, please.
Quad U.
Oh, man.
Wow.
This was in the speculative government portfolio ad. I know Jamal was trading this a little bit with the calendar spreads or something on the upside.
Something like that.
The last time we hosted the show together, you put me in something. I got a couple bucks out of that one.
High IVR strangle, 13.19 in December.
Oof.
From Lucas in New York City. 13.19.
I don't like the upside risk on these. You get some sort of announcement and something spooky can happen.
Yeah, I think for trades like this, I would rather sell the 15 put for $2.
Mm-hmm.
And then if you want to have some kind of upside, like you could do a call ratio.
Sure.
You could do a 20-25 call ratio for a small credit. Your break even's all the way up at 32 if you did something like that. Or you could just do a call debit spread. Like you could sell the at the money put and then buy a 20-25 call spread to the upside for a total credit of $1.60. And that way you have no upside risk. And you actually have, pretty sizable profit potential to the upside.
I just did the put. I sold the 13 strike put. I did it for $1.05.
Cool.
Small little trade. Just, little Johnny trade.
Yeah.
So I'm with you on the quad U.
I'm going to do the Super Bowl.
Sell the put, buy a call spread, at the money call spread.
Sell the put, the 15 put, and then buy the 20-25 call spread.
Okay.
It's only cost 50 cents. Yeah.
I love it.
So it's a total credit of $1.60, break even at 13 and change, and you have significant upside profit potential if you get that rip.
Scalped out of another of my NASDAQ.
Look at you.
25.30.
Scalpy. E-mini's rallying a little bit here.
Yes.
Love to see it.
I wonder if I'll get filled. Where's my SPX at? Let's see. It's moved about 30 cents. You got volatility still staying up there. It's come down a little bit, which is good to see. Maybe this gets a little bit more of a bounce. Cool. So we're in. Quad U.
Quad U.
Next one, please. Microsoft. Buying the dip. I figured we'd get something like this. January call debit spread. My Johnny trade is the 515, 520 long call spread. So Athlete Nerd on Reddit, thank you for posting something for us. I have this as, I have the 515, 525. I think this must have been, we did this on Halloween Spooky. This must have been a fast market from last week as well. I think you can get in here again. I'm gonna add some more. I'm gonna do some more long delta here. I'm gonna do a January Dees diagonal spread. I'm thinking the 500 520 at $13. Should I do more directional? What do you think, Mike?
Probably.
You think so? So the 500, I'm gonna do what I typically do of like a 40-20. So I'm gonna do the 510, 530. So I'm buying the 500 in the 510 in January. I'm selling the 530 in December. It's marked at about $11 debit, which is $1,100. It's the 40 delta for the January option, the long option, the 20 delta for the short option, the December 19th option. So it leans you 20 deltas long, but you have some positive gamma to it. I like it. I think it's easier to buy this dip than some of the other big name tech stocks here.
Yeah. And I've got the 530 Jan Dees call calendar. Some long Jan, short Dees at the 530 strike. That is trading for $4.40 right now. So cheap way to get upside exposure in Microsoft. And we'll see if it happens.
All right. I am in long delta.
Sweet. Dash, catching this falling knife. 20 delta neutral iron condor, $10 wings from Chris in Houston, Texas. Shout out the Texas State Fair, where we had our first thick-ass bacon wrapped in cotton candy. Thanks to you.
Yes.
You saw it and you said, you know what?
I was like,
we're here.
That must be,
we gotta do it.
That must be tried. I had to.
It was pretty good. It was pretty decent.
It's just like bacon with candy.
Yeah, candied bacon.
Yeah.
It just so happens that the candy is cotton candy.
Yes. Yes.
All right, Dash, $200, 20 delta neutral iron condor. I was just filled in quad U.
Oh, I also got another little micro NASDAQ here.
Look at you, just going nuts.
A little bit. E-mini's down 50 here.
Neutral iron condor.
Ugh. These markets stink. Look at some of these options. The 20 delta, let's call it the 180 strike in December. It's 355 at 620.
Yeah.
That's a $3 wide spread. If you're going,
can't do it.
With $10 wide wings, just to put this in perspective, the 20 delta on the upside, 230 is 267 at $4. So the spread overall, if you were to do this $10 wide, and I could just pop over to this really quickly, $5 credit at a 3-cent debit is your spread. It's a $5 wide bid-ask spread, and that's because each of these options is going into this spread here. That is one where I would probably, this is probably going to trade at like $3. It should be around $3, but it's going to be an impossible fill getting in and out. I would say no go on this one.
Yeah, I mean, these markets are super wide, and with an iron condor, you have the most exposure to bid-ask spread issues because you have 4 contracts that you have to account for versus just one option if you're selling a put or buying a leap or whatever. So yeah, I think the iron condor specifically for this one is a no-go for us just from the markets.
Yeah, we're gonna have to pass on that one, Chris. But thank you very much for submitting. Next one, please. Oh. VRT. Vertiv Holdings. All right. So pullback is a gift. Selling the December 160-150 put spread for a $2.35 credit. This has been a nice little pullback here it was trading at 200-ish. I think it probably had earnings here into this move. I don't know exactly when it had the earnings. It's had a nice little move lower. Okay, you're selling the December 160-150 put spread. So 30 delta for the short. These as well are kind of junky markets here.
Yeah.
This is
I like the
missing the first rule.
Yeah. I like the company play. It's a data center.
Oh.
It's an infrastructure service for data centers, communication networks, and commercial and industrial environments. So it's what's missing from the AI boom. At least that's what the peeps are saying.
That's what the peeps are saying.
That we've got all the chippies, but we don't have enough data centers to run it all. But yeah, the markets here not great.
They're not great.
Not great. And this is one of those where you really have to stick to very liquid strikes.
Yeah.
And even those aren't that great.
I was looking at the 140 for like $3. All right, they gave it to me.
There you go.
All right, I'm in. Short put, I did the 140 at $3.
Beautiful. Beautiful.
Next one, please.
Thank you, Josh. Roblox, okay. Jade Lizard, December 19th.
Okay.
95 put, 110, 115 call spread from Dan in Asheville, North Carolina. Roblox, okay, we can get behind this. Big sell-off, 30% haircut. Catching a little bid today, which you kind of like to see. All right, December 95, so inside the expected move, picking up some preem, and then the 110, 115 call spread. So collecting 522, your risk in the call spread is $5, so you have no upside risk. You can keep 22 cents if that gets a big rally to the upside, but you are increasing your neutral premium between 95 and 110 by about $150, $160.
It's another one where the markets are a little bit wide.
Yeah. I think the setup is fine, though, as long as you are comfortable with that wide bid-ask spread. Buying power is a little bit hefty for me, $3,500 for a $100 product. So I might go defined risk here and just adjust it to maybe a Jan Dees diagonal spread.
I did the Jade Lizard.
Okay.
But I think the diagonal spread to cut buying power is certainly appropriate here.
Yeah. The Jan 110 and maybe a little Dees 120. $5, yeah. Jan 110, Dees 120 for $5.
All right.
Smash. Instantly filled. 504. Cool. Thank you, Dan.
Next one, please. Lulu.
God.
Ooh. This one's been a dog. Lulu trading 163. Basically lows. What are we thinking here? So you're looking at Lulu, $4 from lows, December 180 cover call, or the 155, 145 put spread. Which one you like, Alex? It's Savannah, Georgia.
Georgia.
I don't know.
December
I don't know if I
180.
do covered call in a
Yeah.
$100 stock. You know, it's a little capital inefficient.
Yeah, I mean, it's just if you have the covered call, you're putting up $8,000. I think there's better opportunities out there than Lulu to put that capital personally. So I think if you're doing something like this, if you're choosing between one or the other, I would do the 155, 145 put spread.
Mm-hmm.
You get the risk one to make one feel. You're picking up $400. I was just filled on Oracle.
Hey.
Picking up $400, risking $6. You're below where it has traded all year. So I like the put spread more than the covered call.
I sold the puts, but I did the 140 puts here in Lulu. $25, $24 out of money here. New lows.
Yeah.
So
I'll do
it's
the
about a
put spread.
20 delta put, short put.
I'm going to do the put spread for $400 even.
I like it.
If we get filled, we get filled. I was filled on Oracle just now, the 220, 230 call diagonal spread for $435.
The correlation is certainly not positive to what the market's doing here with the market. NASDAQ down 1.33% here, 300 and change. The E-minis down 58. We're at the lows of this session here. Yeah, everything getting a little spanky pooed here. Volatility up $1.25 here. The VIX at 21.35. Is that the last one?
Yes, it is.
Oh. So we did pretty much. I mean, I would say even IBM. I had the position. I guess I'm on the opposite side of the IBM trade. So yeah, I didn't
double X.
Yeah, double X on that one. Dash was just markets were just way too wide to even get in there. Even VRT and Roblox, those were kind of tough ones as well. But good batch, fresh little trades here.
Mm-hmm.
I like it.
Yeah.
So we did. That's pretty good. 8 of 10 is a. Thank you guys. Thank you.
Thank you.
We needed that. Thank you. Perfect. Beautiful. Now they're good.
Not yet.
Not yet. We haven't cashed any of those just yet, but soon. E-minis rallying. I think I'm going to close this. I've been going a little nutty with these NASDAQ. Okay, there we go. So I took
just scalping the DAC.
Yeah, NASDAQ's moving. I mean, the last couple days has been a real treat to trade in if you are scooping a little bit along the way. All right, I'm gonna get out of another one here. Come on, just a little bit, couple points. There it is.
Love the ding. You just love the ding.
Yes, just got a little by the dip. We're going to take a quick little 90-second break, come back. We have a market measure, a really good one on probabilities and what you should consider with probabilities and how probability of touch plays in and kind of just expectations for trades. So stick around for that. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a moment. E-minis only down 40.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Mikey, my friend, we are back, catching a little bit of a bit in the market here, just to go over what's happening in the market at the moment. E-mini S&P 500 futures down 38. We've spent most of the morning below the 67 handle, 6,700 handle. We've bounced a little bit off the lows in the last 10, 15 minutes here. You got the NASDAQ hovering around 25,000 here, down $230 here, 230 points, a little under 1%. Dow down 84. It's had a nice little bounce back. You've got the Russell down 17. So the Russell and the NASDAQ, the biggest movers here to start the session. Oil catching a little bit of a bid, /CL. 41 cents the upside. We're at 59.84 here a barrel. You got volatility futures coming in about 40.50 cents from the highs here, 20.80 right now. You got the VIX at 20.62. Bonds catching a little bit of a bid here. They were down in the 116 handle. We're now sitting at 117.01. Gold has been hovering at this 4,000 mark. Seems like it's going to pin there for the rest of the session. Silver down, silver up 22 cents. Bitcoin has caught a little bit of a bid here after being in the 99 handle for a little bit this morning. It's now up above 101 on the futures spot, just above 100,000. Got a bunch of trades on for fast market. Those are all on the follow page. I've been scalping NASDAQ futures. I'm waiting on this SPX position. I hope that one comes in. We're close. We're very close, Mikey. 190. Just a little bit more. But this vol coming out is certainly helping. That spread is moving pretty quickly here.
I'm right on the dance floor at the SPX 0 day.
There you go.
I have the 66.90.
You put a GTC in for
Yeah. You do buy back for $1.
There you go. I like
so 50% profit. Because if I'm getting lunch and we get a little 10-point rip with a 0 day, that can be the difference between a 40-cent loss and a $100 winner.
And those spreads, because it's such small lot size, those spreads, they widen out. You know, and you can see a mark, kind of get in there. Maybe you get lucky and somebody says, you know what, I need that. I'll take that.
Mm-hmm.
So,
yeah, we'll see. We'll see. But yeah, teetering.
Teetering. Market measure, you ready?
I'm ready.
The illusions of safety. Be careful with probability of profit. Spooky. That's scary. Sponsored by the CBOE. Our very own Mike Butler on the floor of the CBOE. There's never an invite from me.
You'll get an invite soon.
All right.
I think you will. Aww. Yeah. No, it was really fun.
Stuck in here.
Super fun.
Stale air in here. In this box.
Anything else?
No. That's...
all right. Illusions of safety.
Yeah. Market measure sponsored by the CBOE. Beautiful. We love the CBOE.
Yeah. Probability of profit. What's the deal with probability of profit here? It is a crucial metric that traders often prioritize as it directly reflects the probability of achieving positive results. So the definition of probability of profit is making 1 penny at expiration, the probability of making at least 1 penny at expiration. So your probability of profit, of course, with short premium trades that are out of the money are going to be high. The further out of the money you go, the higher your probability of profit is going to be.
Yes.
However, return on capital may be even more important as it directly reflects potential profits and losses, especially when considering management and portfolio volatility. So with defined risk trades, it's very clear cut. It is, what's your credit received for a put credit spread, for example? What's your credit received versus what's your max loss? It's a defined metric. With an undefined risk trade like a short put or a strangle or whatever, your return on capital, we like to look at it as return on capital based on buying power requirement. So if I have to put up $2,000 to hold this trade and I have a $200 credit, that's a 10% potential return on capital based on buying power requirement.
Yeah.
Unfortunately, it's not possible to get high values for both metrics simultaneously due to their inverse correlation.
High pop, low credit.
Yeah.
That makes total sense. Low risk, low reward.
Yeah. I think you can bend this last point a little bit if you're selling premium in high implied volatility products, because that will naturally give you a higher return on capital because you're collecting more premium relative to the buying power required for that trade. Defined risk, it's more similar.
Yeah.
I would say between low IV and high IV, but when it comes to undefined risk trades, the higher IV the product is, if you have normal buying power requirements, you're going to be able to juice that return on capital up a little bit.
Mm-hmm. Well said. Next slide here. So the most straightforward way to boost pop is to use further out of the money options with smaller deltas. However, this also means sacrificing potential return on capital. So finding a balance between these two factors is crucial. So this is out of the money puts based on SPY at 672. You can see the max return on capital obviously gets lower as you get further out of the money. I know we, just as kind of a rough mark, are looking for somewhere between 10 and 20% of the capital we're using on a naked position to make it worth the risk. And when you factor in this is just the raw return on capital if you were to get 100% of the max profit. When you're managing at 50%, you want to make sure that it's worth the time. And I'm looking to get somewhere between 5 and 10% return on capital managing at 50%. That's my metric. If you're a little bit risk averse, maybe you're looking for less of that, but it's important to understand just the probability of profit is something that's very dynamic, and that's kind of what this segment's going to get into here. Any thoughts on this one, Mike?
Yeah, I think it's, we see this all the time, and it's really why we kind of center our strategies around the 16 to 30 delta, we'll call it. I mean, you can get as high as 50 delta if you're selling premium right at the money, but we stray away from selling pennies in front of a steamroller.
Yes.
Where you're selling the tail options. I mean, yes, you can do it, but that can come with much more buying power requirement volatility, and you have a really high pop, you have a really low return on capital. So, of course, there's many ways to look at the markets, but this is why we're kind of in this 16 to 30 delta range normally, to make sure that we're collecting enough premium to give ourselves a decent return on capital while still being in that high pop range of 60 to 70 to 80%.
And this is SPY.
Yeah.
When you look at higher volatility underlyings, you could directly or very much you could like kind of price these based on the volatility. So SPY, implied volatility, which is relatively high right now with the VIX around 20, is at about 21, 22%. You go to a 40% implied volatility and the options are going to move very much further out of the money relative to that stock price. But you can basically increase these return on capitals by 2x, right? So the 20 delta put is probably going to be somewhere around a 10 or 15% return on capital just because the volatility is a lot higher and you're probably using a similar amount of capital to hold that position, because higher volatility underlyings, when you're selling premium, it's going to be further out of the money, which means the relative risk in that position is going to be a little bit lesser.
Indeed.
SPY at 666 right now.
Scary. Spooky.
Next slide here. So getting into POP. So POP is a range based on where the short strikes are placed. So the range for the true probability of profit is bound by the following formula. So the highest possible POP is going to be 100 minus the delta of the short strike. So you sell a 30 delta put, it's going to be a 70% POP. It's an inverse trade. If you buy that put, it's going to be a 30% POP. And that POP is just probability of making 1 penny on that trade. When you're looking at for naked strangles, you have to keep in mind that you have risk on both sides. And so it gets a little bit dynamic when you're, doing a 16 delta strangle. You have a roughly, 68% probability of success because you have 16 probability of being outside on the call side, 16% of being outside on the put side. So it's a little bit more dynamic when you're talking about two-sided positions. The lowest POP is going to be 2 times the delta of the short strike. So 100 minus 2 times the delta of the short strike. This is your probability of touch. So this is a probability of being, tested on that strike. So you're selling a 30 delta put. It's about a 60% probability of being touched, which means it's about a 40%, possible probability of losing on that trade. So you got to keep in mind that even though you're selling high probability trades, there's a high probability that you're going to be touched at some point during that position, during that trade. It doesn't change the metrics on entry. They are what they are based on the current market. But, it's just something to keep in mind that just because it's a 70% pop, that's not sticky. It's not static for those trades.
Yeah, I think it just goes hand in hand with the idea that when you're still trading and engaging in volatile markets, even if it's a low IV environment. Like if you're selling a strangle or selling a put or selling a call, like you should be expecting to see some kind of move against you at some point during that trade. Mm-hmm. Like it's very rare for you to sell a put and then just have the market go straight up and you have no resistance at all.
Yes.
Like you could still be profitable on that trade over time, but you might see some chop against you and then a rally and some more chop against you and then a rally. And over time, that decay is what helps you get out of that trade. But yeah, I think just realizing that just because something has a high pop doesn't mean you're not going to get tested. We're always going to deal with trades that are tested.
Yes. Next one, please. So this is your max pop and minimum pop ranges here. It's an interesting chart, and I love this visual here. Based on delta and then the probability, of course, on the other axis here. So because higher deltas often comes with more volatility, iron condors that have a 30 or 40 delta short strike have a very wide range of true pop values, depending on where you place the short strike. So iron condors with a 10 or 20 delta short strike have a narrow pop range. And so when you're further out of the money, the probabilities become they have less variance to them. And that makes perfect sense because you're selling tail options. So a lot of the probabilities are going to play out. When you're getting closer at the money, your probabilities are going to be less sticky to what they are. You can see here when you're using at the money options, you're going to be holding the trade a lot longer. You're going to have a lot more price movement in and out of that trade. And so, the probabilities are not as sticky in that situation.
Yeah, and just realizing, you're thinking back to the formulas we discussed. Your max pop is your pop without being tested. Your min pop is your pop while being tested. You can see these ranges are still quite substantial, all things considered.
Yes. Next one here. So when we trade a typical Tasty Trade style short premium trade, we tend to have a pop between 60 and 80%. This is your kind of cookie cutter, 20 to 30 delta short put or 20 to 30 delta short option for a strangle. It's going to be somewhere in the 60 to 80% probability of profit. Depending on the strategy and the deltas we select, this is typically where we're trading. Although it is easy to interpret what pop is on the trade basis, when it comes to multiple independent trades on, it's easy to misinterpret what the pop actually tells you, especially regarding streaks or of wins and losses. What we're saying is, just because every trade you put on is somewhere between a 60 and 80% pop, it doesn't mean that all of your trades together are going to be a 60 to 80% probability, because they're all independent trades and they're all going to change based on dynamics in the market. And so, looking at each trade specifically is a little bit more, is a little bit easier to think of rather than the portfolio as a whole.
Yeah. And, you could have a high pop trade where you're selling a call spread on SPY, and then you have a high pop trade where you're selling a put spread on the Qs. Just understanding like those trades individually are high pop, but when you put them together, you have a much more narrow range if you assume that they're going to be positively correlated. So just understanding that we look at probability of profit, we take it seriously, but we also need to realize that there's going to be situations where we have a high pop trade that we're tested on, or we have a couple of high pop trades that might offset each other. So just thinking holistically, I think makes a lot of sense.
Scalping through just
naturally.
Absolute junkie today. Next slide here. So this is a cool one. So this table compares the profit probability and the chance of winning streaks based on the initial pop. So even with a high pop of somewhere between 70 and 90%, a slight drop in pop sharply reduces the odds of 3 or 4 wins in a row. And so when the way you can look at this is like, if you put on a 90% pop trade and that pop goes to 70%, meaning you're getting tested on that trade, the probability of those trades, all of those 90% trades, if you're doing multiple of these, being profitable drastically decreases. Like you go to a 4-trade win streak of 24% on a 70% pop, you would think they're all independent, that they're all going to be 70% shots, but when you put them all together, the probability of the streak decreases. And it tells you that through a lot of trades and occurrences, you should expect to have positions go against you.
Yeah.
Like that is the point here, is that even if you're trading high probability, you're going to see stuff not play out in your favor, even if it's high probability.
Yeah. It's the same as like flipping a coin. Like, it's 50-50 in the long run, but I could flip 10 heads 10 times pretty easily.
Yeah. And that's not out of the realm of probabilities on a longer data set.
Yep. Love it.
This is a really good one. I like this one. And you got to keep in mind, pop is the probability of making a penny or losing a penny.
Right.
So this isn't max loss. This isn't tail risk. This is just the win or loss based on just a binary penny amount. That's why a lot of people look at like the max risk and they're like, if I'm losing the max risk every single time and only making 50% of the credit, this doesn't work. You can't zero sum it, because pop is very variable, and the wins and losses are variable as well. The losses specifically, and the probability of realizing X amount of a loss is very, very variable.
Mm-hmm.
Very, very variable.
Very, very, very variable.
A lot of varies. Next slide here. So the purpose here is to show that the probability of seeing multiple consecutive wins is usually much lower than people expect for a trade, even if it has high pop. So you have to keep in mind that when you're talking about like lots of occurrences, it doesn't necessarily mean each one is independent when you look at them as a batch. The lower the initial pop, the starker the drop in probability of seeing consecutive streaks. And this makes perfect sense. If you're trading mostly 70% pops, those should be a wider distribution than if you're trading mostly 90% probability, because the 90% is further out of the money. It's a higher pop.
Yeah. It's like building a parlay with low probability legs. Like your odds are going to get juiced up against you.
Each one, even if they're all high probability.
Yeah. And that's just a matter of hitting, hitting things consecutively is significantly harder than independent results.
Last slide here for a couple takeaways. In order to increase the pop, traders may consider increasing the risk on one or both sides. However, this leads to a decrease in potential maximum return on capital. So there's always a gimme and a gotcha, as Dr. Jim would say. You have a higher pop, you're going to have much less return on capital. The higher the pop of your trade, the higher probability of seeing a streak of winners using the same trade. So when you're, trading high probability trades, you're more likely to see streaks. When you're doing lower probability trades, it's more likely to see not as long of a profit streak. The pop that may seem high on its own, something like a 70 to 75% pop, may actually have a very low probability of seeing streaks of winning trades. And that's just win versus loss. We're not talking magnitude here. We're just talking binary win versus loss. It's not going to play out, on a streak. It plays out on a long data set, number of occurrences.
Yep. And finding that blend between pop and return on capital is super important. And really, at the end of the day, you're trying to make money doing this thing. So I would rather take on a little bit more risk, have a higher return on capital, and give up some pop, knowing that I've got tools in my tool belt. Like if I have a short put, I can roll it out in time. I can roll it out in time and move the strike down. I can manipulate my risk pretty easily with a short premium strategy that's undefined risk. And I'd rather get more premium and take on some more risk because of that.
Very good, my friend. We're going to take a quick little 90-second break and come back. We got Jason live from the Tasty Trade trade desk. And we'll take some questions from the YouTube chat. If you got some questions, trade ideas, whatever you got, post them in the YouTube chat. We'll take some of those. We're going to take a quick little 90-second break, come back with more Tasty Live. We'll see you in just a moment.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, stay a while. Take your jacket off.
No. I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes.
Never do.
How do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short. This is moving so fast, and I like it.
Yeah.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Mikey, my friend, we are back for Live from the Trade Desk. But first, a quick little market update. We've got E-mini S&P 500 futures down 57 at the lows of the session, 66.91. The low of the day, 66.83. They've sold off back to the lows here. NASDAQ down 340. It's the weakest of the group, about 1 1/3%. You got the Dow down 151 and the Russell down 23. The Russell and the NASDAQ, the weakest of the group. Some big moves in some of the big name tech stocks. Amazon down, of course. Meta, getting just absolutely killed. You got Nvidia down as well, 182 and change. You got some of the semiconductor stocks really getting taken out to the woodshed today, down $9 and change here on SMH. Oil catching a little bit of bid, 59.69, up 25 cents. You have volatility futures up a full point, 20.89 here, up about 5%. The VIX itself sitting at 21.10. You've got bonds basically unchanged now. They've rallied from the mid 16 handle, so we're at 16.26. We've rallied there about 6, 7 handles, 8 handles here on the bonds. Gold has been chopping around the 4,000 mark. You got silver up 16 cents, and Bitcoin has been hovering around the 100K mark. It has been a wild little ride today, is what I would say. As the YouTube chat, Mr. Splendid would say, are you not entertained?
I'm very entertained. Down 60, and we're not even an hour in. Well, a little bit over an hour in. It's crazy.
Mm-hmm.
The craziness continues.
I bought the dip here. I've been scalping in and out of NASDAQ, in and out, in and out, in and out, injected into my veins. I'm long here. I'm long like 24, like 920.
And how many Kirkland?
I'm out like 40 ticks or so.
How many Kirkland cold brews have you had?
2.
Okay, so you're completely zooted.
Yeah, I got about 400 milligrams of caffeine.
That's perfect.
Play me some music for my friend.
Good to be back, gentlemen.
Hey.
How are we?
Good morning.
Good.
First
How
of
are you
all,
doing?
I have to address the room. Quentin, thank you again for letting me be on air. I hope you do well in
Are you
Austin, right?
Are you being held hostage or something?
No, look, it's like, after the segment yesterday, he texted me saying, he said, good job. I'm like, wow, I've made it. I finally made it, So thank you, Quentin, for letting me be on this. Thank you. Yeah.
Aren't you his boss, though?
I'm telling you, that's what the limelight does to him. He just cuts in line at the lunch line. I'm in the middle of something. He'll just straight up just come up to me and ask, like, hey, can't you see I'm a little bit busy here? But you know what? I guess that comes with the fame. So, I got a bigger question for you guys. So, you guys fan of the McRib?
Yeah.
I love the McRib. Yeah, like you
Is that
bring
back,
up.
right?
I think it came back silently. I went on the app this morning. I like to, buy some McDonald's, breakfast sandwiches, for the crew here. And I said, oh, it's back. And so, with that came a question yesterday about the concept of backwardation. So let's talk about that for a second, all right? So where am I going with this? So obviously we're heading towards the colder winter months, right?
Yes.
And there's some natural seasonality with lean hogs, am I correct? Meaning there's backwardation as we get into the colder months. And if there's anything that, my pal Momo has told me, is that there's natural seasonality when it comes to lean hogs, because if you think about it, it gets cheaper in the winter months, and then it ramps back up as we get back into summer.
Okay, it is. The lean hogs have sold off.
Yeah.
Quite largely.
So, with that, I'm just thinking, man, is McDonald's just taking advantage of that seasonality? Because that is a pork.
Is that why they bring the McRib?
Exactly.
Back at this
exactly.
time? That's
so I don't
actually a
know.
good point.
I tied in a concept that one of my coworkers brought up to me yesterday, and then with the McRib today. I thought that there was some sort of correlation there, but what do I know?
I think there's something there.
There's something there?
I thought you were going a different route. I thought you were going to say, whenever McDonald's brings back the McRib, it seems like the market sells off, and maybe McDonald's has the key where they put the McRib out on the menu. Everyone's scrambling to hedge their deltas because they know that the market's going to sell off.
All right, so we have to have a McRib, there's a McRib locator online.
Yeah.
Maybe we need to put a McRib indicator,
I think
on the
there is.
platform. Hey, McRib is out. Time to sell some deltas, huh?
The chat is saying that I don't know if the correlation holds because those aren't really ribs.
Oh, come on!
Look, slush.
True. And you got to turn everything to an emulsion if you want to mold it into something.
Yeah.
But come on, I feel like that is one of the dishes that's on the desk that us on the desk. It's super polarizing. You either love it or you hate it. There's people that I really respect on the desk that I no longer respect during McRib season because they look at me like I'm scum. Like it's unbelievable. We're very close to a McDonald's too.
No,
exactly. So, it's really attributed to dad bod this year.
If you can get some of the petty cash from the finance team over there. Friday, usually a lighter staff here. I wouldn't mind splitting a McRib with with the team here.
Yeah.
Because I don't want the whole thing.
All right.
I want the Diego burrito, but I have a little nibble of a McRib later on in the
Noted. Yeah. All right. Well, maybe after Diego, have a little bit of McRib after, a little bit of dessert, huh? Tangy, sweet.
So the AI.
Yeah.
I just typed in McRib market indicator.
Andrew's calling it goy slop. The McRib. That's true. That's true on this Friday Sabbath.
So
can't be eating the goy slop.
Lean hog prices was the first thing that came up. So there is some sort of narrative between lean hog prices and the McRib availability.
Yeah.
There's stock market observations known as the McRib effect, suggesting that the S&P tends to perform better when the sandwich is available. But crypto, I think this is what I was thinking of.
Okay.
The crypto people say that Bitcoin tends to experience significant surges in value around the time of McRib's return.
Ooh.
And this is called McRibonomics or McRib bull market indicators for Bitcoin. So what's interesting about this is you just noted that it's out.
Yeah.
But Bitcoin is bouncing off the 100K mark. Okay. And, maybe we have some room to run to the upside.
Perhaps.
With the McRib.
With the McRib there.
Yeah.
I mean, usually McDonald's will have a nice little ceremony about, hey, it's back. But I think they're trying to wind down the monopoly stuff. Actually, for those of you on YouTube, is the McRib countrywide? Like for those of you who live in Oregon, is there the McRib there, or is that too processed for y'all?
It's got to be, right?
It's got to be nationwide, right? Anyways,
I would think so.
Cool.
What do you got for us?
Right.
Got a couple symbols coming through the system here. Top 20 or so.
Yeah, let's do some business here. First, 45 minutes a day. Here's the top 20 symbols. Number 20, Open at a 16, Google at a 32, Netflix at a 19, MU at a 59, Affirm at a 20, GLD at a 36, Microsoft at a 20, Apple at a 16, TQQQ at a 34, Oracle at a 63, at 10, iBit at a 59, Amazon at a 22, SoFi at a 26, MSTR at a 21, Hood at a 23, AMD at a 41, rounding last four, PLTR at a 17, Meta at a 26, NVIDIA at a 33, and Tesla again at a 24.
Ooh.
Yep.
Yeah, a lot of these are not surprising to me.
No.
Considering they've had big moves like Tesla down 18, Palantir down 2%, Meta can't catch a bid.
Mm-hmm.
Yeah, it's
That is
also
crazy.
strange, right? Because it's also the first Friday of the month, right? So we didn't have no job numbers today either.
Yeah, we didn't
right?
have anything.
Kind of
No data.
No data.
It used to be no data, no problem.
I know.
Now it's no data, maybe big problem.
Yeah, especially with the lack of air traffic controllers out there. Whoever, my fellow air traffic controllers, we stand strong with y'all.
Yeah.
Keeping us safe in the skies.
Yeah. And hopefully the flights stay bid.
Yeah.
Can't have any cancellations.
Exactly.
I'm trying to do some in Tesla here.
What are you trying to do?
Call ratio spread along the 141. The 440, 455 call spread. I sold the 475 against. I did a $1.46 credit.
Okay.
I did that in the November expiration. I also closed out the Snowflake call spread that I had left over from an iron condor that I have been in for quite some time. Took a couple bucks out of that trade. So just taking off Snowflake down like $7, $8 here today. Where we at? $7.50. I took that one off the table. And I'm trying to stop myself from buying another NASDAQ contract.
Yeah, we're sitting at lows.
I know. I might.
Maybe the buy the dip has gotten a little bit tired, huh? I don't know. We'll see.
Yeah, we're gonna put one more on, but that's it. That's it.
Sounds good.
This chair has gotten me a little overzealous with the scalping.
It's the chair. It's not the 400 milligrams of
no, not the
cold brew.
Exactly.
Yeah. Jet fuel.
All right, gentlemen. Well, you guys do you, and I'll see you guys later. Have a good weekend, y'all.
You too.
All right, take care.
Adios.
Thank you, Jason. E-mini S&P 500. E-mini S&P 500 futures. We're down 59 here. We've just bounced a little bit, 66.90. You got the NASDAQ down 350. The Dow down 170 here. I'll give you the chart. The Russell down 23. You got oil catching a little bit of a bid /CL up 20 cents. You have volatility futures at 21 and change here. The bouncing a little bit here. Bonds up a point, one tick. They've moved about a full point from the lows here. Gold at 4,000. You got silver at 1,100. Bitcoin basically unchanged here. Caught a little bit of a bid. We got anything in the chat to put on here? Anything good?
A lot of people looking at Walmart, McDonald's. Question about rolling positions. Yeah, McDonald's. Should we just trade McDonald's?
Yeah, for the McRib. I mean, it's rallying 300.
I do love Salisbury steak. I think I'm in a small pool of people that actually I just love it. Like that used to be my favorite lunch when I was in school. You know, when you had like the lunchroom stuff and it was just scheduled. Like whenever it was Salisbury steak, I was always there.
Gross.
Yeah. Maybe I have some problems that I need to work out.
Gross.
Privately, but
hungry mans. You were a big hungry man guy.
Yeah.
I could imagine.
Yeah.
See, I got home. I ate taquitos. That was my thing.
Those are solid.
I would just the box would be gone in like 2-3 days. You get like 5 to 10 of them each time I come home.
They're incredible.
Yeah, you get a little hot sauce and just go to town on those.
You can't go wrong. Well, now my thing is I got the Costco ramen. and then I get fried chicken nuggets that I bake, and then I combine the two. So I put the chicken nuggets in the ramen.
In the ramen?
Yeah.
That's a little weird.
Is it though? Is it?
I don't know. You're taking a crispy. I think the peeps are saying the little crispiness with the wetness of ramen.
Just try it.
Doesn't really make sense. But
Just try it. Let me know.
I'll take it.
Is there any MU Iron Condor trade management we should consider? Well,
what do you got on?
I have the 14-day 250, 260 short call spread, 185, 175 short put spread. This thing's been flying around. I mean, it's a 30-cent winner right now. So if you want to take the risk off, I think it's totally viable. We are 20 points from the call spread here. And with only 14 days to go, this thing is still trading for $250. So I'm going to press on this and just lean into the idea that we chop between this range, and I'll be able to pick up another couple $100 in the next week. Because this premium is going to start coming in quickly with only 14 days to go, especially if the market just chops sideways for a little bit.
Okay.
But yeah, if you want to close it and remove some risk, book a small winner, totally fine doing that.
Yeah, I have. I had some short delta in Micron. I have a strangle in there. I am short the December 280 175 strangle. It's come in a little bit today, which is nice to see, but I'm still out about $100 on that strangle. That thing, as Mike said, MU moves around. You got AMD moving a bunch today too. It's down $10 and change off the highs. I mean, that thing was 260 to 220 in a short period of time there.
Mm-hmm.
Yes.
Some management questions.
Yes.
Do you keep the same strike when rolling out a position that's gone against you? If I'm short the meta 675, 660 put spread, would you keep the same strikes rolling to Jan? So defined risk, you really can't maneuver it all that much.
Yeah.
And this is completely in the money. So yeah, this trade, if you're rolling it out to Jan, you're paying a big debit. I might just hold it. You have till November 28th, and it's trading at max loss. So
yeah, you're kind of dead.
Yeah, this one I would just hold on to it, see if you get a rally back. But yeah, with undefined risk positions, you can maneuver them more easily, but it's easier to do when the strike is not yet in the money.
Yes.
There was another management question. A lot of McRib action, a lot of ramen.
Yeah, some people are saying, you know.
So chicken katsu, that's another thing. So what I also do is sometimes I keep
So this is like a poor man's chicken katsu.
Yeah.
Is what it is.
100%.
Okay, that's fair.
So sometimes you keep the chicken separate and you put eel sauce on top of it.
Okay.
You know, like
dip it in the ramen though?
Yeah, sure.
Okay.
If you want to. You can do whatever you want.
Yeah, because I envisioned you making the nuggets and then just like dumping them in the broth and just having it sit there and then get all mushy and gross. You're saying on the side you incorporate it in so that it stays crisp.
Yeah.
Okay, I can roll with that. That's less psychotic.
Less psychotic. I love it.
Yes, less psychotic. I mean, still very psychotic.
What's a roll condition for a short straddle, and would you just move the whole thing to the next cycle as is, or roll it into a strangle? So it's just a risk management decision. So I would say with a straddle, if you're trying to hedge deltas, you're probably going from a straddle to an inverted strangle. If you just push the straddle out in time, that's totally fine too. But yeah, you're going to be doing a lot less with a straddle, I would say, compared to a strangle, where you have the ability to move out of the money strikes up or down. Straddle, you're already at the money. And going inverted is an option for sure. I would just keep track of your net credit received relative to what inversion you're going to.
I saw somebody in the chat, Kumar, with the 80 put calendar in OKLO. I'm going to actually do that in December, November. So I'm going to buy the 80 in December, sell the November 80 against it. Because I took off a little butterfly that I had around there that I think this is a more interesting play. So I'm in at 340 here. Cheapy, little downside play. E-mini's down 67, putting in some new lows here
just this moment. 66.79, the low of the session. NASDAQ down 400. Ow! Bonds are rallying.
400, 410. Bitcoin fluttering between red to green.
Yeah.
And here you have McDonald's up 2.
Telling you we're all going to be eating at McDonald's soon.
Potentially. Potentially.
You know?
But yeah, this market is trying to make a move, it feels like.
Starbucks, too, catching a little bit of a bid here, up $4.
Yeah, Starbucks. The Becky portfolio looking good. Target, Starbucks.
No, Lulu was in that one, and Lulu's down like 50% from highs.
That's true.
So I don't know if it's doing all that well.
That's fair. Couple minutes left here.
Got anything else in the chat?
Crypto starting to turn up. Yeah, I mean, I like buying crypto here. I'm already naturally long with my IBIT position, with the short put at 65 and the short call at 75. I'm not going to make any adjustments there unless we get a rally. But yeah, I mean, Bitcoin is at 100K. You haven't been able to say that for, outside of this week, you haven't been able to say that for quite some time. If you look at a continuous Bitcoin chart, we're looking at 4 months ago. Yeah, June.
Yeah.
June was the last time we went below 100K. So getting a lot of reversal here, a lot of opportunity for bullish action and opportunity for bearish too, if whatever direction you want to be in. But yeah, long term, I like Bitcoin to the upside, and you're getting a nice discount today.
Yeah, a little bit of dollar strength today too. It was a little bit weaker this morning. I think that's probably weighing on this market a little bit as well, just with that, a little bit of strength in the dollar. Good stuff. Is that it? We got anything else in the YouTube chat? Any trade ideas that we could put on real quick in the last minute here?
Last chat I can see, SPX Iron Condor from yesterday got killed trying to stay afloat. Yeah.
Yeah, my put spread's right at the money here, 66.50, 66.40. It was teetering on getting filled. It's right there, but no.
Yeah, my 0-day not looking good right now. I need a 40-point rally from here, which is troubling.
Dead.
But the December one is still going to be okay as long as we drift higher or just stay neutral. When do we put on our annual trade? Usually at the end of December. So keep an eye out for that. But I'm more than likely going to continue the IBIT trade. I think I might go to SPY. I think I think the IBIT trade has opened my eyes in terms of just never having short delta. And I want to do that in SPY.
So today, NASDAQ or the E-minis just ticked down 70.
Yeah.
And killed.
Yeah. But I think it would be interesting. We talk about the SPX trade all the time. SPY is a lot more palatable.
Okay.
I think that's the trade for next year is just have one strangle on in SPY and just adjust it so that I never have short delta, regardless of what's happening in the market.
I like it. I like it. E-mini S&P 500 futures down 67. You got the NASDAQ down 400. It's the weakest of the group. You got Dow down 239. The Russell down 28. So a lot of weakness across the board. Bitcoin sitting at 100,000. You got oil catching a little bit of a bid. Volatility futures 2120 and bonds basically unchanged here, up a tick. They've moved off the lows. So definitely some whippiness in the market. A lot of trading. A lot of range today. Range trading. So. We're going to take a quick little 90-second break, come back. We'll be back for the last call today, so we'll see what happens into the close today. But we're going to take a quick little 90-second break, come back with some VODs. The ladies are out in Texas. We got some VODs for the next 2 hours or so here. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you at the close. Peace. Mikey, we are back, my friend, and E-minis
trading down 24. You got the NASDAQ down 125, the Dow down 136, and the Russell down 16. Volatility popping, oil up a little bit, bonds getting killed, gold and silver both rallying, Bitcoin hovering at 100K. Been a scary week. Is there anything good in store for us here, Jamal? Can you quell our fears a little bit for us?
Well, maybe if the Bears win again this weekend, that will be like something that'll be good in store for us on that front. I mean, I hope that's what you were talking about. But outside of that, in this market, I'm not sure.
Who do we got this weekend?
I actually don't know. Doesn't matter. Doesn't matter anymore, guys.
Doesn't matter.
New York. We got the Giants at home.
Oh, we got Jackson Dart. Oh, okay. Jackson Dart. I like Jackson Dart, man.
He lost his mojo without Scat. It's not the same.
The Scat Man was a sad.
Just the frat boy energy that they had together. Just I mean,
it makes your
heads against each other just all day long.
It makes your life a lot easier when you have a check down back that just rolls through people.
Yeah.
So.
No, right. I know, right.
But yeah, hopefully we can.
Well, then that's good. That's good for us then. That's good for us then, isn't it?
It is. It is indeed.
You think?
Yeah, we just got to double Wan'Dale Robinson and hope for the best.
Yeah, the Swiss cheese that we have at cornerback right now.
Yeah.
Needs to.
We almost got Flacco'd. That was very scary.
Dude,
shout out to 41-year-old Flacco for 470 yards. I mean, I have pains rolling out of bed, and I don't get whacked by big 25-year-old dudes all day long. So good for him, you know.
Good for you, man.
I'm sore rolling out of bed. I sit in a freaking chair all day long. That guy's 41, and he's getting hit by 300-pound 25-year-olds all day long. Athletic. Not me. Beautiful.
Not me.
No, not you. Yeah. Not you. Yeah, it's been a while. It's been an interesting week, man. I mean, obviously, this is the second week in a row for the S&P 500 being down. It's been a little weak. And honestly, I mean, let's be real. We kind of needed it. I mean, markets were getting a little carried away. Every day you came in, there was a new deal, some AI deal. So-and-so was passing money to this person, who's passing money to this person, or OpenAI or Meta or Oracle or AMD. And to be honest, if you've noticed, you really haven't heard that much this week. Yet we're still kind of down. But what you have heard is a huge chorus of, is AI a bubble, right? All of a sudden, that news is popping up as every earnings we get seems to be, for whatever reason, even if they beat, the stocks have been weak. We noticed that trend starting last week, and it's carried over into this week as well. And I think that's been the theme of the week, really. All of a sudden, everybody's like a little bit nervous, a little bit skittish. We see this when we get to highs. And I would say this pullback that we've had has been a needed pullback, a pullback and not a correction yet. I think until we get to the corrective territory, we don't have to worry about things. But you mentioned VIX. I mean, it's climbing up there. It's at 20 now, right? At least the futures are. I can't remember exactly where the index is. You look at the futures, there's only about 30 cents difference between the front 2 months. That roll market's only 30 cents. So something to keep an eye on here. If we keep sliding down today, I think maybe that gets closer to being flat ahead of a weekend. And nobody wants to hold anything to a weekend after a week like this.
I said that this morning, the old adage that markets don't bottom on Friday. Maybe we get a little bit of a pullback or continued pullback today. It's certainly looking like that. Volatility, I think, keying in on volatility and where it's at right now. We haven't had the explosion in volatility. I feel like the pain underneath the surface has been a lot worse than what the indices and volatility is kind of telling you. We were talking about Microsoft as like one of the names where you got a 10-15% pullback in a week. And that's a lot bigger than what you're seeing in the markets, 2 or 3% from all-time highs. So, that's kind of, I think that's a good sign, given that that's kind of been the move that you've seen to highs, right? It's been kind of a dispersion trade where you're having these huge moves underneath the surface to the upside in your NVIDIAs and your Microsofts and, single name equities, and the market has kind of grinded higher for the most part. 1% moves up. and then you have these like 5% moves in NVIDIA. Like that's kind of the dispersion that we're seeing to the downside as well, which, you know, in hindsight obviously makes sense.
Yeah, I mean, the trade that I've been doing a little bit here and there is exactly those big names. I mean, look at, you know, you mentioned Microsoft, nice little pullback there. Look at Meta. I mean, look, everybody was clamoring over themselves. I don't know how long ago was it? Was it 3 weeks ago? I want to say a month, but it's probably only 3 weeks ago that it's at the price that it is now, and people were clamoring over themselves to get it. And now all of a sudden, people don't seem to want it. But the trade for me has been going out to Jan, getting long. And then being short D's on some of these different names, just in case this pullback lasts a little longer than we all think.
Give yourself a little bit more time and play into the upside volatility. Let things kind of churn a little bit at the lows here.
Yeah, I think
exactly.
Meta and Microsoft are two I've got my eye on. I'm more worried about Meta than Microsoft though, because Meta's got some issues. I mean,
that's a correction.
Oh yeah,
that's bear market. Meta's a bear market.
That's a gap down after earnings with no green bars. I mean, yesterday was I wouldn't even call that a green bar.
No.
But you're seeing some big red bars here, and it's down another 10 points pre-market.
Yeah, some pain there.
In Palantir, I mean, even faster, actually. I mean, at least some of these, they waited a week or so to fall the way they did after earnings. Palantir was immediate, basically.
Mm-hmm. Yeah. But, you got to put it into context, too. It's been kind of chopping in the 170 to 75 range for most of, like, the trade from August till now. And when you look at, longer time frames, these things are still, it's not like they're giving up months of price action. It's days and weeks. So, there's you gotta put that into perspective a little bit. Yeah, we got somebody in the YouTube chat sold some 175 calls and Palantir. It's a nice little trade. It should be profitable this morning here on the weeklies with this trading at 171. Speaking of, do you put any weight into the Michael Burry portfolio allocation? The context of it just boggles my mind. The way the media covers it is just so misleading. But does that matter to you?
Not at all. Not at all. First of all, that's what he's supposed to do. He's supposed to go out and try and make that type of trade. The only reason, obviously, it's news is because this is the dude who predicted the crash in 08, right? Like, to some degree. I mean, but that was a whole lot different. Obviously, he saw something that a lot of people, from what I remember, he saw something that a lot of people didn't see, like the whole mortgage-backed securities and all that other stuff. Like, the few other people saw that, but not as many people did. I don't put any credence into that. The same as, it's like some of these CEOs this week, a couple of CEOs, I think it was from Morgan Stanley and maybe another, and Goldman, I think, came out and said, we're going to have a deep correction soon. Somewhere between 6 months and 2 years. Well, no shit. I can tell you that. Come on, man. Like, how is that news?
I agree. Vanetta always tees me up and says, gives us these news of projected revenues or whatever in 2035. And I'm like, that is, the meteor could hit by then, right? Like, don't we have possible alien spacecrafts passing through the around the sun right now? Like, we could all be gone.
I was joking with my friends about this. I'm like, it all started with the NBA betting scandal that trickled into the UFC betting scandal that layers into the UFO alien release, and it's just all coming. We're all coming to a head at the same time with all these different avenues. But yeah, this could be the end. You never know.
What do you think the market does if we do have if Roswell all of a sudden says we actually have aliens and they start showing? What do you think happens to the market?
I think we just rip higher. All the
I know, right?
all the space travel companies just moon. Everything's got.
My God.
Then Microsoft and Apple and they'll all get involved and they'll say we will lead the charge to find these.
We've
aliens.
actually been speaking to the aliens for the last year.
How do you speak to them? You need these glasses powered by Meta.
OpenAI partners
you know
with the
articles there
aliens.
would be? You know how many articles there would be about certain stocks to buy based on the alien landscape?
Oh, yeah. No, OpenAI would partner with them for $100 billion. That would be that's the next one. OpenAI getting $100 billion investment from the aliens coming from the meteor.
Yeah. I don't see how it goes.
Yeah,
I don't see how the market goes
There you
down
go.
from that. It's got to go up, right?
Oh my God.
I think so.
So
the last other thing I've been watching is the dollar. Dollar's had a strong week for those who haven't noticed, and it's done varying things. I mean, early in this week, we saw the dollar go up, and markets dropped, Bitcoin dropped, gold dropped. Kind of made sense. Then we also saw a time this week yesterday actually, where all three of those were down and the dollar was down. So I don't know what the heck is going on there. But point being, dollar did have a move this week. It actually touched par. It did get rejected there. We'll see if it actually can punch through in a meaningful way at some point. But that's definitely been something to watch. And we've seen, obviously, Bitcoin's been weak. We saw it hanging around that 108, 107 to 110 level, finally broke down to 100. It's at a level again. Gold still kind of running in place at 4K. So I think those three things, dollar, gold, Bitcoin, have been fascinating to watch, and we'll see what they give us for the next week here.
For sure, the dollar has been strong, giving it up the last like 2 sessions or so here, but it's certainly been strong. I've been leaning long dollar into that move, took a lot of that off. I've kind of flipped the books a little bit, so maybe a little. I hope we have a little bit of dollar weakness via my positions, my little baby FX position.
I mean, there's got to be, but I need to talk to Glenn here because I mean, I'm down in all 3 positions, and 2 of the positions have offsetting U.S. dollar exposure. So one of them I'm long the dollar franc, and I'm also long the Aussie dollar, which is technically short the U.S. dollar, but they're both down.
Well, Glenn's out in Austin for the event, so you'll have to wait until Monday to give him a little spanking.
Yeah.
For his bad takes.
But yeah, these positions are so small. We just hold them until they work. That's the strategy.
I hear you.
It's kind of nice to have positions like that we just hold. We don't have to worry about them.
Yeah.
All right, so what do we think for today, Jamal? More selling, little bounce.
What's the expected move today? What's the expected move for today?
So E-minis, you got another 43 points expected move. That puts you at like 66.80 or 67.60.
So we're talking about range, higher or lower?
Higher, lower, inside.
I'm going to say higher.
Higher, there we go. I like that. What do you think, Mikey?
I think we got to go higher.
I think we get a little bit of a bounce too. That's all 3 on one side. Fade that for sure. You can't fade the consensus is what I would say, but I agree with you. Mr. Jamal, thank you for joining us here in the morning. We're going to take a quick little 90-second break so we can jump out of here and get back for the opening bell. Then we got Fast Market coming after that, so you want to stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live. Thank you, Jamal. Mikey, my friend, we are back, and we've got Fast Market trades. You ready for these?
I am.
Play some music for us. Fast Market. E-mini S&P 500 futures are down 48. We're hovering around 6,700. You got the NASDAQ down 280. Volatility 2115. Volatility is a little bit spooky right now. Volatility. Spooky season has continued into this week.
Yeah. Little spooky.
Not like that.
Little spooky.
Little spooky.
Yeah. If you're a bull.
You guys didn't like that one? Thought that was good.
If you're a bull, it's a little spooky out there.
It is a little spooky.
But yes, we are going to lean on our friends submitting trade ideas for Fast Market.
If you got some trade ideas, you can put them in the chat here.
Indeed. But yeah, it's been a good ride for us this year with Fast Market trades.
Yes.
So let's see what the peeps got here.
Yeah, let's do it.
Okay. IBM. Ooh, from Carlos in Tastyless Country.
Must be up north, Carlos. You're sorry.
Sell a December 295 put for $2. $2 for stock at 5.6% below current price if exercised.
Ugh.
Exercised, like, what's that? The girl?
Exorcism?
There you go. Yeah. Not bad.
I'm sorry, Carlos. I have some short delta here. I cannot do this. Volatility is relatively high, so you got an IV rank at 22 and has been picking up a little bit today, and you got a little bit of a down move. So you're getting a better price if you're looking at it now. The December 295.
It's $6 now.
Yeah.
So a lot has changed from yesterday's high, but yeah, I think this one's a little expensive for me, anyways.
Yeah.
I think you could do a put spread here. I mean, a similar $2, $3 put is the 280 strike now. So that's significantly lower.
I cannot participate, unfortunately, but thank you for bringing us to us. Are you going to get in? You guys sell a little put spread?
Yeah, I'll do a little small put spread. I'll do the 285, 280 for $1.20.
Support the P.
Actually, you know what? This bid-ask spread's a little wide, so I'll bump this up. Let's see if I get $1.40 out of this thing.
There you
go. $1.40, I'll leave it at. See if we get a little sell-off and get filled. But yeah, I'll be in sympathy for you.
Beautiful.
What else we got?
Next one, please. Marvell, 100 strike call for next Friday with a Monday 570 SPY put. And this is in it to win it on Reddit. My man, thank you for your continued support. Marvell trading at 90 right now. So you're trying to play this to 100. Okay, I can get on board with that. Let's see. So you got earnings coming up the 28th. So we'll play this into the earnings expiration. These markets stink in that expiration, so I'm not going to do that. I'm going to do. So you want to play for 100 print here. I will do the 90-100 January D's call diagonal spread. It trades at got a mid price. It's about 537, but these markets do not look great. So I'm going to start this well below the mid price and work my way up here. 525. So this is sort of like a poor man's covered call-ish, a little bit heavier delta because you're right at the money with the long option. Okay, 530. So that one I'll post that one to the follow page here. The 570 put in SPY, that has got, and you're doing that with a Monday 570 put.
Monday.
So you're trying to buy like, you're trying to scalp this one. This goes to or maybe it's a 670 put. You're doing
maybe 670
as like a synthetic short stock.
Yeah.
Okay.
Because the 570s are zero bid.
Yeah, you buy at a penny.
Yeah.
Okay, so you want to get short into Monday. How would you do this? Would you just do, you know what I'm going to do? I'm going to do just a 50-50 shot for you. So we're going to do just an at-the-money long put spread. We'll do this $5 wide. So I'll do the 668, 662, 63, 663. So that's $5 wide. I'm going to mark this at 220-ish. I'm going to try and get filled like 223-ish.
Yeah, I think if you're playing for a Monday sell-off, I think you could also do like a short-term long the 7-day, short the 3-day. Like the long 7-day 665 put, and then short the 3-day 658 put for $5 even. Your trade to the upside in Marvell was $5, so you could just do a $5 here, $5 there type trade.
And then if you get no movement in the market and Marvell, you lose on both.
Yeah.
That would stink. But I'm with you. I took a little short delta for you, and Marvell call diagonal spread playing for that 100 mark.
Lovely.
So we'll see if that plays out there.
Cool.
Beautiful. So we're 2 for 2. Did you get filled on the IBM?
Not yet.
All right.
Not yet. What else we got? Oracle, Jackie and Reno. Oracle back at support, super bullish. Selling the 230, 220 put spread in December, taking it off before early December earnings. Okay.
Well, you're at the money now.
Yeah.
That's a tough one. I'm short the 200 puts right now. I did this at 335. It's marked at like $5. Oh, I just got out of one of my MNQ. We got a little bit of a rally, 2,500 or 25,000 on the E-mini or on the NASDAQ. E-minis, that would be fun. But NASDAQ just rallied a little bit. I scalped one of those.
Lovely.
Oracle, you interested?
Yeah, the 230-220 at the money is basically a risk one to make one proposition here. I don't mind it. I think I would do something like this into the sell-off, like get more premium and take off some risk and really play for an upside move. The nice thing about the December contract is that you do have the bailout potential if we slide and then on earnings they rip higher. So yeah, I can do this. I'll do the same strikes just at the money.
There you go.
430 and change here. 435 I'll leave it at, see if we get filled.
Beautiful. Thank you, Jackie.
Thank you, Jackie.
Next one, please. SPX. All right, so slightly bullish. Let me look at my SPX position, actually. Because we got a little bit of a bounce. I should have put the GTC in. It has not moved at all. I'm going to put the GTC in for, we'll take 70 cents out of it. That's usually what I've been looking at, like 20%-ish. So I sold it at 230. I'm going to put the order in at 160 to close this one out.
All right.
On my 0 day, but 160. Okay. Matt, Spokane, Washington. Slightly bullish SPX, especially Friday. What about a bullish iron condor? 20 delta shorts, 40-point wide put spread to a 20-point wide call spread. So kind of like a dynamic iron condor. I did this morning prior to this slide. So I have the short put spread in. So I'm with you, Matt, but I'm not going to add to the trade. We're just doing one today.
Yeah.
So I'm with you, but I like that. A little bit, this is kind of like a synthetic strangle type position with the 40-point wide put spread.
Yeah. And you could do this, if you didn't have this on for today, you could do this for Monday. Or do it for next Friday.
Yeah.
But yeah, a 40-point wide put spread with a 20-point wide call spread is looking like the 65.90 short put and the 67.50 short call. So totally viable. You pick up $800 for Monday. You can make it even wider if you're doing it for next Friday. But yeah, I'm with you. I have a 0-day SPX trade that I need a bullish move here. I need a 10-point rally for the 0-day, and then I have a December 10-point wide short put spread that finances a 5-point wide call debit spread. And that one's down a little bit into the sell-off, but that's a longer-term trade.
All right. Next one, please.
Quad U.
Oh, man.
Wow.
This was in the speculative government portfolio ad. I know Jamal was trading this a little bit with the calendar spreads or something on the upside.
Something like that.
The last time we hosted the show together, you put me in something. I got a couple bucks out of that one.
High IVR strangle, 13.19 in December.
Oof.
From Lucas in New York City. 13.19.
I don't like the upside risk on these. You get some sort of announcement and something spooky can happen.
Yeah, I think for trades like this, I would rather sell the 15 put for $2. And then if you want to have some kind of upside, like you could do a call ratio.
Sure.
You could do a 20-25 call ratio for a small credit. Your break even's all the way up at 32 if you did something like that. Or you could just do a call debit spread. Like you could sell the at the money put and then buy a 20-25 call spread to the upside for a total credit of $1.60. And that way you have no upside risk. And you actually have, pretty sizable profit potential to the upside.
I just did the put. I sold
Just
the
the put.
13 strike put. I did it for $1.05.
Cool.
Small little trade. Just, a little Johnny trade.
Yeah.
So I'm with you on the quad U.
I'm going to do the Super Bowl.
Sell the put, buy a call spread, at the money call spread.
Sell the put, the 15 put, and then buy the 20-25 call spread.
Okay.
It's only cost 50 cents. Yeah.
I love it.
So it's a total credit of $1.60, break even at 13 and change, and you have significant upside profit potential if you get that rip.
Scalped out of another in my NASDAQ.
Look at you.
25.30.
Scalpy. E-mini's rallying a little bit here.
Yes.
Love to see it.
I wonder if I'll get filled. Where's my SPX at? Let's see. It's moved about 30 cents. You got volatility still staying up there. It's come down a little bit, which is good to see. Maybe this gets a little bit more of a bounce. Cool. So we're in. Quad U.
Quad U.
Next one, please. Microsoft. Buying the dip. I figured we'd get something like this. January call debit spread. My Johnny trade is the 515-520 long call spread. So Athlete Nerd on Reddit, thank you for posting something for us. I have this as, I have the 515-525. I think this must have been, we did this on Halloween Spooky. This must have been a fast market from last week as well. I think you can get in here again. I'm gonna add some more. I'm gonna do some more long delta here. I'm gonna do a January Dees diagonal spread. I'm thinking the 500-520 at $13. Should I do more directional? What do you think, Mike?
Probably.
You think so? So the 500, I'm gonna do what I typically do of like a 40-20. So I'm gonna do the 510, 530. So I'm buying the 500 in the 510 in January. I'm selling the 530 in December. It's marked at about $11 debit, which is $1,100. It's the 40 delta for the January option, the long option, the 20 delta for the short option, the December 19th option. So it leans you 20 deltas long, but you have some positive gamma to it. I like it. I think it's easier to buy this dip than some of the other big name tech stocks here.
Yeah. And I've got the 530 Jan Dees call calendar. Some long Jan, short Dees at the 530 strike. That is trading for $4.40 right now. So cheap way to get upside exposure in Microsoft. And we'll see if it happens.
All right. I am in long delta.
Sweet. Dash, catching this falling knife. 20 delta neutral iron condor, $10 wings from Chris in Houston, Texas. Shout out the Texas State Fair, where we had our first thick-ass bacon wrapped in cotton candy. Thanks to you.
Yes.
You saw it and you said, you know what?
I was like,
we're here.
That must be,
we gotta do it.
That must be tried. I had to.
It was pretty good. It was pretty decent.
It's just like bacon with candy.
Yeah, candied bacon.
Yeah.
It just so happens that the candy is cotton candy.
Yes. Yes.
All right, Dash, $200, 20 delta neutral iron condor. I was just filled in quad U.
I also got another little micro NASDAQ here.
Look at you, just going nuts.
A little bit. E-mini's down 50 here.
Neutral iron condor.
Ugh. These markets stink. Look at some of these options. Like,
the
20 delta, let's call it the 180 strike in December. It's 355 at 620.
Yeah.
That's a $3 wide spread. If you're going,
can't do it.
With $10 wide wings, just to put this in perspective, the 20 delta on the upside, 230 is 267 at $4. So the spread overall, if you were to do this $10 wide, and I can just pop over to this really quickly, $5 credit at a 3-cent debit is your spread. It's a $5 wide bid-ask spread, and that's because each of these options is going into this spread here. That is one where I would probably, this is probably going to trade at like $3. It should be around $3, but it's going to be an impossible fill getting in and out. I would say no go on this one.
Yeah, I mean, these markets are super wide, and with an iron condor, you have the most exposure to bid-ask spread issues because you have 4 contracts that you have to account for versus just one option if you're selling a put or buying a leap or whatever. So yeah, I think the iron condor specifically for this one is a no-go for us just from the markets.
Yeah, we're gonna have to pass on that one, Chris. But thank you very much for submitting. Next one, please. Oh. VRT. Vertiv Holdings. All right. So pullback is a gift. Selling the December 160, 150 put spread for a $2.35 credit. This has been a nice little pullback here it was trading 200-ish. I think it probably had earnings here into this move. I don't know exactly when it had the earnings. It's had a nice little move lower. Okay, you're selling the December 160, 150 put spread. So 30 delta for the short. These as well are kind of junky markets here.
Yeah.
This is
I like the
missing the first rule.
Yeah. I like the company play. It's a data center.
Oh.
It's an infrastructure service for data centers, communication networks, and commercial and industrial environments. So it's what's missing from the AI boom. At least that's what the peeps are saying.
That's what the peeps are saying.
That we've got all the chippies, but we don't have enough data centers to run it all. But yeah, the markets here, not great.
They're not great.
Not great. And this is one of those where you really have to stick to very liquid strikes.
Yeah.
And even those aren't that great.
I was looking at the 140 for $3. All right, they gave it to me.
There you go.
All right, I'm in. Short put, I did the 140 at $3.
Beautiful. Beautiful.
Next one, please.
Thank you, Josh. Roblox, okay. Jade Lizard, December 19th.
Okay.
95 put, 110, 115 call spread from Dan in Asheville, North Carolina. Roblox, okay, we can get behind this. Big sell-off, 30% haircut. Catching a little bid today, which you kind of like to see. All right, December 95, so inside the expected move, picking up some preem, and then the 110, 115 call spread. So collecting 522, your risk in the call spread is $5, so you have no upside risk. You can keep 22 cents if that gets a big rally to the upside, but you are increasing your neutral premium between 95 and 110 by about $150, $160.
That's another one where the markets are a little bit wide.
Yeah. I think the setup is fine, though, as long as you are comfortable with that wide bid-ask spread. Buying power is a little bit hefty for me, $3,500 for a $100 product. So I might go defined risk here and just adjust it to maybe a Jan Dees diagonal spread.
I did the Jade Lizard.
Okay.
But I think the diagonal spread to cut buying power is certainly appropriate here.
Yeah. The Jan 110 and maybe a little Dees 120. $5, yeah. Jan 110, Dees 120 for $5.
All right.
Smash, instantly filled, 504. Cool. Thank you, Dan.
Next one, please. Lulu.
God.
Ooh. This one's been a dog. Lulu trading 163. Basically lows. What are we thinking here? So you're looking at Lulu, $4 from lows, December 180 cover call, or the 155, 145 put spread. Which one you like, Alex? It's Savannah, Georgia.
Georgia.
I don't know if I do covered call in a $100 stock. It's a little capital inefficient.
Yeah, I mean, it's just if you have the covered call, you're putting up $8,000. I think there's better opportunities out there than Lulu to put that capital personally. So I think if you're doing something like this, if you're choosing between one or the other, I would do the 155, 145 put spread.
Mm-hmm.
You get the risk one to make one feel. You're picking up $400. I was just filled on Oracle.
Hey.
Picking up $400, risking $6. You're below where it has traded all year. So I like the put spread more than the covered call.
I sold the puts, but I did the 140 puts here in Lulu. $25, $24 out of money here. New lows.
Yeah.
So
I'll do
about a
put
20
spread.
delta put, short put.
I'm going to do the put spread for $400 even.
I like it.
If we get filled, we get filled. I was filled on Oracle just now, the 220, 230 call diagonal spread for $435.
The correlation is certainly not positive to what the market's doing here with the market. NASDAQ down 1.33% here, 300 and change. The E-minis down 58. We're at the lows of this session here. Yeah, everything getting a little spanky pooed here. Volatility up $1.25 here. The VIX at 21.35. Is that the last one?
Yes, it is.
Oh. So we did pretty much, I mean, I would say even IBM, I had the position. I guess I'm on the opposite side of the IBM trade. So yeah, I didn't
double X.
Yeah, double X on that one. Dash was just, markets were just way too wide to even get in there. Even VRT and Roblox, those were kind of tough ones as well. But good batch, fresh little trades here.
Mm-hmm.
I like it.
Yeah.
So we did, that's pretty good. 8 of 10 is a, thank you guys, thank you.
Thank you.
We needed that. Thank you. Perfect, beautiful. E-mini, now they're
Not yet.
Not yet. We haven't cashed any of those just yet, but soon. E-minis rallying. I think I'm going to close this. I've been going a little nutty with these NASDAQ. Okay, there we go. So I took
just scalping the DAC.
Yeah, NASDAQ's moving. I mean, the last couple days has been a real treat to trade in if you are scooping a little bit along the way. All right, I'm going to get out of another one here. Come on. Just a little bit, couple points. There it is.
Love the ding. You just love the ding.
Yes, just good. A little by the dip. We're going to take a quick little 90-second break, come back. We have a market measure, a really good one on probabilities and what you should consider with probabilities and how probability of touch plays in and kind of just expectations for trades. So stick around for that. We're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a moment. E-minis only down 45. Mikey, my friend, we are back, catching a little bit of a bid in the market here, just to go over what's happening in the market at the moment. E-mini S&P 500 futures down 38. We've spent most of the morning below the 67 handle, 6,700 handle. We've bounced a little bit off the lows in the last 10, 15 minutes here. You got the NASDAQ hovering around 25,000 here, down $230 here, 230 points, a little under 1%. Dow down 84. It's had a nice little bounce back. You've got the Russell down 17. So the Russell and the NASDAQ, the biggest movers here to start the session. Oil catching a little bit of a bid, /CL. 41 cents to the upside. We're at 59.84 here a barrel. You got volatility futures coming in about 50 cents from the highs here, 20.80 right now. You got the VIX at 20.62. Bonds catching a little bit of a bid here. They were down in the 116 handle. We're now sitting at 117.01. Gold has been hovering at this 4,000 mark. Seems like it's going to pin there for the rest of the session. Silver up 22 cents. Bitcoin has caught a little bit of a bid here after being in the 99 handle for a little bit this morning. It's now up above 101 on the futures spot, just above 100,000. Got a bunch of trades on for fast market. Those are all on the follow page. I've been scalping NASDAQ futures. I'm waiting on this SPX position. I hope that one comes in. We're close. We're very close, Mikey. 190. Just a little bit. just a little bit more. But this vol coming out is certainly helping. That spread is moving pretty quickly here.
I'm right on the dance floor at the SPX 0 day.
There you go.
I have the 66.90.
You put a GTC in?
Yeah.
You
to
do?
buy back for $1.
There you go. I like
so 50% profit. Because if I'm getting lunch and we get a little 10-point rip with a 0 day, that can be the difference between a 40-cent loss and a $100 winner.
And those spreads, because it's such a small lot size, those spreads, they widen out. You know, and you can see a mark, kind of get in there. Maybe you get lucky and somebody says, you know what, I need that. I'll take that.
Mm-hmm.
So,
yeah, we'll see. We'll see. But yeah, teetering.
Market measure, you ready?
I'm ready.
The illusions of safety. Be careful with probability of profit. Spooky. That's scary. Sponsored by the CBOE. Our very own Mike Butler on the floor of the CBOE. There's never an invite from me.
You'll get an invite soon.
All right.
I think you will. Aww. Yeah. No, it was really fun.
Stuck in here.
Super fun.
The stale air in here. In this box.
Anything else?
No. That's...
all right. Illusions of safety.
Yeah. Market measure sponsored by the CBOE. Beautiful. We love the CBOE.
Yeah, probability profit. What's the deal with probability profit here? It is a crucial metric that traders often prioritize as it directly reflects the probability of achieving positive results. So the definition of probability of profit is making 1 penny at expiration. The probability of making at least 1 penny at expiration. So your probability of profit, of course, with short premium trades that are out of the money are going to be high. The further out of the money you go, the higher your probability of profit is going to be.
Yes.
However, return on capital may be even more important as it directly reflects potential profits and losses, especially when considering management and portfolio volatility. So with defined risk trades, it's very clear cut. It is, what's your credit received for a put credit spread, for example? What's your credit received versus what's your max loss? It's a defined metric. With an undefined risk trade like a short put or a strangle or whatever, your return on capital, we like to look at it as return on capital based on buying power requirement. So if I have to put up $2,000 to hold this trade and I have a $200 credit, that's a 10% potential return on capital based on buying power requirement.
Yeah.
Unfortunately, it's not possible to get high values for both metrics simultaneously due to their inverse correlation.
High pop, low credit.
Yeah.
That makes total sense. Low risk, low reward.
Yeah. I think you can bend this last point a little bit if you're selling premium in high implied volatility products, because that will naturally give you a higher return on capital because you're collecting more premium relative to the buying power required for that trade. Defined risk, it's more similar.
Yeah.
I would say between low IV and high IV. But when it comes to undefined risk trades, the higher IV the product is, if you have normal buying power requirements, you're going to be able to juice that return on capital up a little bit.
Mm-hmm. Well said. Next slide here. So the most straightforward way to boost pop is to use further out of the money options with smaller deltas. However, this also means sacrificing potential return on capital. So finding a balance between these two factors is crucial. So this is out of the money puts based on SPY at 672. You can see the max return on capital obviously gets lower as you get further out of the money. I know we, just as kind of a rough mark, are looking for somewhere between 10 and 20% of the capital we're using on a naked position to make it worth the risk. And when you factor in this is just the raw return on capital if you were to get 100% of the max profit. When you're managing at 50%, you want to make sure that it's worth the time. And I'm looking to get somewhere between 5 and 10% return on capital managing at 50%. That's my metric. If you're a little bit risk averse, maybe you're looking for less of that. But it's important to understand just the probability of profit is something that's very dynamic, and that's kind of what this segment's going to get into here. Any thoughts on this one, Mike?
Yeah, I think it's, we see this all the time, and it's really why we kind of center our strategies around the 16 to 30 delta, we'll call it. I mean, you can get as high as 50 delta if you're selling premium right at the money, but we stray away from selling pennies in front of a steamroller.
Yes.
Where you're selling the tail options. I mean, yes, you can do it, but that can come with much more buying power requirement volatility, and you have a really high pop, you have a really low return on capital. So, of course, there's many ways to look at the markets, but this is why we're kind of in this 16 to 30 delta range normally, to make sure that we're collecting enough premium to give ourselves a decent return on capital while still being in that high pop range of 60 to 70 to 80%.
And this is SPY.
Yeah.
When you look at higher volatility underlyings, you could directly or very much you can like kind of price these based on the volatility. So SPY, implied volatility, which is relatively high right now with the VIX around 20, is at about 21, 22%. You go to a 40% implied volatility and the options are going to move very much further out of the money relative to that stock price. But you can basically increase these return on capitals by 2x, right? So the 20 delta put is probably going to be somewhere around a 10 or 15% return on capital, just because the volatility is a lot higher and you're probably using a similar amount of capital to hold that position. Because higher volatility underlyings, when you're selling premium, it's going to be further out of the money, which means the relative risk in that position is going to be a little bit lesser.
Indeed.
SPY at 666 right now.
Scary. Spooky.
Next slide here. So getting into pop. So pop is a range based on where the short strikes are placed. So the range for the true probability of profit is bound by the following formula. So the highest possible pop is going to be 100 minus the delta of the short strike. So you sell a 30 delta put, it's going to be a 70% pop. It's an inverse trade. If you buy that put, it's going to be a 30% pop. And that pop is just probability of making 1 penny on that trade. When you're looking at for naked strangles, you have to keep in mind that you have risk on both sides. And so it gets a little bit dynamic when you're, doing a 16 delta strangle. You have a roughly, 68% probability of success because you have 16 probability of being outside on the call side, 16% of being outside on the put side. So it's a little bit more dynamic when you're talking about two-sided positions. The lowest pop is going to be 2 times the delta of the short strike. So 100 minus 2 times the delta of the short strike. This is your probability of touch. So this is a probability of being, tested on that strike. So you're selling a 30 delta put. It's about a 60% probability of being touched, which means it's about a 40%, possible probability of losing on that trade. So you got to keep in mind that even though you're selling high probability trades, there's a high probability that you're going to be touched at some point during that position, during that trade. It doesn't change the metrics on entry. They are what they are based on the current market. But, it's just something to keep in mind that just because it's a 70% pop, that's not sticky. It's not static for those trades.
Yeah, I think it just goes hand in hand with the idea that when you're still trading and engaging in volatile markets, even if it's a low IV environment. Like if you're selling a strangle or selling a put or selling a call, like you should be expecting to see some kind of move against you at some point during that trade. Mm-hmm. Like it's very rare for you to sell a put and then just have the market go straight up and you have no resistance at all.
Yes.
Like you could still be profitable on that trade over time, but you might see some chop against you and then a rally and some more chop against you and then a rally. And over time, that decay is what helps you get out of that trade. But yeah, I think just realizing that just because something has a high pop doesn't mean you're not going to get tested. We're always going to deal with trades that are tested.
Yes. Next one, please. So this is your max pop and minimum pop ranges here. It's an interesting chart, and I love this visual here. Based on delta and then the probability, of course, on the other axis here. So because higher deltas often comes with more volatility, iron condors that have a 30 or 40 delta short strike have a very wide range of true pop values. depending on where you place the short strike. So iron condors with a 10 or 20 delta short strike have a narrow pop range. And so when you're further out of the money, the probabilities become more, they have less variance to them. And that makes perfect sense because you're selling tail options. So a lot of the probabilities are going to play out. When you're getting closer at the money, your probabilities are going to be less sticky to what they are. You can see here when you're using at the money options, you're going to be holding the trade a lot longer. You're going to have a lot more price movement in and out of that trade. And so, the probabilities are not as sticky in that situation.
Yeah. And just realizing, you're thinking back to the formulas we discussed, your max pop is your pop without being tested. Your min pop is your pop while being tested. You can see these ranges are still quite substantial, all things considered.
Yes. Next one here. So when we trade a typical Tasty Trade style short premium trade, we tend to have a pop between 60 and 80%. This is your kind of cookie cutter, 20 to 30 delta short put or 20 to 30 delta short option for a strangle. It's going to be somewhere in the 60 to 80% probability of profit. Depending on the strategy and the deltas we select, this is typically where we're trading. Although it is easy to interpret what pop is on the trade basis, when it comes to multiple independent trades it's easy to misinterpret what the pop actually tells you, especially regarding streaks or of wins and losses. What we're saying is just because every trade you put on is somewhere between a 60 and 80% pop, it doesn't mean that all of your trades together are going to be a 60 to 80% probability because they're all independent trades and they're all going to change based on dynamics in the market. And so, looking at each trade specifically is a little bit more, is a little bit easier to think of rather than the portfolio as a whole.
Yeah. And, you could have a high pop trade where you're selling a call spread on SPY, and then you have a high pop trade where you're selling a put spread on the Qs. Just understanding like those trades individually are high pop, but when you put them together, you have a much more narrow range if you assume that they're going to be positively correlated. So just understanding that we look at probability of profit, we take it seriously, but we also need to realize that there's going to be situations where we have a high pop trade that we're tested on, or we have a couple of high pop trades that might offset each other. So just thinking holistically, I think makes a lot of sense.
Scalping through just
naturally.
Absolute junkie today. Next slide here. So this is a cool one. So this table compares the profit probability and the chance of winning streaks based on the initial pop. So even with a high pop of somewhere between 70 and 90%, a slight drop in pop sharply reduces the odds of 3 or 4 wins in a row. And so when the way you can look at this is like, if you put on a 90% pop trade and that pop goes to 70%, meaning you're getting tested on that trade, the probability of those trades, all of those 90% trades, if you're doing multiple of these, being profitable drastically decreases. Like you go to a 4-trade win streak of 24% on a 70% pop, you would think they're all independent, that they're all going to be 70% shots, but when you put them all together, the probability of the streak decreases. And it tells you that through a lot of trades and occurrences, you should expect to have positions go against you.
Yeah.
Like that is the point here, is that even if you're trading high probability, you're going to see stuff not play out in your favor, even if it's high probability.
Yeah. It's the same as like flipping a coin. Like, it's 50-50 in the long run, but I could flip 10 heads 10 times pretty easily.
Yeah. And that's not out of the realm of probabilities on a longer data set.
Yep. Love it.
This is a really good one. I like this one. And you got to keep in mind, pop is the probability of making a penny or losing a penny.
Right.
So this isn't max loss. This isn't tail risk. This is just the win or loss based on just a binary penny amount. That's why a lot of people look at like the max risk and they're like, if I'm losing the max risk every single time and only making 50% of the credit, this doesn't work. It's not you can't zero sum it, because pop is very variable, and the wins and losses are variable as well. The losses specifically, and the probability of realizing X amount of a loss is very, very variable.
Mm-hmm.
Very, very variable.
Very, very, very variable.
A lot of varies. Next slide here. So the purpose here is to show that the probability of seeing multiple consecutive wins is usually much lower than people expect for a trade, even if it has high pop. So you have to keep in mind that when you're talking about like lots of occurrences, it doesn't necessarily mean each one is independent when you look at them as a batch. The lower the initial pop, the starker the drop in probability of seeing consecutive streaks. And this makes perfect sense. If you're trading mostly 70% pops, those should be a wider distribution than if you're trading mostly 90% probability, because the 90% is further out of the money. It's a higher pop.
Yeah. It's like building a parlay with low probability legs. Like your odds are going to get juiced up against you.
Each one, even if they're all high probability.
Yeah. And that's just a matter of hitting things consecutively is significantly harder than independent results.
Last slide here for a couple takeaways. In order to increase the pop, traders may consider increasing the risk on one or both sides. However, this leads to a decrease in potential maximum return on capital. So there's always a gimme and a gotcha, as Dr. Jim would say. You have a higher pop, you're going to have much less return on capital. The higher the pop of your trade, the higher probability of seeing a streak of winners using the same trade. So when you're, trading high probability trades, you're more likely to see streaks. When you're doing lower probability trades, it's more likely to see not as long of a profit streak. The pop that may seem high on its own, something like a 70 to 75% pop, may actually have a very low probability of seeing streaks of winning trades. And that's just win versus loss. We're not talking magnitude here. We're just talking binary win versus loss. It's not going to play out, on a streak. It plays out on a long data set, number of occurrences.
Yep. And finding that blend between pop and return on capital is super important. And really, at the end of the day, you're trying to make money doing this thing. So I would rather take on a little bit more risk, have a higher return on capital, and give up some pop, knowing that I've got tools in my tool belt. Like if I have a short put, I can roll it out in time. I can roll it out in time and move the strike down. I can manipulate my risk pretty easily with a short premium strategy that's undefined risk. And I'd rather get more premium and take on some more risk because of that.
Very good, my friend. We're going to take a quick little 90-second break and come back. We got Jason live from the Tasty Trade trade desk. And we'll take some questions from the YouTube chat. If you got some questions, trade ideas, whatever you got, post them in the YouTube chat. We'll take some of those. We're going to take a quick little 90-second break, come back with more Tasty Live. We'll see you in just a moment.
Mike, I'm here with Jamal. And you might notice a brand new background here.
Settings a little bit different. We're here, baby. We're on the CBOE floor. What's happening?
It's incredible. Energy's electric.
Yeah.
We got a nice market sell-off today. We got orders flying around like crazy. It's crazy. It's awesome.
It's super exciting, dude. Like, what's wild is that we're actually here on a day where the market really is moving down. Obviously, there's been all this talk. You and I were talking about it off air. It is a little wild that there seems to be, and this is how sentiment goes in the market, right? Like all of a sudden, everybody's saying, "Oh, is AI overvalued?" All this other whatever, and it's definitely clearly an AI-led sell-off because the Nasdaq just went down more than 2%. Spooz is only down 1% and change. So, but I hate to see market down, but I love it because look how wild it is in here. It's pretty busy in here. If you guys can tell, it's a lot of activity.
Yeah, we were here a couple weeks ago, and this is definitely a lot more action, a lot more orders going through the books. But E-minis down 80 points, Nasdaq down almost 500, completely reversing and more that rally we saw yesterday. Bitcoin retouching 100K, but I think when it comes to trading opportunities and opportunities from from what's going on with the government shutdown and what have you. I mean, this is kind of that trader's market we've been looking for.
It's interesting you mentioned that, the government shutdown, because we did so many studies, we did so many things early on about the idea of the government shutdown not affecting the market. And honestly, I mean, it didn't. It really didn't. Markets just kept going higher. But this is where you talk about the wall of worry, right? Like, I've been very adamant about the fact that there's literally no wall of worry more recently. It's starting to mount up. All of a sudden, is AI overblown? Are the fears overblown? All of a sudden, the government shutdown is starting to affect some stuff. You're hearing what's going on with airlines, which I'm glad I'm not flying anywhere. I don't know about you. Speaking of, obviously, Tom and Tony are doing the last show this weekend and at some point in Austin. But look, you're hearing about what's going on and they're cutting back. That's going to have an effect on airlines. I don't see how it does.
Oh, yeah.
You know what
I mean, I got a personal email from the CEO of United this morning.
No kidding. I didn't know you guys were on a first-name basis.
And he told me that, they're going to start closing down flights, canceling flights, but luckily United's a hub at O'Hare, so it won't be affected at O'Hare, which is great.
Let me tell you something right now. It's November, what's today? November 6th?
Yeah, that's right.
We're like 2 weeks, is it 2 weeks till Thanksgiving?
3 weeks.
Seriously? 3 weeks? 3 weeks. 3 weeks to Thanksgiving. I don't imagine this is going to resolve itself in 3 weeks. That's going to be a serious problem.
No.
And if we go through Christmas like that, holy cow.
Yeah.
I mean, do we just buy puts on UAL now? I don't know.
I'm supposed to be flying international to Japan the day after Thanksgiving.
Oh my God.
Yeah, I might be taking a boat.
Yeah, you might be. You might be getting shipped over there. Not that there's any issues with shipping, neither.
No. But yeah, why don't we pull up the platform and take a look at these markets here. We've got Ethereum, Wheat, Bitcoin leading the charge, down 4%, 3%, 2% respectively. E-minis down over a percentage point. NASDAQ, like Jamal said, down 2%. Not much really to the upside. We've got some energies here.
Don't worry, nat gas is up.
Yeah, always. Nat gas up over a 1.25. Heating oil, gasoline leading the way, up 1%. But yeah, there's only 3 products in the CME futures world that are up over 1 percentage point. Everything else, big to the downside, including crude oil too. Crude oil sub 60. We've been kind of playing that range here, trying to get in sub 60. I think this might be a time to get back in here.
Yeah,
we did see that liquidation down to 55-ish, but I kind of like biting on micro crude here below 60.
I know, right?
I think I'm gonna send that right now.
Isn't it funny how when you see something, you just start talking about, you know what, this is actually a good idea, right?
Yeah.
This is a good thing to do.
Yeah.
I'm with you.
We'll throw in a little order there, but I haven't done anything in this portfolio as of yet today, but we are, the CBX or the SPX floor is literally right behind us.
Yeah.
So a couple trade ideas for you in SPX coming up shortly. If you want to join us on the YouTube channel, of course, we're streaming live there. Just head over to the Tasty Live channel. You can pop in your trade ideas, questions along the right-hand side chat. Jamal's going to be checking those out in just a little bit, but I was just filled on that micro crude contract, 59.05. So
you got filled?
Yep. We'll see what we can get out of that. But yeah, awesome day here. Glad to be here. And yeah, let's actually, should we pop over the slides, get some trade ideas?
Yeah, let's do it.
All right. It is November 6th, so we've got a couple trade ideas for you. Nice Thursday morning. And like I said, SPX literally right behind us. So I'm placing a couple trades here in SPX.
Yes.
First things first, we are, of course, down 80 points on the day. So I want to throw in this 0-day iron condor. I think these are the times where I think these can really work out, especially if we get a day like today and then some chop tomorrow. So this is my cookie cutter setup with a 0-day SPX iron condor. I should say 1 day leading into 0-day. So I'm throwing on the 66.90, 66.85 put spread, 5 points wide, just below 6,700. And then I'm throwing on the 6,800, 6,805 short call spread. As I always do, I collect $200, risk 300, kind of that chicken iron condor feel if we continue to crash into tomorrow, or if we rip higher. My risk is somewhat equal to my potential max profit here, but if we wake up tomorrow morning and we see a little bit of chop up, down 20, 30 points, that's going to be a non-event for this position, and I should be able to close it for $100 profit, 50% profit shortly after the open tomorrow morning. So just looking to play for this vol pop leading to a vol crush, see if we get it tomorrow on hopefully a calmer Friday, but we'll see. So yeah, keeping it small, and we've done this a handful of times. The setup is almost always the same, collecting 200, risking 300, and just going towards that expected move. If I want to skew it a little bit, this position, as you can see visually, is skewed a little bit to the upside. So just leaning into the potential that we might see a little bit of a recovery tomorrow, but if not, I've still got plenty of room to the downside as long as it's within the expected move here.
Nice, man, nice. All you got to do is just lean over and ask them to fill it for you. Fill it for you really.
Literally. So that's the first trade. So 1 day leading into tomorrow, 1 day to 0 day iron condor. You get a little bit more premium if you set these up before the morning. You could do something like this tomorrow morning and try and play for that vol crush from 8:30 Central to like 9:30, 10. This one though, you're going to be able to move it much wider out of the money because we still have three hours and change of trading session today, plus overnight risk, plus tomorrow morning. So that's the 0 day trade, or 1 day going to 0 day for SPX.
Now would you say, do you, and obviously we're doing this, obviously real time for the show, but would you say this is your optimal time for like putting this on to get filled, or would you rather do this and later in the afternoon? Like, how do you look at it? Obviously this is a good day, it doesn't matter because vol is a little bit up in SPX, but I'm just curious.
Yeah, I mean, it's a good question. I think really the trade-off is if I place it now, I still have that afternoon volatility. If we're down 80 and we stay down 80 for the rest of the day, this premium is not going to be there. Like, this could come in 50 cents into the close today if we just chop around where we're at now. So if you do place this closer to the close, you're going to have a different price where you can create symmetry around. But at the same time, you might have lower implied volatility to be working with. And for me, because we're seeing weakness in the markets today, I think setting this up, even if we continue to sell off, I would want to lean more bullish anyways, leading into tomorrow. But I would rather just capture the current implied volatility, capture a little bit more time value as well, and set those strikes wider. I'm covering basically a 100-point range in SPX for tomorrow. So doesn't directly answer your question, but I think if you want more room, then you need to place a trade that has more time to expiration. I would say.
I was just curious on like a regular day. Honestly, a day like today, I don't think it really matters much, like you said, but I'm just curious.
Regular day, like you said, if we look at SPX for the rest of the day, we have a little bit more elevated implied volatility, but sometimes we'll look at it at 11 a.m. and it'll be like 9 points, 10 points, in which case it might not matter as much as long as that stays true to the realized volatility. So the next trade is a condor, the stupid, whatever you want to call it, short put financing the cost of a long call spread. So this one I'm going to the December monthly cycle, and kind of a similar idea, similar strikes as well, but like we just talked about, because I'm going to December, I can go another 100 points out to the downside. So this is the 6,600, 6,590 short put spread, and that is financing ultimately the entire cost, almost the entire cost of a 6,800, 6,805 long call spread. So I paid 30 cents for this. My max profit here is $470 to the upside. Max loss and max risk is that downside risk. So the 6,600, 6,590, if we go all the way through that spread and expires in the money, I paid 30 cents. That has $1,000 of risk, which is how we arrive at that 1030 max loss. But this 30-cent debit is very negligible, especially when you look at the raw value of these options. Look at those the put side. Both of those options are basically 10K. The upside, we're looking at 13K. So the fact that I'm trading $13,000, $10,000 options for a 30-cent debit tells me, yes, I do have risk in between the strikes, but this is not really going to move at all. We'll have a couple $100 of risk to the downside if we start to sell off, but this can be a profitable trade well before expiration if we get that move to the upside where my short put spread's losing value, long call spread's gaining value. That long call spread won't gain more than, I would say, $250 to $300 if it goes in the money. But if we do get that move, we could be closing this thing for $100, $150 in the near term. So if we reverse this move that we're seeing today, if we see that reversal tomorrow, this will be a nice trade. I'll be able to take it off. But just want to set this up for a potential reversal. Maybe the market's calming and rallying into the end of the year in December. But those are the two SPX trades of the day. Both are filled. We'll be placing those on the Tasty follow page shortly, for sure.
I like the idea, mostly because of where the downside is. So 6,600, essentially, like I'm looking at just moving averages. And again, I always just look at simple moving averages. But 66.65 is kind of the lower end. I mean, essentially, about 60 handles from here. Think about 50 handles in a way, right? Because right now I saw the same thing in ES futures. About 50 handles from here, 6,700. I think that's an area where we're going to be. I could see that happening. I don't know if it happens today, but I could see that. I could see us going there. I mean, given the sort of nervousness in the market right now, and I think that's an area where we'll kind of sit. Maybe. I don't know how much we breach that. If we breach below that, then clearly something else is wrong that we don't know about yet.
Yeah, totally hear you. What do you got for us?
Oh, something straight up simple. You know me, I'm kind of simple. Robinhood had earnings today. We were talking about it yesterday ahead of time. I did do calendar calls in here. They didn't work out, obviously, which is fine. It sounded like they had pretty good earnings. I think a lot of this nervousness is, well, again, this is the effect we've seen, right? And I know Robinhood is financial, but truth be told, it's a fintech. I mean, I think we know a little bit something about that. And so you're seeing some, you know, it's up, it's been up near highs. You're seeing some fall here. Again, I think this is a similar effect we've seen in a lot of earnings. There's been, even if you have good earnings, unless you just say something that gets the people excited, a lot of these names have fallen on earnings, and this is no different. What I'm doing is, now that it's down, there's still a little bit of, IV, 24 IV. This thing also has just high implied volatility in general. Forget IV. It's in the 60s. And so I'm just selling upside here. I could always use a little bit more upside sale, a little bit short delta, even on a day like this. Figured I'd sell upside. A lot of times we'll see this. After a move to the downside, it takes a minute to get back up near towards highs. So that's exactly where I'm selling. I'm selling near towards highs. Selling the 165 call. I think I did it for 315, 87% pop. A little high on the buying power side, but I feel good about this. 87% pop. You don't get that often, and so selling $35 upside from where we sold it. It's actually it's still right there. It actually dipped to 128 for a little bit, but still around 130. So that's what it is.
I like it. Yeah, and this is another one where you could easily see a couple days of chop and get a big vol crush, and this could come in well before 21 days holding it, or even 1-2 weeks. So I love it.
And it's nice because it's DEES, right? And so it's in that 45-day window, which we all know and love so much.
Yeah. All right. Checking out the markets here, catching a tiny bid. E-minis up or down 76, coming off the lows of 80 and change. Ultimately, what we're looking at in terms of hood, let's check this out.
That is a great question. Yeah, it's a great question about LeBron.
So I'm starting to realize, I've watched Liz and Jenny do this show from here before, and I see them turn around, they're seeing what they're talking about.
No, it's a good question though. Yeah. I would notice this last night.
Do you want to repeat the question in case people didn't hear it?
Yeah, LeBron James has not played a game this year, but the Lakers are 6-2, 7-2.
Yeah.
I mean, it's a legit question. Dude, Luka looks great.
Oh yeah.
He had 35 and 6 and 13 last night, something like that. He looks great. Dude. Yeah. I was looking at, and Austin Reeves. I like his game anyway. He looks good.
He was sick last year too.
I mean, it's time. I think it's time for LeBron. I think it's time.
He might just sit out until playoffs, and then he's like, "Hey, I'm healthy now."
He'll be back for that mid-season thing.
The mid-season tournament. Yeah.
Anyway,
but yeah, hood down 12 points, down 8%. Big red bar here. And when you look at this implied volatility, 72%. Yeah, you're well outside of the implied move here. Implied move 20 points. You're going 35 points the upside. So again, if you get an IV rank or an implied volatility crush here, IV ranks at 24. You could see this thing go significantly lower. If we look at hood.ivr, you can see we were sub-zero. Shout out Mortal Kombat beginning of October. So
I love it.
Yeah, you can totally see it. And then these SPX positions, if we look at what we got here, so the 1 day kind of leaning long, as you can see. I've got about 30, 40 points to the downside before I'm tested, but plenty of room to the upside. So I'm clearly playing for a reversal here to the upside in SPX in that 1 day trade. And then the December trade, we're looking at just inside the expected move, selling that 6,600, 6,590 put spread, and ultimately just going for a reversal here. And again, this call spread right now, I think we could see it appreciate if we get in the money, but really the meat of this trade is from this put spread here. So just routed it for a small debit, see what happens.
As you're on SPX, I got to call this out real quick with the Broken Heart butterfly that we put on yesterday. We have the 6950, 6960, 6980. 7,000 is what we originally had. Got to call out my brother Mike, Polish Hammer. We were so busy here getting set up for the first time doing the show here. I didn't get a chance to look at positions that way, that much, but was able to roll down the 7,000 strike to the 6990. So now it's literally essentially a call condor, if you will.
Yeah.
Right. And 10 points wide, and I got it on for credit. I mean, it's riskless. Literally, I don't have to do anything.
So what did you route this for initially for the credit?
Initially, I think it was $1.40.
Okay.
Yeah, $1.40, and
Cool.
I paid 90 cents to do that roll, that call, and now I have it on for 50-cent credit.
Beautiful.
And again, it's free. I mean, if you would see the actual, like with this. Yeah, there you go. It's more like that. Yeah, there you go.
Yeah, you have something like this. You got the credit,
exactly.
40 cents. So
So yeah, exactly it.
So it's just like this was a broken heart butterfly. The only difference between a broken wing butterfly and a broken heart is we're just separating the short options here. So a broken wing butterfly, you might have 2 of the 6960s, and then you define the risk to the upside. But I like this trade. I like this adjustment because when you collect a credit and you're placing this to the upside, and then you get a washout to the downside of 1 percentage point, and the E-minis, like you said, you picked up $1.40, you paid 90 cents to bring in the risk. Now you have a symmetrical butterfly, or iron condor, whatever you want to look at it as, but 10 points of a call debit spread here offsets completely the intrinsic value risk of the 6980, 6990, and you have this on for a 40-cent credit since you collected $1.40 or $1.50 and paid 90 cents to make that adjustment. So this is literally what your risk profile is now. You make 40 cents to the downside, 40 cents all the way to the upside, but you've got this nice $1,000 profit tent here. And this is one of the ways that you can trade SPX, is if you see a price extreme, like you had this, you put this on yesterday, and you were able to remove the risk. Today, you could throw one onto the downside, and if you get a reversal, you could do the same thing.
So that's what he was saying. I was like, why don't you put one on the downside? I was like, I'm going to wait a little bit. I think we got another 25 to 50 handles here in SPX today. That's just how I feel. And if I'm wrong, whatever. I think we'll win on our upside trades. And if I'm right, I'll get a better price fill. So I'm going to wait a little bit, but it is a good idea. I like the idea.
Yeah. This is what Nick does, and not always SPX, but he'll do this over and over and over, and then we call it like Mount Olympus by the time he's done, because he's just got every strike, and it's just like the risk graph looks like a mountain peak. But
the only difference now that I have the call Condor and the broken heart, I can't sing to it. I can't sing, broken heart, something like that. I can't sing to it now.
But no, I like this as a downside hedge specifically because one of the big questions we get all the time is like, if I want to throw on a downside hedge in SPX or the Qs or whatever, when do I take it off? And if you're using a strategy like this, where on a day like today, you're throwing on a put broken wing butterfly or a broken heart butterfly, and then you have the ability to remove the risk, now you just have that hedge on for free. And it doesn't matter if it expires out of the money because you can still keep that small credit. But if you get closer to expiration and we start to move down towards that spread, it appreciates and you have it on for no buying power. That's another point we didn't talk about. You've released your buying power when you make that adjustment.
I got like $900 buying power back. Which was nice.
So yeah, downside might be something like this. If you did like 6410, 6400, 6380, just like a 10 by 20. and you kind of have a similar risk profile here, but basically the same idea applies. If you route this for $1.50 and then tomorrow you get a 40, 50 point upside move, you could bring in this 63.80, bring it up to 63.90, and you would create that same 10-point wide symmetrical butterfly. And as long as you're doing that for a debit less than $150, you have no risk in the trade. You free up the buying power. This buying power would be $850. You would free that up tomorrow if you got that reversal. Yep. Beautiful. Market selling off a little bit more here, down 87, marking the low of the day.
I'm telling you, man, it has that feel. It does have that feel to it today. And we've obviously heard, I mean, it's always busy in here, but it's even busier on I mean, if we drop another 50, you think it's been loud now, you wait. Yeah. It gets busy. Yeah.
If those platform numbers are flashing faster, that's when you know.
And not only them, I mean, the VIX is over that way. They'll start to get a little bit busy too if we get another, especially if we get into backwardation. They'll get super busy as well. They'll start to get more orders in, right? Because this is that time. Once we get above 20, right, things get a little hairy, as we know.
Yeah. So I was talking to Dylan yesterday about this on Overtime. He was asking like specifically what I'd be looking for in the volatility markets to maybe take my hands off the wheel and see how far we go to the downside. And we're kind of seeing a little bit of that today. But my answer was if we flatten out in the volatility curve, that is a sign to me that there could be more turbulence on the way. And yesterday we had a point of contango between the X, the Z, and the F contract. Now you can see here we're looking at 2020 in X, 2050 in Z, and 2150 in F. So the X and the Z contract have flattened out, which is interesting. But to your point, Jamal, if we go into backwardation where the X contract is a higher print than the Z, now we're dealing with true uncertainty in the markets. And I say this all the time, but you won't get a market washout, like a 10%, 15% washout, unless you're in backwardation. It's just not going to happen. Right. And the same is true to the upside. After the washout, once backwardation flips back to contango, that's when you shouldn't be surprised if you see a rally that starts to come back to normal levels or even highs. So yeah, we are flat. Uncertainty is real here. If we look at the VIX specifically, up 11%, and you can see the choppiness here. I mean, we got as high as almost 30 a couple days ago, dropped right back down to 15, 16. That was when the dip was instantly bought. But now we're seeing a little bit of two-sided action here, sitting at 20. But I want to see more of this. Like if I'm thinking we're getting those 150, 200 point moves back, I want to see more of the VIX in the 30s or higher. This was the April tariff craziness. We had a couple of blips, but it's really been a buy the dip market where you have this one-day blip, it gets erased halfway, and then we just crush. Same thing here in August, crushed immediately. Same in September, crushed immediately. Yeah. And a couple of weeks ago we had a little bit of elevation, but that was even crushed immediately. So it's like the only time where we've sustained a VIX in the 20s or 30s and above was COVID, when everyone was just chilling at home and everyone really that was like
up for a while, yeah.
Max uncertainty, at least in my trading lifetime, of like where do we go from here type feeling.
Yeah, I mean it's interesting. I mean, because again we are hanging out at some elevated levels right now. It's always a stair step, right? Like it stair steps a little bit and then boom, something happens. So I don't know if we're, again, you mentioned, like, look at August. You could see the stair step and then it's flattened. But a couple weeks ago, we had the stair step and we kind of stayed elevated. I think that's what I'm saying. Right now, we're in a very fascinating area because it is a stair step happening. We're hanging right now. Like, we're hanging to the downside. You can see we're kind of hanging around former bounce levels. If we get another 50 handles to the downside, I wouldn't be surprised. But I wouldn't be surprised if we get some positive news. We need some news at this point to sort of make us bounce, honestly. Yeah. Feels like.
Well, government shutdown, so good luck with that.
I know. It's a trip how all of a sudden, but again, it's starting to permeate, lasting this long, I think. still don't believe it really. Like, initially, I really don't feel it's a big deal at all for the markets. But once you start lasting this long, you start affecting infrastructure. You start affecting, airlines. Who knows what else? I think then it could sink into the market at some point if it somehow.
I mean, this is one of the longest shutdowns we've had, and to your point, like you can shut down for a week or 2 or 3 weeks, and people can be okay. But once you have people that rely on these paychecks coming in, and it creates a bigger issue the longer we're shut down. I mean, this is where we're at. It feels like.
Speaking of paychecks, I didn't talk about this with you yesterday. I'm curious what you think. No, seriously, this whole YouTube and ESPN thing. You know about this?
Yeah.
YouTube TV and
it's an
ESPN.
absolute joke. I was ticked off on Monday Night Football.
You have YouTube TV? Yeah, I know, right?
Yeah. Yeah. It's like, what are you doing?
I'm actually surprisingly, what do I want to say? I am happy that YouTube TV has chosen not to do it. Because again, right now, did you notice that it's $20 they're going to give you a credit? $20 credit that they're going to give if it lasts for a month. So basically what that says to me, I mean, and it's like, let's just call it about $80 now for YouTube flat. So they're 1/4 of YouTube TV. I didn't really think about it like that, but that's huge. And they're holding the line because you know what's going to happen. They want another additional $10 if they put a deal, and then all of a sudden it's going to be $30 of a $90 situation, which is 1/3. They're going to go from 1/4 to 1/3.
Yeah.
I mean, that's probably eventually going to happen, but it's made me I love sports, dude. It's made me evaluate how much I'm willing to pay for it. Yeah. I mean, it really has. I don't know.
No, honestly,
I mean,
you thought. Well, I was ticked off. I had to download Fubo. And
which Disney owns, by the way, too.
Perfect.
Remember, they bought that stake. That's what's so crazy. Like, this is actually affecting a lot of the stocks we pay attention to.
Yeah. Well, I'm unfortunately handcuffed because I have NFL Ticket. So I have NFL Ticket through YouTube TV.
Oh.
So they checkmated
Wait, no, they got to have an app, though, right?
I mean, probably. Yeah.
NFL Ticket has to have an app.
Yeah. But this is one of those scenarios where I will not be resubscribing to YouTube TV. And I'll probably, well, the nice thing about Fubo, being in Chicago, is you get the Bulls and Blackhawks games, where you would have to subscribe to yet another subscription if you didn't have it. So the fact that Fubo gives you ESPN, Disney, and the Bulls and Blackhawks games, like that's enough for me to just make the switch. But yeah.
My wife showed me some charts last night about who's benefiting and who's not, and there are like Fubo, their registrations have gone way up. DirecTV registrations way up, right? Because they've always been about sports.
Yeah, of course.
This thing is really interesting, honestly. It really is. I think people should be paying more attention because, again, this is affecting the streaming, where streaming is going, how things are changing.
Yep.
I'm like super interested in it.
Yeah, I think from a regional standpoint, I think you will have a ton of people going away from YouTube TV in Chicago and going towards Fubo just because of the access to Bulls and Blackhawks games.
Yeah.
That was my first Bulls game that I watched, where they came back from the 24.
Yeah, I haven't
that was
seen
literally the first game I watched all season.
Against Philly, right? And Vooch hit the game winner in the corner? Yeah.
Yep. E-Mini's chopping around here. Not too much of any movement. We've had a 10-point range since we've started the show here. Do we want to pop over to the YouTube chat, see if we got any people with some questions?
Yeah. I haven't seen as many. Actually, I haven't seen as many questions. Most of them are marveling us being at CBOE, actually, and a lot of people seem to know the area. They're right. I saw somebody mention about the Federal Reserve Bank, which literally is right across the street.
Yep.
So we'll have them on the show at some point.
So I went to DePaul University, and I walked by the Barnes & Noble, where you like walk through the Barnes & Noble to go up to DePaul.
Yeah.
And there's a Chipotle across the street. I went to school there 15 years ago. Chipotle's still there. All the other places around Chipotle.
You were there? I didn't realize you were there.
Oh, yeah.
Yeah, and 15 years ago, I was here.
Yeah.
That's funny.
That is funny. But I sent a picture to my friends that went to DePaul with me, and they're like, "Are you going to Chipotle?" And I'm like, "You bet your ass I'm going to Chipotle after this." But yeah. Speaking of Chipotle, can't catch a bid.
Cannot.
Multi-year lows here. Let's look at a monthly chart. Split adjusted here.
It's funny. Everybody's talking about a lot of the buildings around here. This is awesome. I mean, the Rookery building is actually one of my favorite buildings.
Yeah.
It's actually right over there. Yeah, you're right.
Well, Chicken Hut's right around here too.
Yes, it is.
The TP special.
Yep.
That was always funny when TP would come into the office. He would get to request what lunch we had, and it was always Chicken Hut. And like half the office despised Chicken Hut because it was like salsa, half a chicken.
It's not really that great, but
I mean, it's fine.
Honestly, there's not really many trading questions today. These guys are just enamored with us being on the floor, which is nice. Appreciate you guys, man.
Appreciate it. It's fun. But yeah, do you have any position on Chipotle? I feel like this is one of those.
Dog, no.
Yeah, I mean, I tried to buy the dip. Let's see.
I feel like this is one of those situations where I feel like, because it's been nothing but bad news ever since they split. And that's unusual. Usually when you split, it's usually good. Ever since they split, it's been nothing but bad news. I mean, you can see it in the chart.
Yeah, this is a monthly 20-year chart. We are back at 2023.
So there you go, folks. Splitting is not always good.
Yeah. 2023 lows here. Hasn't traded sub 30 since March of 2023. But yeah, I mean, this is a pretty disastrous chart here.
So outside of sentiment, I got to say, like, outside of just overall sentiment, I got to say, once again, I'm almost a little bit confused, opposite of yesterday, because, today we got markets down, we got gold down, we got Bitcoin. Those three have seen, I mean, if you're paying attention for the last, 4 sessions, they're trading the same, and the dollar is doing different things. On Monday, was it, or Tuesday, the dollar was up, right, and they were down. And then yesterday the dollar was down and they were up, and now today the dollar's down and they're down. I don't know what the heck's going on. It's hard to find a trend, but the only trend you can see is that SPUs and gold and Bitcoin are trading in the same direction over the last couple of sessions.
Yeah, good call out with gold. I mean, it seems to be finding this chop range around 4,000. But to your point, if you look at DXY, we had 1, 2, 3, 4, 5, 6 trading sessions in a row, making higher highs from the open, and then today we get this washout. I did put on a couple of Tasty FX positions yesterday with Glenn, and if we take a look here, somehow I'm losing on both of the US dollar positions, which feels impossible because I'm long the dollar franc and I'm short the Aussie dollar, or I'm long the Aussie dollar, so I'm short this denominator by proxy here. How is that possible? Well, if you have a rallying franc and a selling Aussie.
I mean, is the Aussie down? Is the Aussie somehow down? It must be, right? Look, I don't know.
Yeah, it's down 0.5%.
There you go. Yeah.
Perfect. So we'll wait on that. We'll see if we get a little movement in my favor. But
see, it is for this reason that I have the opposite positions. Remember I said yesterday I'm actually short dollar in the Tasty FX count, but I just put on that long dollar via the short the short delta, long put spread in the euro for that reason, because these currencies, man, they're just different.
Yeah. I'm going to send Glenn an email after this.
Yeah.
Like what's happening here?
That's right, Glenn. Yeah. What's going on?
E-mini's taken a bouncing off the lows a little bit here. Over the last 5 minutes or so, we've had a 15-point rally from the lows. Bitcoin catching a bit as well. If we look at the 1-minute chart, NASDAQ trying to rally, having a hard time. But yeah.
Oh, we got a little question here. Somebody's asking me about Palantir. Call calendar spreads here on Palantir. I like the 1226, 190, and selling next week's. I don't blame you. I mean, typically we don't look at weeklies outside of earnings, but I feel like Palantir would probably be one of those that actually has. They're looking at basically the end of the year, 1226 weeklies, buying those and then selling. They're looking at the 190 strike. I like that. I mean, I don't blame you.
Long January?
Well, they're looking at long D's, that D's 26 weekly. But yeah, I would probably do long January. I'd probably do just long Jan, short D's, right? I mean, why not?
Yeah, I mean, so these calendars, like especially into a big sell-off like this, I'm just looking to capture somewhere in between this range.
Yeah.
So for my strike selection, I would go either 190 or 200.
I would do 200 for sure.
Yeah, I mean 200, you definitely have the most upside profit potential if you get that reversal.
Yeah.
190 just brings you back to where we were yesterday. But let's take a look here. So if we do the 200, the D's is trading for $600. The Jan is trading for $9, so that's a $300 calendar if you're long Jan, short D's. Is there enough premium to go to Nove? Maybe. So you could do something like this, like long Dece, short Nove.
Yeah.
This will be a faster moving trade because you only have 2 weeks in Nove. So if it takes you 2 weeks to get back up to 190, this option expires worthless. If you go long Jan, short Dece, you won't have as much profit potential because Dece has obviously a much longer time frame. But Nove is trading for $2, and
which, quite honestly, that's pretty big, to be honest.
Pretty good, yeah.
That Nove 200 with 15 days to go, trading $2. That's probably almost a better trade. And you can just hold that one until it probably likely expires, and then you can eventually just roll into the short upside Dece.
Yeah, and I think the fact that we're seeing such a big move to the downside today in Palantir makes me lean a little bit more on the aggressive front, where we can sell Nove, buy Dece. But yeah, if we just look at this analysis here, let's throw up the curve analysis. So this is a risk profile for just today, not adjusting anything. If we go to, let's go to next Friday. So November 14th, next Friday. And then let's crush implied volatility a little bit here. Let's do 5% here. Let's do a couple percent here. So yeah, you're looking at, if you get a slight rally back to 190, you're looking at a $300 profit potential here. And this is all because your 200 is going to have a strong decay. And of course, if you get closer to November 21st, this option is going to be a lot less sensitive to directional movements because it's going to be 0 at the end of this day. So let's put this in our back pocket. If we go to long Jan, short Dece, same strikes here. You're collecting a little bit more from a ratio standpoint. You're collecting 6, paying 960, but like we're talking about, you don't have as much profit potential to the upside. If you get a rally to 190, you're looking at $200, and that's because your short call in December will appreciate against you a lot faster than the Nove will. So
there's a lot more volatility value to it.
Yeah, but you have a lot wider range to be profitable here, because if you look at the cost of this option by itself, $1,000, but you're only paying $350 for the whole package, that's where you get the width of profit potential. The December Nove is going to be a little bit more narrow because you're not reducing cost basis as much. Here you're reducing it by 60%. The previous trade we were looking at, you're reducing it by 30%. Which one would you do? I'll do the other, and so we can compare and contrast.
You know what? I would.
Or would you do none?
No, I definitely would. I would probably do, given where stock is right now, given the type of move that it can have, you obviously see it's moving down $11. We've seen it move up big. I would probably do the Jan. I would do some 200 strike Jan Noves.
Okay.
And then if I really believe in it, I'd do some 215 strikes Jan Dece, right? So you can layer into these, and that way, the further upside I go, if you really believe that Palantir is going to bounce back to 220 or whatever it might have been, I would do those. I mean, again, that's $50 away, so I would give that a little bit more time. Essentially, right? Forget options. Think about stock. How quickly could this bounce back up to 200? In that case, I'd probably do the Jan Nove, right? How quickly could it bounce back to, I don't know if it ever got to 220 or 250, but if I'm using those strikes, then I would go Jan Dece, right? So that's kind of how I would do it.
Fair. I'm gonna do the Dece Nove 200.
I gotta look and see if I have any on. Do I still have some on?
I'll do the Dece Nove. Try and capture this really aggressive theta decay in the 15-day.
Yeah, I like that too, actually.
We'll do it for 410. Instantly filled.
Right now I have a 230, but it's Jan Dece.
Okay.
For the exact reason I described.
Yeah, but really, the plan is if we get a reversal of this move tomorrow, even if it's not this dramatic, if we get a 6-7 point move tomorrow, this trade will probably be a $150, $200 winner. And you can see this here. If you get a 10-point rally, so just looking at what the 190 is trading for about $9. This is trading for $6. So let's call it $300 here, and then in November, the same assessment, you're looking at, let's say, $150. So yeah, $150 winner if you get a reversal of this move tomorrow.
So we go with the Jan Dece, is that what you did?
I went D's Nove.
You went D's Nove.
But yeah, if you want to do Jan D's, then we can compare the two P&Ls.
I'll do the Jan D's for $350.
Cool.
Let's see. Come on, give me a fill. Come on.
Give him a fill.
Somebody had a question on URA. URA. Any thoughts on URA? Would it be a good time to take a long position? I'm short strangling here personally. I think this ball's a little high.
Yeah, I mean, uranium ETF, if you are long-term or even like mid-term bullish on it, then yeah, you're seeing a big price reduction here. We hit a high of 60, sitting at 47. So yeah, I think when it comes to products like this, you could do something a little different. I mean, you could go just straight up calendar route. It would be a very cheap calendar, and I can tell you that already just because you've got 66% IV and Nove, 61% IV and DECE. But if you just look at this implied move here, $5 and change, $4 and change for November, $7 and change for December, and you have 3 times the amount of time here. So if you were to multiply 450 by 3, you're looking at 1350, and that's clearly not reflected in the 750 move we're seeing in DECE.
Yeah.
So you have way more implied volatility in Nove relative to DECE. So long way of saying this is going to be a really cheap diagonal spread and a cheap calendar spread as well. Let's just look at same assessment here. Like, let's look at the 55. Let's try and just cut this in half from the high to where we are now. Let's try and get back to 55. That's going to be long DECE, short Nove. So yeah, you can throw this on for $1. Paying $1.60, selling this for 45 cents. I would rather do a little bit more meat on this thing and get closer to the current price. So long the 50 call in DECE, short the 55 in Nove.
Yeah.
This is more my style here, especially with the heightened implied volatility in Nove.
Yeah.
And yeah, I mean, you could do the same thing Jan DECE if you wanted to. Buy the Jan for $3 and change, sell the 55 in DECE for $1.30. So either way you cut it, it's $2 debit for a 5-point wide diagonal spread. The Jan DECE is more conservative, so I think I might go this route here.
That's even better, actually.
So yeah, we'll throw that on. We'll get long. We'll buy the dippy do here. Let's see what you filled at. $1.95. The low price of $1.95.
Immediate. We got to have it. Ma, we want the meatloaf now.
E-minis trying to get into the 60 handle. Down 60. Catching a bit.
Wait, what? I have a long Amazon 250 as a result of the calendar trade. Okay, so they're long a DECE 250 call. Any advice on when to sell? That's all you got? It's just a 250 call? Where's Amazon right now?
244.
244. I mean, wow. I hate telling people when to close out calls. It's hard.
So what's the?
I think they had a calendar. I think they had a 250 calendar. Now they just got the long.
Okay.
Long DECE. I mean.
So they probably had like.
Yeah.
The
probably.
1 day.
I mean, personally, I probably would have closed out of it already yesterday, probably, just because. Why not? Because you just never know when you're going to get days like this.
Yeah.
But I am not going to be Monday morning quarterback for you. Like some people have been for us today. I'm not going to.
Yeah.
It's totally your call. But I mean, you just got to understand your risk, right? Like, is this something that you're holding against other positions here? Are you short some other Mag 7s, or are you just literally long an Amazon call? I mean, again, understand your risk right now. I don't know what the rest of the day looks like. Personally, I think we fall, but that's just how I feel. Again, we've already bounced some. I think this is a head fake. I think we do fall.
Yeah, I think for this position, especially if you had, I'd be curious to see what the total debit is on the position. I think that is really the driving factor here, because if you have this call on for a debit of like $500, let's say, and you're up $300, maybe you take it off and you restructure the position. But if you have this on for $500, you could sell the 255 in Nove against it, pick up another $300, you reduce your basis down to $2 and change, and you leg into a 5-point wide diagonal with minimal risk, and you'll still benefit to the upside if you get a reversal. So really, if you're long Dece, the only adjustment I would make is selling something in Nove. I don't like verticalizing it. I think you just take the trade off if you're just going to turn a vertical spread.
Yeah.
Especially if it's a profitable trade. But if you're trying to hedge, I don't mind selling a 15-day into a move like this, where you're getting a little bit of a boost in implied volatility. This option lost $2 from yesterday, but I mean, you still are in a decent position as long as you have a debit that is less than $500 overall on the position.
Yeah, I mean, a long $8 call option in the 45-day window is, it's a little risky.
Yeah.
I use that word lightly because it's really not risky, but it's risky. I mean, that's $800 just, sitting there.
But yeah, if you can let us know your debit right now, we can take a look. But as you can see, the current price, if you get into like $6, you have a narrow profit range. But if your debit is only like $350, it's a totally different trade. So let us know what the debit is.
Somebody got a question on Celsius, CELH. Has it gone too far here?
Jesus.
I mean, they only just have the energy drinks, right? Like, that's it? Is that their only revenue stream? Is there something else I don't know about?
I believe so. Well, they had that mess up, the flub with the Celsius drinks that didn't have the black top, and they were labeled as Celsius, but it was actually High Noon. It was something like that.
Really? No, I didn't know about this.
If you look it up, it's actually hilarious. Well, hilarious to me because I wasn't getting drunk at work trying to get an energy drink. But yeah, it was something like the black top on the Celsius. They like mislabeled it, and it was actually a seltzer, a vodka seltzer. Yeah. So a different kind of buzz at work if you're trying to chug that. But yeah, this is a big.
I've got enough of these already. Names that got rocked on earnings that I'm selling. I mean, CarMax is one of them. That's a dog today. DraftKings is another, which bounced today. I got FI. I don't need another, but I could see why you would want to sell a put in here, and it's not that expensive neither.
Yeah, I mean, this is a big washout. I mean, for me, this is one of these where if you want to sell a put, you have to be willing to take the shares here, because this premium. So what I'm thinking is, like, this premium here is reflective of a 6-point move right now. We're seeing a 16-point move today from earnings. So this implied volatility isn't really high enough for me to want to take undefined risk. But if you were trying to take 100 shares at a lower basis, then sure, I think you could do something like this. But for me, I think if I'm placing an upside trade, I'd rather do something like diagonal spread, where I'm buying the 45 in Dece, selling the 50 in Nove. For a $200 debit, you can make a couple $100. And this is another thing, like the max profit on this trade, a 5-point wide diagonal with a 250 debit, is basically $200, we'll call it. If you are selling a put in Dece, your max profit is $200 with all the downside risk. Like, this thing could be down another 15 points tomorrow. You just don't know.
Yeah.
So when we have these big liquidity washouts, I prefer to keep it defined risk. And yes, implied volatility is a little bit elevated here, but that's why you offset it with a short option. Like, if you buy Jan 45, you can sell Dece 50, same story. So I would much rather do a diagonal spread where my risk is defined. I'm still taking advantage of the near-term implied volatility that's still a little bit elevated, and I'm inventorying delta in a later cycle. So I would do something like this. And you know what? Maybe I just will. Long Jan, short Dece. 50 strike is right here. We've sold off here, but if we get a reversal to 45, 46, 47, this could be a $100 winner tomorrow. And this is a really small trade, so I'll dig in. We'll get in.
Yeah, and that's why I mentioned Pfizer, because that's exactly it. Like, that's one where it fell on earnings. It's still kind of hanging down the lows here. And I don't know what these guys, something's going on behind us.
Craziness.
Yeah, craziness is what it is. Where we're here. I mentioned Fiserv because that's been one of those names too. Like it's dipped below, it's dipped down low, and it's kind of hung out there, still hanging out at the bottoms here. I mean, eventually it's going to find the bottom and probably bounce back. But you know, to Mikey's point, you got to be willing to take those shares if you're going to sell that put. At least be aware of that.
Yeah, speaking of DraftKings, I saw some news hit the tape this morning that ESPN and Penn got rid of their relationship, and ESPN is now partnering with DraftKings. And it's interesting because the Penn-ESPN relationship still had like 6 or 7 years on the deal, and they were just like, nope, we got to move immediately. So
what
that's
was that about?
I don't know.
I don't know neither.
I didn't actually read the article. I just read the headline. But yeah, I mean, DraftKings sitting at lows.
You know, ESPN is ESPN is, in a way, and this might be a bad analogy, but they're almost like OpenAI in a way. Like they make all these moves, but they're not. They're owned by Disney. Like, but they're like the big engine for them in a way. They become that. Yeah, it's kind of interesting.
Yeah. But yeah, DraftKings sitting at 28.
Yeah.
Crazy.
Well, it needs to go higher. I still have a couple of short puts in here, the 32 and the 35. Come on, keep going.
Come on. A couple minutes left here.
Yeah.
Do we have any other last-minute questions we can try and tackle?
Let's see. Somebody, I guess this ACHR earnings, certainly not one that I trade.
Archer Aviation?
Yeah, I don't know. You can do a quick analysis on that. Someone's got a question about it. There's 2 questions, actually. I know 2 other ones that might be better than ACHR. It's not one I've ever traded, but this is another low-dollar one, right? You either buy the shares, whatever. There's a question about a Google broken wing butterfly or diagonal to the downside.
Yeah, Google up $1 somehow.
And a question about cattle once again. So it's dealer's choice. You choose.
Yeah, let's do Google.
With the short time we got left here.
Yeah, what do we got in Google?
Yeah, they're just asking about no specific strikes. They're just wondering if it's a good idea to do a Google broken wing butterfly or diagonal to the downside.
To the downside.
Yeah, it's surprising strength in here today, huh? I didn't realize that. Wow.
Yeah, this is 36% implied volatility, pretty low, all things considered.
This thing hasn't even sniffed negativity today.
Yeah, I mean, like these are in this kind of market, I think I would stick to defined risk, diagonals. Broken wing butterfly is possible. I think the problem with a broken wing butterfly in Google specifically is you're dealing with 36% implied volatility, so it's just going to be really hard to make this work outside of like a 5x10. So like if we look at this, I can only do a 280, 275, 265 in December for $1. Like I can't do this wider because it's just not going to set up well. So like a 280, 270, 250, you pick up 50 cents, but the issue you run into is, like you did with your trade, you're not collecting enough credit here to where if Google rips higher, you won't be able to move this 250 to 260 for a debit less than 40 cents.
Yeah.
So you're just going to have this risk on unless you convert it to a debit trade. So any product that's under 50% IV, I really lean more towards diagonal and calendar spreads because you're dealing with super low implied volatility relative to the stock price. Like you can buy these options for $1,000. This is a $300 stock. So I think to the downside, a 280, if you're going D-Snove, 280, 275 for $6 or 280, 270 for $7. Like this is more my wheelhouse. You could go calendar spread too for less than $500 and just mess with these strikes. But that's a shorter term one that's on the table. If you want to be more conservative, you could do something like long Jan, short D's, and that will bring your basis down a little bit. So just depends how much risk you want to take. But yeah, I definitely like the diagonal or calendar spreads a little bit better than the broken wing butterfly here just because of the low IV.
Nice.
And then yeah, ACHR, $9 stock, not much to do here. I think you buy the shares if you're playing it to the upside, or you can buy call options. Like these $9 stocks, like this, there's no reason to get cute here when you can buy a Jan 2027 option for $200.
It's just way cheaper.
Yeah.
Man, I mean, what a great time. What a great day to have a show from the CBOE floor. It's been awesome. I mean, thanks to our partners at CBOE. This has been great.
Totally.
It's been a homecoming of sort for me. It's been a great first day to you. What are your thoughts here as we round out the show?
Energy's electric. Love it. I think we got lucky with a little bit of market action here to the downside, a little turbulence. We'll see how it is when the markets are calm. Maybe there'll be people behind us watching the show, seeing what we're talking about. But yeah, I think going forward, we're going to be trading SPX a lot on this show. I think it makes a lot of sense, and a lot of people out there are trading SPX 0 days anyways. So we'll continue the SPX theme for sure. But yeah, it's been a pleasure. Thank you so much. Thank you guys at CBOE. But yeah, we'll pass it along to the next talent at Tasty Live. If you want to join us, we'll be back tomorrow. Nick and I are doing the morning show tomorrow morning, so tune in for that. But yeah, thanks so much for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. But stay tuned. We got plenty more content coming your way on Tasty Live on the YouTube channel as well as the website. And we will see you next time. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
What is going on, everybody, and welcome back to another Risk and Reward. Today's Friday. It's been a pretty volatile week. We got vol up a little bit. We're going to get into all that, a little recap on the week, see what's been moving, and what we'll keep an eye on for the next week. Before we do that, Brother Gus, how are we doing today?
Doing good. Hair was not cooperating this morning, so we're looking maybe a little bit messy here.
Going on.
Maybe the windblown look is what I should have been going for all along. We'll see. But yeah, I'm doing good. Got positions moving in the right way for me. Kimberly Clark took a nice little bounce for me as expected, so can't complain about that.
I keep thinking
it's a Friday.
Talking about Kim from chat. Every time you bring up that underlying, every time I think about that. But yeah, it's nice that some of those are playing out. It is a Friday, some elevated volatility for the day too. So it's giving us some new ranges to play around in the market with. We're always all-time highs. We're going to see what the market wants to do from here. Maybe we stagnate a little bit, and then maybe we see another all-time highs. Either way, we're going to see something. So I think that uncertainty is going to be a little exciting because it seems that the sentiment of the market is shifting just a little bit. So we'll see whatever it wants to give us, especially with the government shutdowns. Yeah, go ahead.
Oh, no, go ahead. Sorry, go ahead. I was just going to say, yes, Kimberly in chat, obviously the most important Kimberly that we have. It's sell-off time now. I mean, I've begun to pretty much fully move off my horse until proven otherwise. I think that we have been proven otherwise at this point. This is a little bit more sustained of a sell-off than I would have been looking for at any point in this until proven otherwise thesis. So I may have waited just like one day too long to start my rotation out of things. I started rotating out of things Wednesday of this week, and then really kind of aggressively began to rotate out of some of my longs, particularly things that seemed, irredeemable yesterday. And I think I should have started that process just one day sooner. Obviously, hindsight's always 2020. The sell-off wasn't particularly pronounced until Tuesday, Wednesday, but I did wind up losing a little more than I had anticipated on some of these positions. But to toot my own horn a little bit, I did do a fine job holistically, and despite this prolonged sell-off, we are just break even today. I have properly rotated into some short delta, gotten enough of the irredeemable long delta off that things are going okay today, and it's helping me out too that Starbucks has taken a nice bounce, which I've been waiting on forever.
Oh, Starbucks. Yeah, we'll have to get into some of that too. What was over there in Starbucks? Was that a put spread or what was the dates on that one?
Earnings today is the catalyst itself. I have a 3x2 short put vertical expiring in June. So I'm short 3 80 puts and then long 2 75 puts. So kind of skews your BP ratio a little bit there, but I like to do the 2x1s and 3x2s whenever I'm, particularly convicted about one spot or another. I was particularly convicted about Starbucks when I put this trade on, and they were a little bit down in the doldrums, and I really like Brian Nickel. I think he's going to do good things. And they've kind of just stayed down in the doldrums ever since then. When I first put the trade on, which was back in May, I thought I was a genius. It immediately just went running up to 97, and I was like, there's no way this loses. We tested 100, and it since has just gotten whacked back down to 80, but we took a nice bounce from 80 up to 84 today, so things finally moving in the right direction for me a little bit in that regard.
Yeah, no, there's a lot of nice volatility in there. And I mean, this one's volatile. Even with that bounce, vol still expanding a little bit, sitting at around 20. So it's very active. The premiums are still premiuming in there, if you will. But with that being said, No, go
I'm
ahead.
pleased it looks like we're not going to give it back either. Because if we're not going to do the thing where we go earnings gap up, insta sell off on a day that's as red as this one, I don't think that it's going to happen. So this does seem to be a sustained move, which I'm pleased with.
No, I got you. We'll see how Starbucks digests the rest of that news.
Guess we're only 3 hours into the market.
I got to ask though, headlines. Airlines have been headlines as of recently. You got any thoughts on those? I've been meaning to take a little bit more of a peek at American Airlines, United Airlines, but it seems like this whole fiasco, the chaos surrounding the airlines, sentiment seems to be picking up a little bit. You seen some of those?
I have seen a little bit of that. Is there any substantiated reason for this beyond the UPS plane? Was there a catalyst that's causing this turbulence with the airlines? No pun intended.
From what I've seen and gathered, a lot of it's stemming from the government shutdowns for the most part.
Sure. The FAA. Yeah, that's right. The FAA just restricted a bunch of flight paths and all that yesterday. I remember. I don't know. It's an interesting spot, and airlines have kind of been in an interesting spot. I mean, really, since COVID, it's felt like I would say like since COVID, even coming out of COVID, I guess, like obviously if you bought anything at the bottom of the COVID dip, it would have worked out for you. But ever since then, I've just sort of had this, bearish sentiment surrounding airlines. I wouldn't even say overwhelmingly bearish. It's just not things that I would want to scoop up for my own long-term portfolio. I don't know. It's an interesting spot. And I also think it's really interesting that it's now, I mean, Boeing obviously is getting hit with the sector sentiment, but we went through like a 2-year period where it was always all eyes on Boeing, and the commercial airlines weren't getting hit as hard when things would happen that had Boeing headlines, and now it's rotated to where Boeing is coming down a little bit on the sector-wide sentiment, but it's mainly the commercial airlines that are getting pointedly hit in the news cycle rather than Boeing. So it's nice little trade-off there. I'm sure Boeing is licking their lips at that one.
Oh yeah, most definitely. I was kind of surprised by the lack of volatility, directionally speaking, in United Airlines, American Airlines. I was kind of surprised with all the headlines. I was like, the market is looking like it hasn't even heard these headlines the way the stock is moving. So maybe it'll be a little bit of a delayed reaction. I don't know if this is going to escalate or not. I know we're around holiday season as to why it's escalated a little bit, but I wonder how far it's really going to get into November, down into December, and those kind of things. So it'll be another story we'll circle back around to. But with that being said, we did a little bit in the portfolio today. Really not too much. We took off a QQQ call spread. It was just a $5 wide, nothing too crazy. We took that one off near the lows, and then we'll see if we get a little bit of a short-term bounce, right? The market can do whatever the market wants to do. The market has been very impressive and surprising in the directional volatility we've been experiencing to the downside. So with that being said, today I got on a little bit of long delta. I sold an out-of-the-money call spread on QQQ. This one expires within 14 days, so we're hoping we can get a little bit of a pop off of this aggressive sell-off that we've seen. I'm still a little bearish, but with how far we've gone to the downside in such a short amount of time, I feel a little bit comfortable just getting on a little bit of long delta. Again, it's not a very large position, just $5 wide, nothing crazy, but I would say that was most of the position managing today, taking off some short delta, getting on a little bit of long, and kind of see how things play out. But that was for the indices at least. Other than that, Baidu's been kind of boring over here, Gus. Baidu, beyond one of the other names we were touching on heavily last week, 42 days left till expiration, and it's just another slow mover. And then UNH, I would say nothing too excited over here on my end, or too exciting over here on my end, more of just a reposition and manage kind of day. So that's what we're looking forward to into the next week.
Yeah, it's been similar for me as well. As we come off some of these lows, I mentioned that I'm rotating out of long delta, and such is true. I definitely am net negative delta. I'm 52 beta weighted delta in my portfolio right now, which you guys remember just 2 weeks ago that number was getting close to 100. So we've pretty much slashed that in half. But at the same time, as you alluded to, this is now starting to present some buy spots to the long side as well. So I've been keeping my eyes open for those spots. I did liquidate one of my Rivian contracts. I had 3 naked leaps just staggered at various strikes and expirations, so I sold my 20 strike call. So I'm now just holding a 12 call for September 2026 and then a 25 call for January 2027. So that's where we're at on Rivian, because this company disgusts me. It can never,
I was waiting for
ever
it.
It can never have 2 green days in a row. What does a guy have to do to get 2 green days in a row out of Rivian? I do not know. But we're just immediately giving the gains right back, as it does so well. I promise you it'll bounce right off 12 when it gets down there. So anyway, while we were up in the top end of this channel that Rivian has found, I did decide it would be a good time to liquidate that. I got short some Affirm yesterday, posted this one in the follow feed. Hand up, did not realize Affirm had earnings after the close yesterday. I would have probably waited until after those earnings played out. Not probably, definitely waited until after those earnings played out to get short here. But sometimes you miss things. So Affirm, rather, still talking Rivian. Affirm had a pretty solid earnings call and bounced all the way up to the 73 range off of their 66 close yesterday. But it's since pretty much given all of those profits back to be close to unchanged intraday, though it is still up 7% off yesterday's action. But Rivian, yeah, I'm having my big short moment with Rivian. Rivian, man, why do I keep saying it? Affirm. I'm talking about Affirm, the buy now pay later service. I'm having my big short moment with Affirm right now because I learned that this company, I think these BNPL services are kind of a bubble anyway. I think that one of them is going to default sometime in the next 3 years. And I learned yesterday that Affirm is trading at a 527 forward-looking PE, which is insane to me for a company that I do not think has the same prospects. One of my soapbox yesterday. But yeah, didn't realize they had earnings after the close, so getting bit a little bit there.
No. We always appreciate the soapbox because a lot of us are I think, of the same sentiment. So we love hearing it.
The buy now pay later services, just as a whole, I mean, value investing aside, I tweeted that trade yesterday about how I was getting short Affirm and how I thought it was kind of a bubble, and I saw somebody pop into my mentions and say, clearly you don't know how value investing works. I do know how value investing works, and that's why I think that this company is overvalued. Yeah. This is what value investing is. So yeah, I don't know, but the value part aside, this BNPL stuff, it doesn't seem sustainable. You're just continually giving high interest small loans to the what's the verbiage I'm looking for here? Least desirable borrowers in the world, people who probably have already maxed out credit cards and can't get another one, whatever it may be. And I'm just not buying it. I'm not buying that all 3 of these services can stay viable and will not pop.
No, it's one of those things to where, honestly, I think this type of practice is a little predatory because, to the point that you just made, they know the exact demographic that they're looking to target, and they understand what the outcome of this is, and hence to why they thought this was going to be a very, profitable venture that they could probably take on. But they can't be surprised that these conversations were going to come up, and the way that I've always seen them is that they're predatory. And I'm very blunt sometimes, and this is just what it is. I think the buy now pay later services are predatory because they know who they're going to affect, and they know the outcome before it even happens. So.
Yeah, and I would love to jump in and get defensive and say, oh, well, there are good use cases here and there, and there are, sure. If there might be specific, right? Yeah, there might be specific one-off cases where it might make a little bit of sense. Your dog tears up the living room chair, and you'd rather take 3 months to pay off a new chair for the living room, something like that. Even then, no, it's like, should we really be doing that? Do you have an emergency fund ready for this situation? Whatever. But that said, it's just I really didn't realize how predatory these things were and how crazy this was. And part of what really got the gears turning yesterday was I started going to the r/Klarna, r/Afterpay, and r/Affirm subreddits. And holy cow, guys, if you ever want to feel better about your own personal finances, just go to these subreddits and take a scroll, because it puts fully on display, I guess, twofold, whatever angle you want to take, either the insane financial irresponsibility of some people, or the predatory lending practices of these people, of these providers, whatever angle you want to take. But yeah, I mean, I'm scrolling through there, and there's people that have $11,000 and $12,000 balances with these people for 60 purchases, and it's like, how do you even find yourself in this spot? It's a short-term loan. It reports way worse than missing credit card payments on your credit report, and yeah, people are just going to destroy themselves. And there is an angle to be had, a Patrick Bateman investing style angle, if you will, which is, man, they are going to have so many people on the hook making payments to them for life. Like, this company could be really strong in that regard. But if people default, and they're just going to sell those loans off for pennies on the dollar to collectors, who will then try to go do whatever they can. But it's not like having a bunch of people in default really means that your company is making a bunch of money. That might be the case if you are a credit card provider, a bank, a car dealership, situations like that. But when you're talking about people not paying off their McFlurries and their Jordans and it's whatever it may be, that's when it starts to get problematic to me.
Yeah, no, I mean 100%. And again, they're predatory, and it is one of those things where you just kind of question, how does something like that find so much success? Because I mean, they're popping off. Like, we're talking about them for a reason. They're being utilized. There's probably been many other companies that have tried these buy now, pay later services. 90% of them didn't work out, but we're talking about the 10% that are working really well. So we'll keep our finger on it. I know Affirm was really popular a little bit after 2020. And I remember when they IPO'd, and it's just funny, we're still talking about these services. But now we have a little bit more data, right, to go off of to kind of see the effects. Or more so, I feel like we're kind of in the process. Like, we're not even really crunching the data. I think we need maybe another year or two to really, crunch the data and see what the effects of this are. But I think we're in the present moment of seeing how these buy now, pay later services are going to be affecting many users that are using them.
Oh, yeah, and I'll make a really interesting comparison, too, something that dawned on me while I was laying in bed last night, is I think that, and this is, hear me out, I think that these buy now, pay later services... I think these buy now, pay later services are very similar to the legalization of sports betting and widespread gambling legalization. It's roughly same timeline. They both emerged around the same time. SCOTUS repealed the gambling thing in 2018, and these companies started to pop up around 2019, 2020, really rose to prominence in the pandemic when people were using their stimulus checks and doing all their online shopping, all that good stuff. But both of these things popped up at the same time, and in both regards, I feel that we have not yet had enough time to fully understand the gravity of what these things have done. You look at the buy now, pay later services, and I've known people personally. There was one girl that I knew well in college who really, really, really got herself into serious financial dire straits with these buy now, pay later services. If you go scroll through any of the subreddits that I mentioned earlier, you will come to find that there are hundreds, if not thousands, of these people around the country. These things have not been fully priced into the economy yet. And I think there's a lot of parallels to that with the gaming stuff, with the gambling stuff, where you think, oh, if we legalize sports betting, we're going to be able to regulate it, and it will be so much safer, and we can keep tabs on people and make sure that there's not these scummy bookies driving people into financial ruin, as if DraftKings doesn't also want to drive you into financial ruin. But then what's actually happened is there was this thesis that it would be like weed, which is that only people who were already gambling are going to continue to gamble. They will just do it legally, 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 do it. It was just the same people started smoking weed, and it was taxable, and that's good. Right. That's something you should legalize. Right. What's actually manifested with gambling and with these buy now, pay later services is that now it's the opposite. It's that everybody has realized that these things are accessible to them, and in fact, many more people who would never have done these things are now doing them because they are so legal, because they are so pushed on you. They're always in the cultural zeitgeist. And I think that 5 years from now, we will seriously start to see the effects of people being driven into financial ruin by both of these things. I think there's a lot more similarities than people realize.
That's a really good point. I think it's going to bleed into other facets that we're not even recognizing right now. And interestingly enough, it does seem that this is the perfect recipe, right? Everything you brought up about the sports betting, how that got popularized around the same time window as buy now, pay later services. Economically speaking, and other external factors, it's almost a perfect recipe for things like this to succeed. Like the other day, I was grabbing some food, and the lady that was handing me her food, she didn't recognize I walked in, and then she kind of got up. She goes, "My bad, I was managing the thing on my phone," and I was looking. I'm like, man, she's straight up, sports betting. She's watching the. It was like a Monday night. She was watching the game too, so I was like, all right, this is interesting. But at the same time, I just think like, why are these things getting so popularized, especially when individuals' disposable incomes is at its lowest that it's been in a very, very long time, and debt is the highest it's been in a very, very long time. And we see very specific industries popping off right now too. So long story short, it just seems like it's a perfect recipe for these things to catch a little bit more traction at the same time.
Oh, yeah, absolutely. And I think that you make a really good point, and that's honestly a microcosm of just what's going on worldwide right now, is that these buy now, pay later companies, they said consumer debt is at an all-time high. Credit card debt is at an all-time high. We think people would like to be able to get more debt if they could, as crazy as that sounds to say out loud. And so their business model has set out to go after, primarily the people with the most debt, because if you don't have the money in your bank account to pay for something right now, if you have a credit card, you're using the credit card. You're not going to go straight to a BNPL service. So I'm left to assume that in most situations here, these people either do not have credit cards, which means that these small loans are the only thing impacting their credit, which is bad news, or have maxed out credit cards and can't get another one. And in those situations, that's what these companies are made for. That's the person. That's their target demographic. And so, yeah, it's only going to inflate the debt problem even further. Now people just owe money to even more people, and we're doing that to somehow rectify the purchasing power issue. It doesn't compute.
No, I mean, it's also it's just one of those things where it doesn't compute, but it's almost like we just eat ourselves alive until we just kind of see what happens. That's kind of what it feels like a little bit sometimes. But anyways, good talks on the buy now, pay later services. We'll see how all that pans out, especially as we get more data and as we keep going on. But with that being said, we'll take a look at NASDAQ here, see where the market's been, take a look at some of the metals, some of the other futures products, and kind of just see where a lot of the market interest has been over this last week and getting into next week. No, I am excited for us to circle back around to these very same conversations, though, Gus, especially in like 3 months from now, 6 months from now, whenever we get more headlines about the buy now, pay later service, because it's genuinely interesting to see how these things are going to pan out.
Yeah, I mean, I think it's very much Lehman Brothers 2008 situation to me.
It's just odd. It's too odd.
Yeah, where it's like these companies, over and over, the credit card companies and the buy now, pay later service companies just alike are saying, we're fine, this isn't a problem, and it feels like all of a sudden there's going to be 1 month where we're like, buy now, pay later services debt hit $1 trillion. And then all of a sudden it's going to be this international incident.
There were signs.
$1 trillion is crazy, but
there were signs.
Yeah, there were signs.
Buy now, pay later service. I mean, there were signs right in our face. Anyways. With that being said, gold's still not doing too much here, brother. I mean, it's been slow. We've had the pullback from the highs. We've been consolidating here. I know some people positioning themselves long or short, especially off of this initial pullback, but really nobody has been proven to be right or wrong just yet because we haven't gone anywhere.
Yeah, I think my thesis that we have just found the correct price is kind of holding up here.
Everybody's happy right now, right?
Yeah, the consolidation even reflects that. I mean, when you look at this macro picture that we're looking at here, we went up too high, and then we were like, okay, this is too high given the current environment, and so then we come down and we say that's too low, that's too high. Okay, let's try a little lower, and then we've just found this perfect middle in the consolidation here. The market is saying, yes, this is what the price of gold should be.
No, this is really interesting. It'll be interesting to see if there's maybe any short-term trading opportunities in gold. Again, I will be very transparent. I don't trade gold very much, so I'm not even very used to its own kind of personalities and its own tendencies that each asset kind of has. And the best way to describe how each asset has its own behavior and tendencies is if you compare ES and NASDAQ side by side, you're going to recognize they're like brothers or sisters or even cousins. They look so similar and move very similar, but still a little different. And when we look at ES, we look at NASDAQ, we know NASDAQ is a little bit more of a volatile product. It's a thinner product. It trades a lot less volume than something like the S&P 500 does. And the way that will make differences in the behavior of price is the fact that NASDAQ is a lot more quote-unquote wiki. That's the best way I like to put it. I don't know if you have another term to describe that, Gus, but wiki, where we'll just swipe a lot of highs, swipe a lot of lows, and the behavior is just different on something like the S&P 500. And depending on how you manage your trades and your positions, you're going to notice a difference there. So haven't traded gold too much. Gold seems like a very more so, I don't know, maybe this is recency bias, but gold seems like a product that really rips to one side when it wants to rip to one side, almost like oil in a way. But we'll see.
Yeah, gold and oil, both, I've kind of always just put in the same bucket of my, brain that they are, I mean, I guess I would call them news stocks, perhaps macro stocks would be a better descriptor, but I've said this numerous times before, but gold and oil alike, it just feels like it's this whole other thing that you have to keep up with. Like you got to keep up with different news cycles. It's not just the market, it's also all these other things. It's government, it's the strength of the dollar, it's turmoil, it's war, and I think that gold and oil both kind of fall into that bucket for me, and it's why I've never done a particularly great amount with them. Because even oil especially is crazy, because oil, like gold, for instance, I'm short silver right now. I could have gotten short gold just as easily, but that thesis was very simple.
Right.
This has been ripping forever, and it is at an all-time high that seems ridiculous.
Right.
But with oil, you can't apply that thesis, because there's 101 reasons that oil goes up, and when oil is at an all-time high, it's at an all-time high for a reason, and I would venture, this is a totally baseless claim, but I would venture that oil, that stat we talk about where if the market hits an all-time high, 60% of the time it will hit another all-time high within a week. Right. I would bet that oil hits all-time highs at a higher clip than the rest of the broader market, because when oil goes ripping to all-time highs, it's because there is some sort of great turmoil going on in the world, and generally those things tend to get worse before they get better. And yeah, I don't know. It's always been really hard to keep up for me. I say it all the time. I respect the hell out of you if you have the time and dedication to also be trading commodities in addition to your standard market portfolio.
It's a ton to keep up with, right? Because it's like each product or each asset kind of has its own narrative that it kind of forms, right? Like, for example, the narrative around NASDAQ and ES over the last couple of weeks was an all-time high kind of type narrative. You got a lot of traders buying the highs, looking to sell higher. You got a lot of traders trying to pick off the top. You got a lot of traders looking to dip buy right now, maybe even yesterday over the last couple of days. So it's almost like each product has its own narrative that you can build on it. And just like how we were talking about gold, like we're looking at the narrative right now on gold. You ripped to an insane level of an all-time high, pulled back, and how you were kind of pointing out as well, we're trading within a level where it seems like buyers and sellers are agreeing on price. So that's not the same right now with NASDAQ. So to your point, they're building a little bit of a different narrative, it seems like. And then also, it's tough to keep up with many of those, narratives. The one upside that I can think of it, Gus, because I'm in the same boat there too. It can get a little overstimulating, I guess you could say, keeping up with many different narratives, but trading the many products, I think the nice thing about that would maybe just be having that diverse allocation. So for example, if maybe one of your trades is ripping to the downside, you're not so worried that this product is also highly correlated and all your positions are going to be doing something very similar. So they're just all a different ball game, and maybe that's also what's nice about them, but what also makes it a lot to keep up with, right?
Well, yeah, I think that it's, the way that I could put it most concisely is it's just much more esoteric to determine fair value with gold and with oil than it is with other assets, because you look at any standard company in the market. There's a PE ratio, they report earnings, there is revenue being generated, there's contracts to be signed, there's all these things, and it's like when you turn and look at a gold or an oil, it's like, okay, gold is up. Why? It's not because gold suddenly started producing more money. It's not because gold signed a very lucrative contract with the government. It's not because gold took a $5 billion investment from NVIDIA. It's because of this whole conglomeration of things. It's because, the government shut down, which gives people a little bit of concern about the dollar, and the dollar is weak against XYZ, and it becomes this whole complicated puzzle. And it's a similar sentiment to me as I always express about earnings calls, where I feel like to really be right about gold or oil, it's like this 4, 5, 16 parlay of things that all you have to be right about all in succession to actually get the move that you have in your brain. And if any one of them drops, then it could change the entire picture. Obviously people are very profitable doing this. This is by no means a soapbox to say that you shouldn't trade gold. You
shouldn't trade gold. No, I'm just kidding. No, I'm not a big gold trader. I love the product. I hear you. Now, just adjusting a couple of these levels there, they're really, really great points. Sometimes we got to think on those perspectives. And honestly, like I feel that all perspectives when it comes to trading is extremely valuable and extremely useful, because I think one thing we don't use as much as we get older is process of elimination. So it's like, even if you hear something you might not fully agree with by somebody else, it gives you another perspective to cross off your list if you're in the seek of understanding whatever it is that you're understanding. So I think it's an underrated skill, process of elimination.
Yeah, absolutely. And hearing a wide berth of opinions is also, as you said, right? It's really important to build that perspective. Like, you want to take it and apply it to a very simple life perspective. I saw a clip on TikTok the other day of a guy who said he always eats his bananas. To peel a banana, he twists it and breaks it in half, and then he peels from the middle, and he eats the two halves of the banana.
Wait. Have you seen that before? Okay,
yeah, I know what you're talking about. Yeah.
Anyways, wait. So you're saying he twists the banana?
Yeah, he twists it and splits it in half, hot, I guess, hamburger style. Like if you were to fold it hamburger style, not hot dog style. But yeah, he twists it apart, and then when you do that, the peel kind of becomes straggly there in the middle, and there's easy parts you can grab and peel. And so, you want to take this and apply it to a very simple situation. I see that, and I'm like, I would never eat a banana like that. But I will say, I had never considered eating a banana like that. And so even though it's something that I totally disagree with, it's valuable perspective to have. And like Errol said, it's a process of elimination. I can now eliminate that way of peeling a banana. I don't like it. And so it's
true. Yeah,
it's important to hear those perspectives.
Yeah, like it 100%, bro. What a great way to describe that. Actually, though, that was a really good way to describe it. With that being said, we marked off a couple levels of value on gold. This will be really interesting for us to keep an eye on over the next few days. But over the last month, we have found that about roughly, probably just under 70% of the trading activity that occurred over this last month, including the all-time high, has occurred between 3,962 on gold and then 4,447. So that little price range right there, we'll keep an eye on it. The price level that had the most trading activity was 4,018, which is usually going to be inside of that level of value. So we'll keep an eye on that. And then we'll keep an eye on this other level of value. This is a level of value where we got the initial breakout from. So it's always funny to look back. Like, these levels of value don't become obvious until hindsight. But that's also kind of the beauty in it at the same time. So when you don't have a good read on the market, or you don't know like what levels the market maybe has the potential to start running to and from, it's like, just let the picture paint, let the market become obvious until it just sticks out to you that you see a narrative forming, and then you can kind of proceed with caution. But with that being said, we got the breakout, which then produced this level of value over here. Let's even get our drawing tool. It produced this level of value over here, but this wasn't obvious until after the breakout, and then we started consolidating up there. And this didn't even become important until we broke out all the way over here. We've been stagnating. Now we know if we get a potential breakdown, we have a base area that at least we can, keep on the map. We can call it a liquidity map, auction map, whatever you want to keep in mind. So like something like this, if you were looking to get short and maybe a longer term swing trade to the downside, having that potential target, I think, helps give you the confidence, I think, to pull the trigger on that entry sometimes too. It's just like seeing that potential exit ahead of time sometimes helps you formulate that trade idea as well, if that makes sense. I don't think I put that the best way.
No, I mean, I think that was well put. I mean, you're essentially just saying you just have a better idea of what your profit target should be, as opposed to just saying, I'm going to take this to the downside, and when it gets X amount profitable, I will get out. It just gives you another level. 100%,
which I think can mean a lot in a trade. I think sometimes getting into trades where you don't have an idea, directionally speaking, like on an intraday basis, where you don't have an idea of where to take it off, like I think that can be the most difficult part of trading sometimes. Like not even getting into a position where it's in profit, like almost that kind of just happens sometimes, but knowing when you should and where you should get out of your position, whether that's you managing a red trade or even managing a green trade. I feel like that back and forth with should I get out now, should I not get out now, is huge on the psyche for a trader. But,
oh yeah, and that's absolutely not restricted to just intraday trading either. I mean, that's all the time. I mean, yeah, it's tough to time exits, and yeah, you always have to have some kind of idea of what exit point you're looking for. I mean, that can be very simple. You guys see me do it on air all the time. I will literally, like my DoorDash trade yesterday, I literally looked at the chart and I was like, okay, here's the gap. I'm gonna go like 2/3 of the way down the gap, 220, boom. And it's like that works. Like it can be something that simple, but just having your concrete price targets in mind help make everything so much easier, especially in an options trading context where the specific price of the underlying matters a lot.
100%. It's like being able to just be confident with the wins and losses. Like even if I'm taking a loss, let's take a confident loss because we knew what we were looking for, we knew we didn't get it, and boom, on to the next one, right?
Yeah, absolutely. Yeah, it happens. And it's, I say all the time, it's just, you could take two traders any given day, and just because one makes money and the other one loses money doesn't mean the one that made money is the good trader. You can do the work wrong and get the right answer sometimes, but in the long term, you're only going to be profitable if you're doing the work right every time.
Hey, yo, Gus is spitting right now. Yeah,
I'm rife with analogies this morning.
I'm ripe with analogies. He did it. He does it again. So gold moving sideways here. We'll keep an update on this one, right? We'll take a stab at this one. If we start trading beneath this level of value over here, we'll take a stab at it. Maybe if it starts to trade above this level of value, we'll see. We'll come back to it, but next week we'll at least have some more opportunities in gold or some of the metals because it looks like they're cooking right now. We're in the queue.
We're in the queue.
We are in the queue.
We're waiting in line on gold. That's true though. I mean, that's actually a really good analogy. That happens a lot, where you're just kind of waiting in line, trying to find the opportunity, whichever way it presents itself.
Yeah, pretty much. Pretty much. There are some more potential downside targets on NASDAQ, and it really just does depend on where or how you kind of perceive the market. But sometimes these swing points can be really attractive to just kind of keep an eye on. And sometimes those can kind of, and again, it depends how you view the market, but a lot of times those levels can have a lot of liquidity sitting around those levels. So sometimes they're just great price points for really large players in the market to fill a lot of their orders. And I assume on the very big down day, very large market participants took advantage of some of the liquidity to potentially exit some of their positions given the heightened volatility and trading activity. But let's just mark out some of these lows, some of these swing lows, just to keep an eye on. That's it, just to keep an eye on. None of these are gonna be levels where we're like, yo, okay guys, we're gonna be buying off this level whenever the market gets here. We're gonna be selling off this level when the market gets, it's never any of that. All these are gonna be is just reference points for us to look back on and to just keep in mind. And that's about it.
Well, yeah, it's like the hour bands on the VWAP. It's like it shouldn't always trigger a trade, but it's nice to have some.
Yeah, 100%. And it's kind of the same thing. Like I know I bring up value areas a lot and trading off of them, but it's also not every time the market gets to the value area, just buy or just sell or whatever. It's like, can we still form the narrative on top of our trading framework that we usually trade at the same time? So.
Well, yeah, exactly. I mean, yeah, I think, it obviously sounds so simple to say, but there's lots of people who genuinely don't realize that, say you have a value area that's 100 points below where we're at, and then, there's a terrorist attack in Washington, D.C. Let's take a really parabolic situation. And then suddenly the market is tanking. Obviously, that is not a valid value area anymore. You should probably wait to find a new bottom. There are other factors that you have to consider. Obviously, this is the very most parabolic example that I could possibly give. But things like that happen all the time. You have to be aware of sentiment and why things are actually moving. And if it is just a standard move, and it's if there's genuinely nothing going on, and we're tracing down and about to touch this value area, perhaps that becomes a trade. But if there is other things going on, that's obviously something that you have to be privy to. If it was as easy as just draw volume profiles, draw value area, always trade the value area, be a millionaire, we would all be on a beach somewhere. 100%. It's deeper than that.
100%. Very, very well put. Context is king. That's one thing I like to remember. Context is king. Price action is king. No matter the context, no matter your framework, no matter how good it looked. If the market is going against you, you're wrong. Like the P&L is just the best metric to recognize if you should be in a trade or not. And at the end of the day, I think by even having the mental model of wrong or right in the market is also a little dangerous. I think when we get the move we're looking for, it's not even that, we were right. It's just that the market gave us a favorable risk to reward opportunity and we wanted to take it, right? All we want is an opportunity, and we're gonna find the risk to reward, and then the market's gonna do whatever it does. Because I think whenever we lean a little bit too far into like, I was right or I was wrong, we start to give ourselves credit for the wins, which is dangerous because then we start to accredit all of the losses to ourselves, because we accredit all the wins to ourselves at the same time, when a lot of the times, just because you lost on a trade had nothing to do with you. Like it had absolutely nothing to do with you. It's just the uncertainty and the inevitable uncertainty and just the dynamics of how the market operates, and just another perspective, as we all will keep in mind.
Yeah, absolutely. In any prediction market, it's just a game of tiny edges over the very long term, and that's any prediction market. And the way that I always will phrase it is be the house. Okay, if you have the 2% edge, you are the house, and you will always win in the long term. If anybody doesn't believe me, I challenge you. Go play 1,000 hands of blackjack without getting up, and tell me if you won. You didn't. Bet the same amount every time. That's a stipulation of this.
So we need the number of occurrences, 1,000 times.
No counting cards. Yeah. No changing your bet. Play 1,000 hands of blackjack and tell me you're not down 2% or more. You will be. Law of large numbers is there. So think about you being the person sitting on the other side of that table that has the 2% edge with every single trade that you make. You are going to wind up profitable in the long term, even though occasionally some dummy's going to hit a 17 and get 21. It's in the law of large numbers that things will work out for you if you, and again, this circles back to trade them small, trade them often, but it's true. Trade them small with small edges a lot, and you will wind up. It's inevitable. There might be swings. There's always going to be swings. Variance is a thing. But if you genuinely have that type of edge on every single trade you place, mathematically, it is impossible to lose with large numbers.
Yeah, 100%. And that's another thing that I think we don't touch on too often either, is like having the ability to start developing a mindset to think in probabilities. And that's so tough to do because we didn't grow up being taught to think in probabilities. We were learned to be taught for absolutes. You know what I mean? So that's why the market can be such a difficult, abstract place to be in.
Oh yeah, and it's why I love statistics in general, because nothing is ever certain, nor is anything ever completely uncertain. You know, it's like the example that any statistics professor will give you is there is tail risk that the sun doesn't come up tomorrow. Like there is tail risk of that. It's incredibly likely. It's 99.9 to the 100th likely that it will come up tomorrow, but there is tail risk that it will not. And that's such is true with anything that you do. It's why people often refer to selling theta, selling naked premium as picking up pennies in front of a steamroller, because, the steamroller is very slow. 99% of the time you're going to be able to stay ahead of the steamroller just fine. But one of these times you're going to get a text and you're going to sit on your phone a little too long and that steamroller is going to roll right over you. And it hurts when it does.
It does hurt. It doesn't feel very good.
Man, I really do just got the analogies today. I'm feeling like Socrates over here.
Bro, I thought you were Socrates. Who am I talking to right now?
No, not really. I wouldn't count myself to Socrates.
No, just looking at some
I don't know. Would I have thought those things if you gave me all that time to think back then? I don't know.
A man who always thinks has enough point. You know what I'm talking about.
There is tail risk that I would have had all the same thought that Socrates had given the time period and the resources.
This was another level of value we have marked off over here. We're trying to do some of the analysis together live right over here also. This was already marked off here, but I think it's cool sometimes for us to do it together, get a good idea on what it is that we're looking at. This was another level that was really interesting for the day. We're not going to pull this one together, but this price range came from a value area that was created within the last 3 weeks. So within the last 3 weeks is another very concentrated level. And I didn't freeze, by the way. I'm watching the market here at the same time. Didn't freeze.
I didn't think you froze. I thought you might be having a little Jimmy Neutron brain blast there that you needed to get on a trade immediately. that was what I was thinking. That was what that seemed like.
Actually, that's what it was leaning a little bit more towards. Actually,
it looked like it dawned on you that there was something that you had missed until this moment.
That's so accurate. You read that perfectly. So, no, this was another level where we got a lot of traded activity over. So it's something we want to keep in mind, right? I know when it comes down to value areas and this, it's too good to be true or this or that. I completely agree. Just continue to keep marking them off for yourself, and then just continue to pay attention to that price behavior around the edges of value. And then I think a little bit more things will start to stick out. So just pointing out this area here and just pointing out the fact that this one wasn't created from today. This wasn't created from all of last week. This one actually comes from the last 3 weeks, just to kind of show you how dynamic some of those value areas can be. So we'll keep an eye on this one too.
I think when you were zoomed out a moment ago and you could see like all of those value areas stacked up on top of each other here, it's a really good example of. Yeah, there you go. Mm-hmm. I think this is a really good example of what you were just alluding to, where it's important to always have them, because eventually you kind of have a complete picture painted like this on your chart.
And that narrative, you start to form that narrative because of that. Because then you start to get so many value areas, sometimes overlapping over each other for like an entire week or 2 weeks. And if you were to combine all of them, they produce like a massive one with a more well-defined range. And then it's like you have the context of knowing that the market developed this level of value in this price range over the last 2 weeks. And that's like more narrative and confidence and conviction that might, pour into your trading. Whether that's confidently taking a loss, whatever it is.
Conversely, there might be an area of imbalance that has been tested 4 times and showed imbalance every single time. And so the next time that you go test in that range, you're going to be much more inclined to want to, take directional trades through it, because it's a range of imbalance for sure. You're
speaking my language right now. But that's fire. No, we'll see how the market continues to respond at these levels. We got a lot of downside this week. I will say, as much of a bear as I can be. And honestly, bro, I'm not even that much of a bear. I just had a little bit more of a missing most of the train to the long side for the all-time highs. And it was one of those spots where if you missed it, like, yeah, you can chase it, but then I have to ask myself, do I want to start developing bad habits because I'm chasing higher highs because the market's just doing that? So it was one of those places where I was like, oh, I just got to be patient. Can't chase the longs at the highs. And it was a tough decision to make because sitting on the sidelines watching the market run without you doesn't feel good. But
I chased them. Those highs ain't faster than me.
They ain't faster than me, boy. Them highs ain't faster than me. No, but to the point is, I didn't get to take advantage of any of those micro dips to the level that I wish I could have, either. But at the same time, each season of the market is always a great level of experience to put under your belt. So it was a great experience.
It's always so easy to look back and say, oh, I could have bought here. But it's hindsight's always 20/20. We could have this somewhat sizable dip that we're in right now. After today's action, I would call this somewhat sizable. This very easily could have just been one red day, and then we can run back to the upside. And had you decided to get long after that one red day, you'd be getting burnt right now.
That's true.
And any given micro dip could have been this.
True.
So
that's true.
It's a really tough balance to draw. I mean, such is the market.
And kind of made that decision to sit on the sidelines from earlier. So it was like, all right, now don't switch up after the next dip and then be like, all right, I'm not sitting on the sidelines. Because if I would have done that this time around, imagine missing that and then you get flushed on the one time. The one time you
exactly.
Dip,
yeah. You gotta trust your convictions and stay patient. No one ever went broke holding cash.
Yeah, no, you're completely right. Unless inflation gets a little too rampant. We'll see. No.
It's true. If you held I don't know, like $1 for 100 years, you'd get pretty broke.
You're right. The way things are going, you're right.
If you're sitting on your hands for 100 years, the market may not be for you.
You might not be patient. You might just be scared to take a trade. It's like, I'm so patient, bro. I haven't taken a trade in a year. I sit on my hands.
That's not trading.
It's so funny to that point. I seen a trader make a video not too long ago talking about how, guys, I'm being patient. I'm waiting for the 2008 lows to get swept. I started dying. I was like, the 2008 lows is absolutely crazy.
I bet at the 2008 lows, they were waiting for the 1971 lows.
Exactly.
It's like, you can't.
I'm buying the dip, waiting for the 2008 lows. I'm waiting for the March 2020 lows. That's a low I didn't think was going to be a low, and it's still a low today.
In this market, it's like, 3 red days constitutes a dip to me. Like it really doesn't take much to get me, wanting to get long again.
All right, but
this does seem to be a little more sustained at this period that we're in right now. This is, we've officially entered wait for confirmation territory for me. Although I will say, at least on the daily SPX wise, this is a pretty strong doji on the bottom here.
And
I'm not a doji absolutist, but I'm seeing that.
Doji absolutist. No, but tell me, how do you feel about the VIX barely even being able to crack 25 off of a pretty significant leg down? What are your thoughts on that? It seems like there's not much fear in the market. Is for us to get past 30, do we need more havoc to the downside than what we've already seen? It's just interesting. How do you perceive it right now? How are you feeling about it?
I haven't really thought much of it just because of how slow and steady this dip has kind of been. I don't think that there's really been, while it's obviously a little more volatile than we've become accustomed to this year and feels very volatile, to that end, it really just hasn't been that crazy. It's just been this slow little bleed. We do 25, 50 points a day. And I think that really helps curb VIX because it's not, everything all at once. If we got this down move that we've gotten over the last 5 days, trading week, I should say, all in one day, I think that VIX balloons to 35. But I think that it's because it's been so slow and sustained, and it allows people to expect it and price it in a little bit more, that's kind of keeping VIX quelled for the time being.
Yeah, no, I hear you. Even when we zoom out over here on NASDAQ, if you're somebody that trades trend lines, your trend line is still intact. This is putting things into perspective again, right? So we will see what the market wants to give us there.
That's true. You could draw some mean trend lines on that.
You could draw some mean trend lines.
I'm seeing it in my brain. The triangles, the bullish triangle. It's here.
No, but the trailing stop would have went crazy on this historic run. Imagine having a trailing stop on NASDAQ. You would have never been stopped out.
Oh yeah.
You would have never gotten stopped out if you did some type of I'm not a trend line trader, and I know of somebody that does trade trend lines, and they got a ton of heat on social media, and they showed their broker statements, third party audited everything, and they were actually making a bag. And I was like, dang, I guess I can't be shitting on trend lines and this or that, because sometimes you'd be surprised what some people are doing. They'd be like, I've been doing this for 10, 15 years. X, Y, and Z. Like I'm like, what? You know, and then they surprise you. So look, I learned that as a learning lesson. You know, no, don't knock it unless you really understand it, I guess. But some people do use trend lines, bro. Some people do use them, I guess.
Well, yeah, I mean, technicals, any technical you pick has a lot of validity if given enough sample size, I think. And I say that because with enough sample size, it's not just a line on a chart anymore. It becomes a proven thing that for whatever reason, the psychology of the market is making manifest over and over again. I clown on Rivian all the time, but we're doing this channel with Rivian, and it's simply that, you know, the market over a long period of time now, maybe 12, 18 months, has decided that somewhere between 14 and 17, I should say 12 and 17, is fair value for Rivian. I can't quite decide where, but it's somewhere in there. There's a battle, and it's happened enough times that it's like, okay, this is a definite channel that we have going on for whatever reason. Market psychology is making people believe that it should stay between these two prices. And so, you know, once you start to see that and it's confirmed enough times, it becomes just proven psychology sitting there in front of your eyeballs. But our technicals don't work at large, I would say, and a lot of people could get burnt is when you're trying to do, you know, like crazy intraday stuff that's based purely on, you know, highly specific technicals. You do the same thing every single time, regardless of what the broader environment
That's what we
might
call
be
a
on
pattern
that day.
trader. No context,
Yeah, exactly.
just like boom, same pattern, click button, buy.
Yes, exactly. And that is where things get dangerous, because the shorter and shorter the time frame is, the less confirmation that there is and the less data that those technicals are working with to show you what you're seeing. And so it just gives you a lot more surface area for things to go wrong. I mean, obviously that should be apparent, but I myself struggled with that a lot when I first started trading. I was like, why do these technical things clearly hold up so much in the long term, but then when I try to do it for a 3-day trade, they go against me so often. And that's what it is because the technical is only valid on the time frame that you're looking at it on, and especially if it's a mathematically calculated technical, something like, you know, you name it, VWAP, RSI, MACD, Fibonacci retracement, whatever it may be. If you're looking at those things on a really small time frame, there's just not that much data that the technical has to take and price in and try to give you good levels with. And so it's just not as reflective of the broader psychology. But that's kind of how I always would explain technicals, is that you're trying to quantify psychology, which is a very tough thing to do. It's why so many people say that technicals are astrology, but with a large enough sample size, it can be done. And we have. I mean, medicine has. We've quantified psychology in lots of different ways in like a medical scientific context. So why can't the same thing apply to the market? You just need the right sample size.
That's a really good point. I mean, the sample size is just universal again, right? It's almost like one of those law of large numbers. There we go. That's exactly that's exactly what it is, actually. No, with that being said, we're going to take a little bit quick of a scalp on NASDAQ just for the lows to see if we can get anything there. But in terms of positions, I don't know if we're going to put on any new positions yet, Gus. We've got on some long delta in QQQ. I'm hoping this isn't going to be a position that just takes back the gains that you had on the downside moves of this week, right? So that's going to be something to keep in mind. UNH has been so disappointing, almost just as disappointing as Oracle. I think Oracle takes the cake. Got any thoughts on UNH and any other tickers before we start to wrap for the day?
Oracle at least is up, like in aggregate, and they're coming down off highs. UNH is frustrating.
She said, no case. UNH, no excuses.
Yeah, UNH is coming off lows and still can't muster anything. UNH has been a frustrating one. I guess Oracle's completely filled that gap. That actually makes me a little bit optimistic there for getting involved. But yeah, I don't know. UNH has been a weird one. Chipotle is another one. CMG, I'm thinking about getting out of my Chipotle longs. I took them off this big gap after earnings. And because we have seen literally zero like immediate correction off of those lows, that's alarming to me that we're continuing to work lower. I understand it's been a bearish market environment, but like look at Kimberly-Clark, like they're taking a bounce against the bullish environment because it was oversold. So I'm lacking immediate confirmation on this trade on Chipotle, and though it's only been open for 3 days and I have a long time until expiration, I'm debating getting out of it just to avoid the stress, but we'll see.
I hear you. That was kind of the same position that I was in Oracle. I was like, I'm gonna redeploy this capital elsewhere. Glad I did, because I would have been at a max loss already, so I was able to save a little bit of that. Look, same strategy we talked about the other day. One way to make money is save money, right? So,
yeah, absolutely. Yeah, I'm trying to see. Oh, did I get out of it already? Oh, no, I didn't. It's just moved
what's that,
green
Chipotle?
Day. Yeah, Chipotle. But yeah, I would need it over 45. I've got 105 DTE, but we've moved from, 45 when I first put this trade on would have been something to the tone of a 18% move to the upside, and now we're talking about like a 25% move to the upside, and now we're needing a firm 50% move to the upside. And that's a lot. I mean, that's a lot to ask for out of any company, especially a company that's been struggling as much as Chipotle. Yeah, you know what? I've talked myself out of this. I'm exiting this right now. I'm already at 50% loss. It's been open for 3 days, so
whatever.
Yeah,
whatever. Redeploy that capital elsewhere.
You always say you win some, you lose some, but no one ever actually wants to lose some. But you lose some. There we go. There's the fill.
On to the next one. Cost of doing business.
Yeah, what are you going to do? Rein that capital back in, let this dip manifest a little bit more, and then we're firing on longs again. Back at it.
Thanks. No, we'll see what we get for the rest of the market. We are coming to a close here, brother. Anything top of mind before we head out?
No, that's all I got. I'll be back 1:45 for Engineering the Trade with Jamal. Come hang out with us.
Be sure to come back later on for Jamal and Gus here in a little bit. That's going to do it for today. Thanks for taking the time to hang out with us today. It is Friday. Vol is expanding. Let's manage our positions. That's to keep in mind. Anything else? No, that'll be all. Thanks for taking the time. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Why do you want high Ivy rank when you sell options?
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we were trying to do. Guys, I almost busted out the Fighter Engine red shirt again for the second day in a row, but I'm really glad that I didn't because it looks like the market is headed right back to unched. Was there ever a doubt? Not a single one. Not a single one indeed. So welcome to the show. I am glad that you are here. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program at this very moment. You can celebrate. I kind of feel like you can celebrate if you're a bear or a bull right now because it sort of feels like a Green Day. Like, I don't know if I would necessarily call it the Boulevard of Broken Dreams, but it's pretty much in the same category. Like, I think we're speaking the same language here today. And so, yeah, with the rally back, man, it doesn't look too bad out there. So, Ryan, go ahead and bring us into the market. Let's take a quick little look at what's going on. Yeah, EMI S&P is down 46, man, it feels like. It could have been a whole lot worse. You got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, I should say. Excuse me, down 312 on the day. You got the boomers only down 196. You've got the Russell 2000 futures index down 12 on the session. You've got bonds up a little bit. You got notes up a little bit. You got oil up 38 cents. Excuse me. Oil up 38 cents. You got the shifties up 23 bucks. And you've got the Hunt Brothers. Where are my Hunt Brothers at? I do feel a coughing spell coming out. Hopefully, we can kind of hold that guy off. Not unlike the market crash here today. You've got silver up 21 cents, up to 48.17. And so it could have been a lot worse, man. I mean, it was a lot worse. I mean, it was a ton worse about, 35 minutes ago? About, 18 seconds ago? I mean, it was pretty nasty out there this morning. But, man, I don't know what happened. Is it Taco Friday? I don't think you're allowed to have tacos on Friday. Like, I'm no, culinary expert, or maybe I am, since we did talk about my baking pies. Baking pies. What's the word I'm looking for? Period of life. No. It's right on the tip of my. I lost it. I totally lost it, man. I'm totally disheveled today. But we talked about my baking pies situation, I'll say, yesterday, and so I don't think you can have Taco Friday though. I'm pretty sure that you cannot do that. But let's go ahead and let's see here. Let's do, where are we at? I see you guys in the chat, man. Big Deal Donuts in the house. I see John Covington in the house. Brian Dowdy's in the house. Andres Uzma in the house. Emmett Morrison in the house, man. Look at you guys. Ash, Finn, Mikos. Man, I appreciate you guys so much. What I want to do today, I want to do a couple of things. So first and foremost, guys, I mean, again, the market, you've got EMI S&P's only down 45. If you bring up a chart here really quick, hopefully I can gather myself. And we've only got 41 minutes to go. So don't worry. It'll all be over before you even know it. If you look at the E-mini S&Ps, this is a 1 hour chart? Yeah, that's fine. If you look at the E-mini S&Ps, they were all the way down to a low of 66.55 early, just a couple hours ago. So that would be 50 handles lower. E-mini S&Ps were down about 95 there on the lows. You got the NASDAQ was also down significantly on the lows. It has since rallied back nicely. You've got the NASDAQ was all the way down to a low of 821 was your low. Oh, no, I'm sorry, 709. 24,709. Right now it's 24,940. So just a crisp little 250 points off the bottom in the NASDAQ. So that, of course, is looking pretty good. And, Russell's going to be a similar type of story. Russell was all the way down to, a low of 2386. We're all the way back to 2417. So, I mean, of course, are they just, rallying them up to squash them? Is this just the fattening up of the calves before the slaughter? I mean, it could be. It 100% could be. But maybe we're back. It's going to be so funny. If they close them green today, oh my gosh, it's going to be absolutely hilarious. It's so fake and it's so made up. Like, I love it. Like, I just can't get enough of it. But if you look at the markets, it could have been a lot worse. It was a lot worse a couple hours ago. But now we are back to hopefully the upswing. If you look at my portfolio, though, I want to do a couple of things. So number one, we've got, look at the elephant in the room, guys. I mean, yeah, Apple's helping a little bit, right? Amazon helping a little bit, right? GLD kind of, helping the cause a little bit. Look at KMD. Who gave me the KMB trade? I think that was a Theta Trader special if I'm not mistaken. That's Kimberly Clark, right? Or whatever it is. I mean, this is Kimberly Clark. They just bought Tylenol, I think, right? And do they not also own Kleenex? I think they own, or is Kleenex its own company? No, I think it's Kimberly Clark. Hold on. Kleenex. Yeah, I got nothing on Kleenex. I think Kimberly Clark owns Kleenex. Can you guys help me out on this? Am I totally misremembering? That's very possible. Very possible indeed. But Kimberly Clark looking good. All that stuff is all fine and dandy. But look, guys, look at this. They laughed at us. They mocked us. They jeered us. Look at Starbucks, baby. We are back in business. When you need a flight to quality, where do you go? You might go to a little gold. You might go to a little Kimberly Clark. But you bet your bottom biscuit, you are going to Starbucks. You're going there as an investment. You're going there as a delicious beverage. And by delicious, of course, I mean right there in that B- lane that we all know and very well here on this program. Starbucks up $2.78 on the day. You've got a big move for us because we have our 100 shares, and we also have this long 55 call, which is working out pretty nicely now. I mean, you can see, this is the whole basis of, dollar cost averaging. Like, this is the whole idea behind dollar cost averaging, right? You want to get in at a better basis so that you can improve the overall basis on the package, right? Now, again, you may take more pain. You're adding risk. You're adding size. You have all those things that you have to take into account, of course. But this is the basis and the basic idea behind dollar cost averaging, right? I want to improve my overall basis on the position. I bought some shares up here. The stock has dropped. I want to add to my position. This is what long-term investors have been doing this since the dawn of man. Like, you can go all the way back to like 1st century Judea, right? And they were dollar cost averaging. I can assure you. Now, at the time, they were averaging into like clay, and they were averaging into like pottery and stuff, but they were still averaging in. Like, you can bet your bottom biscuit again that they were improving their basis, going all the way back a couple thousand years ago. And then, of course, tulips and internet bubbles and whatever. This is the classic go-to move for the long-term investor. This is the number one move for the long-term investor. And so since we're treating this Starbucks position kind of like a long-term position, I wanted to, kind of lean on some of the resources that a long-term investor would utilize on essentially, not necessarily a daily basis, but it's one of their go-to moves when it comes to trades and positions that have gotten away from them. This is the hammer that is in the long-term investor's toolbox, right? To average into positions, to improve the overall basis. And that's exactly what we're doing. And so now, if Starbucks rebounds, it's already rebounded a little bit from 80, 81, and now it's 85. If this thing heads all the way back to 88, 89, 90, whatever, we're going to be in a really great spot because our original shares, which you can see right here, we bought those guys for 92, and then the leap call option that we've added, man, that guy is just going to be printing money. Like, that guy is just going to be up a tremendous amount, on its own price. And so when I think about what we're trying to accomplish here, I'm like, this is really, really nice. Now, of course, it could have gone the other way. I don't know what's going to happen. You don't know what's going to happen. But thankfully, with Starbucks here, it's looking pretty good. It's looking pretty good indeed. So that is Starbucks. That is some portfolio commentary. And I think that's pretty much all that I wanted to talk about in the portfolio. Oh, look at PayPal, though. Man, look at PayPal. So this is actually pretty funny, right? Because PayPal, this guy was dead to rights. Like, this, how it was done. It was over with, right? And now, all of a sudden, we're in a situation where we've got our long put spread. That's in December, so we still have a lot of time to go. But we have a long put spread that's now up $1.30 on the trade on the position. So this guy got away from us after earnings, and it wasn't moving in the direction that we had politely asked it to move in, and we just kind of had to stew in the bathtub of filth. But thankfully, like the bathtub of filth, like we found the drain, which was difficult to do through all that filth. But we luckily did indeed discover the drain, and boom, here you go. We're letting out some of that filthy water, and it's looking pretty nice. It's looking pretty nice indeed. I think we've beat that analogy for about all that it's worth, but I'll probably find some more in the coming days and weeks. So for PayPal, I'm just happy that we're here. I'm just happy that it's green now. And now, there's no reason to do anything in my opinion. You could close it early if you want to. That would be totally fine. Personally, I kind of like sitting tight. You finally got the move that you wanted. We've got 42 days to go. The position's already going to move a lot more slowly because it has so much time. Plus it's defined risk, right? It's a vertical spread. I'm not super concerned about this thing getting away from me because A, it's in a good spot. B, it's defined risk. And also C, it has a lot of time. Like, even with an undefined risk position, I mean, you guys help me out. Correct me if I'm wrong here. When I have an undefined risk position on and I've got 42, 52 days to go, 47 days to go, whatever, even when it moves against me, even if it's a pretty big move against me, because you have those softened Greeks and the P&L is not just, you're not just going to be hemorrhaging cash like down the drain, like right out of the gates. Those kinds of things happen when you're in a zero DTE world. Like those kinds of things happen in that final week before expiration. But when you have a lot of time, especially with defined risk, but even with undefined risk, in my opinion, you've bought a lot more time to, you haven't really bought it, but you've given yourself more time to make more objective decisions a bit more gradually as you go from one day to the next. And so that's exactly what we want. We want to avoid as many situations where, I have to act urgently. I'm concerned about the next 5 points. Like I don't really know what's going to happen. I'm sweating out the next couple of ticks in the NASDAQ or whatever. You don't really want to be in that situation too often, if ever. I mean, we've all been there. I've been there. You've been there. Everybody's been there, of course. I think it's a rite of passage when it comes to just trading in general. But you want to try to avoid living in that space too often because it's kind of unnecessary if you think about it in a lot of ways. And so anyway, there's my little soapbox diatribe as it relates to PayPal, which it was only loosely related to PayPal there. But let's go ahead and, all right, so those are the current positions. What I want to do now, let's put some new trades on because if you look at volatility, I mean, volatility is up significantly today. You've got volatility futures up 84 cents. You've got, the VIX up $1.26, and that's well off the highs today. The VIX was up over 22, I think. Yeah, the VIX was up to 22.72, so it was almost 23, and it has since cooled off. And so what I want to do, let's take advantage of the volatility pop. Let's take advantage of the volatility expansion. Let's kind of lean into the power of short premium. Hey, we talked about that just recently. Let's try to tap into some of that with high probabilities, not needing to be directionally correct, which is kind of nice for me since I'm not very good at being directionally correct. And then, of course, all the adjustments and all the other things that we've talked about. But for VIX being up $1.23 today, that's still a pretty good move, even if it is $2 off the highs on the day. So let's go in, though. I want to do mainly indexes. So right now, earnings season is kind of behind us now. We're into November. Now we're kind of getting into, everybody's getting ready for the Thanksgiving rally. Everybody's getting ready for the Christmas rally. Everybody's getting ready for the New Year's rally. Then you've got that Valentine's Day rally. Oh, you got the MLK Day rally. Like you've got all these rallies that are coming up here in the next couple of months that are obviously going to send the market significantly higher. I'm like 30 to 35% sure of it. So I want to go ahead. Let's get some index positions on today to take advantage of the volatility expansion. So I'm going to start with MNQ. So let's go into MNQ. You can see now it's only down 295. I mean, does that feel like unch to you guys? I mean, that kind of feels like, because it was pretty nasty, man. Like yesterday down 500, whatever. Today it was down 550 on the lows. I mean, if it closes right here, that's going to feel a lot like a green day. It is. It's going to feel a whole lot like like an up day. And so, man, I really can't believe it really looked like they were going to squash him this morning. And then we had another NASDAQ down 800, 900. And then all of a sudden, you got to get Trump off the golf course. That's a big problem, man. Like you got to call my man in off the golf course so he can tweet something out and save the whole world. That's not good. Nobody's happy in that scenario. So thankfully, he can spend the weekend golfing and doesn't have to worry about it. But if I go into MNQ here, if I go to 41, let's go to 41 days to go, December 19th. We'll choose the AM cycle. This, of course, is going to be when the December futures expire. And so, man, that's crazy. Can we stop for a second? So that means, in like 4 or 5 weeks, we're going to be trading the March 2026 contracts, not 2024, not 2022, right? Not even 2021. We're going to be trading the March 2026 contracts. That's going to be the front month in the futures for all the financial futures. So ES, NQ, ZB, RTY, whatever. That's crazy, man. Like that's wild. Can you guys even imagine? Can you even believe that it's, March of 2026 coming on down the chutes? That's pretty crazy stuff. But anyway, if I go into this December 19th expiration and I choose, let's see, if I go to, what if I did, the markets are just not very good. I don't know what's going on. Look at this. Did you guys see this? Oh, did you guys see that? Look at it. It's back. Look at that 24,000 strike. Hold on. It's going to happen again. Wait a second. Look at that. Do you guys see that? I feel like I'm living that Leonardo DiCaprio meme where I'm pointing at the screen. Like, look at that. Look, 900 offer? Who's going to lift a 900 offer? These are Vinny Batista markets, guys. Who's lifting 900 offers? That's crazy. Look at that. You guys see that? Man, what is going on out there? I mean, even I kind of just want to watch this for the next 25 minutes, to be honest with you guys. This is crazy, man, because we're talking about MNQ. We're not talking about like some like super craptacular stock that nobody's heard of. And it's like the liquidity stinks and everything stinks and blah, 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 blah. It's like, okay, that's what you're signing up for. But guys, these are the NASDAQ micro futures. What is going on out there? What is going on? Are these Vinny Batista markets? Are these Tony Batista markets? I mean, he told you all the story of how he had to sell jeans out of his trunk to, kind of, make it by and get to the next day. Well, after that, he graduated to some 900 offers in the MNQ pits. I can assure you of that. And so, man, wow, look at this. We got to find a trade in here. How am I going to find a trade in here? I'm not trading the 900 offer market. I'm going to pass on that guy. But if I go into, look at this. This one's a 600 offer. Man, this is nuts. Maybe we do need to call Trump in off the golf course. We need some help, man. We definitely need some help. Look at that. Look at the EMI S&P is only down 39. Wow. That's crazy, man. It's really crazy. I think I'm just going to choose the least awful market here. It looks like the 23,900 strike appears to be the least awful. We'll see if we can get filled. This happened just a couple weeks ago when we did. I'm just going to do a short put in MNQ. This happened to us just a couple weeks ago. Similar idea and similar markets. And it's like, man, I don't know. What happened to the MNQ markets? They used to be bad. Like they've always been pretty bad. But this is like a next level badness, I think. Man, I don't know. That's really, really crazy. But let me see if I can get a decent fill at the 23,900. I'll go in at the mid price, so 423 it looks like, or approximately. If I get a fill on the mid price, then that would obviously be good. Wow, we got filled immediately. Okay, so I don't know what's going on with the spreads. I mean, you guys just saw we just spent 3 minutes of our lives. We're never going to get back on those spreads. But yeah, so wow, we got filled on the mid price though, so that's good. All right. So we're taking advantage of the high volatility. We're doing it with MNQ. I'm now going to proceed to MES. Let's go to MES. So again, you got the VIX up 1 million, got volatility futures up 1 million, got IV ranks out the wazoo, right? IV rank on MNQ was 30 right there. IV rank on MES looks like it's about 24. That's pretty decent. Let's go in. I'm going to do the same playbook. We just did this a couple weeks ago. In fact, I think I did it the last time I was in Chicago, if I remember correctly. We do a short put in MNQ. We do a short strangle. We do a short strangle in MES. I mean, they're essentially going to track each other pretty closely in terms of the correlation between the two. And so, you could do the strangle in MNQ, that would be fine. You could do the short put in MES, that'd be fine. I personally like to choose fewer legs with MNQ for the reasons that we just saw. Like for the reasons that we all just experienced, the markets in MNQ can oftentimes be quite unfavorable. And I'm not even necessarily talking about 900 offer unfavorable, although we just saw that. But they can still be, 20 points wide, 30 points wide, what have you. And we actually got a decent fill just a few minutes ago, getting right at about that mid price. But that's not guaranteed to always happen. Like there'll be plenty of times when you have to chase it away from the mid price, and it can just be a little bit more challenging when you have more legs working for you. So doing something simple like a short put, it's a single leg strategy. You're only navigating one, bid-ask spread differential. It's just a lot easier to get a decent fill. With MES, the liquidity is so much better. The liquidity is so much it's far superior to what you see in the MNQ pits. And so if I'm looking at a multi-leg strategy, I'm going to lean more towards MES than I am MNQ for the reasons that we just talked about. So let's go into the December 19th AM cycle for this guy too. And yeah, I mean, you can even see the markets. I mean, look at the markets yourself. I mean, you can see. I'm just going to probably do a round and expected move strangle here. Look, you're only about 1.5 points, maybe 2 points wide between the bid and the offer. That's a pretty tight market for futures options. Like that's pretty good. I think MES is probably going to be, it's obviously better than MNQ. Is it better than MCL? MCL is actually not too bad. The MCL markets are pretty liquid, pun intended. Let me put this on and then we'll go to MCL. I think the MCL markets are actually decent. I'm going to sell a 6,400 put and I'm going to sell let's do we'll do like a 7,000 call. Oh, look at that. 99.75 is my mid price. They're not even going to give me the full 100. Not even going to give me the full Hondo. So we got to go with the 99.75 on the strangle in MES. Let's do it. I want to do it. And then let's take a quick gander at MCL. 99. Oh, we got filled at 99.75. There you go. Again, just taking advantage of high volatility. Like, I'm not doing anything crazy. We're not doing anything super innovative. Like, I haven't created this brand new strategy that's never been done before. I mean, again, these are the types of strategies they were using in first century Judea. Now, again, they weren't doing strangles on MNQ. They were doing strangles on clay pottery, right? But same idea. Like, you get tested, you roll it, you extend duration. Same basic playbook that we've been running for a couple thousand years now. And so that's MES. That's MNQ. Let me go to MCL real quick. I go to MCL, like let me go to, I'll just go to like 39 days away. Yeah, see, the MCL markets are pretty good. And I mean, maybe that's comparable to MES. I'm not sure, but just look at some of those markets. They're 4 or 5 cents wide. And that's on MCL. So this is also a micro oil contract, but it's in the same micro category. It would not be fair to compare minis versus micros because the mini markets are way tighter than the micro markets. Like, this is just one of the concessions that you have to make if you're trading futures and you're trading really small futures positions, which everyone should do in the beginning and maybe forever. And so you're using the micro contracts as opposed to the mini contracts. Like, if you look at, like, MCL looks pretty good, but if I look at like ES, for example, like here, I'll show you just to compare and contrast. If I look at ES and I go to the ES options, you can see, like, if I go to like, whatever, I'll do the same expiration, like 41 days to go, December 19th. Look at how tight these markets are. Less than a point, like half a point to a point, right? And again, I mean, we just saw a point and a half to 2 points, MES, half a point to a point, ES. It's just much, much tighter. You're going to see the same thing with NQ as it relates to MNQ. Now, again, we just saw MNQ, and I mean, the spreads were, 20 points wide, 300 points wide, 500 points wide, whatever. But you go to NQ and you're going to see a lot more normalcy in these markets. Like, you've got, 4 points wide, right? 4 points wide, 2 points wide. I've got 3.5 points wide. So it's fluctuating between 2.5 to like 5 points wide for most of these options. And so that's actually relatively tight for the NASDAQ futures options markets. Again, far more favorable than it is for, MNQ. But that's just one of the, the cost of doing business when it comes to the micros. And so, all right, so that is, okay, so we did MES, we did MNQ. I'm right at about the halfway mark of the show. You know what I'm going to do? I'm going to do one more thing. Let's go ahead. I want to go to IWM. It's a Friday, man. It's a Friday. I got the magenta shirt on today. I almost went fire engine red, like I said, but I've only got one fire engine red shirt, which I got to change that, man, because like if this thing keeps getting nastier and nastier in the markets, I got to have more ammunition. Like, I've just got the one guy that I can go to there. But if I go to IWM, I go to the December options with 42 days to go. So now we're back in the more standard traditional, equity options. I'm kind of thinking, like if I were to sell the 225 strike, you can see pretty clearly here that the buying power effect is, it's about 11% of my account. So that's a little bit high. Like, that's a little bit long in the tooth. Even for, the IV rank is 22. Obviously, volatility across the board has expanded. Like, we've seen that all day long. This would be a good opportunity to do something in the indexes. In my opinion, this is just my humble opinion. Feel free to take it and leave it or completely discard it in its entirety. If you want to stretch the boundaries of your position sizing range, typically I live 3 to 7%. That's my typical range. But if you've seen the show, if you've been following the show for any length of time, you know that I'll go to 8%. I'll go to 9%. I'll go to 10% at times. To me, this is one of those times. Volatility is high. That's good. We're choosing an index. That's also very good. I'm not doing this in an individual name. I'm not doing this in Kimberly-Clark. I'm not doing this in Kroger. Like, I'm doing this in something that it could still move, and I still might get hurt pretty badly, but the chances of like a 10 or 15 or 20% move on some individual stock outlier situation is very, very, very low. Now, could it happen? Yes, it could. Has it happened before? Again, 1987. Again, first century Judea. Like, I think there was a moment back 2,000 years ago when the clay market just totally blew up. And then all the guys and gals back then were like, what do we do? And somehow they got out of it. So hopefully, if something similar were to happen to us, we might be able to do the same thing. Yeah, the analogies today, the stories, it's like C+, man. C+, maybe C-. I don't know. But anyway, if I go to IWM, I'm thinking, I don't want to do this trade because it is a little bit higher than I would like. It's about 11%. What if we go to like a 220 strike? Now I've cut my buying power down to $2,800. So now I'm at about 9% and maybe 9.25%. I'm still collecting over $2, which is really, really nice. And obviously my max loss is going to be if the index falls to 0. Not a super likely outcome, so not really something that's on my radar. But from a sizing standpoint, we're a little bit stretched on the upper end, as I just said. But from time to time, I will kind of push the boundaries on that. And for those of you out there with smaller accounts, so I'm going to say 30,000, 25,000, 20,000. Like, what I'm talking about here. And oftentimes you do have to kind of stretch your position sizing parameters a little bit to kind of stay active and to get trades on. And in my opinion, doing something in an index when volatility is already really, really high, that's going to be one of the times when you should consider that. Again, you may not want to do it at all. You may want to stay 3 to 7%. And then you would probably be a bit more disciplined than myself. You would probably be exercising a little bit more restraint than what I'm doing right here on this Friday show. So let's go ahead and let's put on the IWM trade. All right, perfect. So IWM is on. We did MES, we did MNQ. Man, let's see where you guys are at. I see you guys. Oh man, look at you guys in the house. Where are we at? I see you guys. Let me go ahead and let me try to surprise and delight somebody. Where can I find somebody in the middle? Let's see. Margin Walker. Margin Walker says volatility futures are back in contango. Yeah, I guess they are, right? Because you've got the VIX is, hold on, let me click on the VIX. Let me click on volatility futures. Oh yeah. So, not quite. We've slipped back a little bit, where you've got, let me grab my drawing tool here. Here are your volatility futures. Here is your spot volatility. The normal relationship is going to be future volatility is greater than spot volatility, or, just put in layman's terms, volatility going out into the future is greater than volatility right now. And if you think about that as kind of a default setting, it should make sense to you that that's the position that the market would normally be in, right? This is the position that the market is normally in, because just think about it, just use common sense, right? There's going to be more volatility going out into the future because there's more uncertainty. Like, there's more uncertainty about what's going to happen, what could happen. Things could get really bad, things could get really good. I mean, volatility does cut both ways, even though we typically associate it with the market going down for a lot of other reasons that I won't get into right now, but it's very, very true. But when volatility is so high, when things are so crazy in the moment, and the current situation is just really, really chaotic, that's a situation where you can actually have the opposite, right? You can have, the VIX being, you can have the VIX being greater than volatility futures. And that's a situation where things are so chaotic that the market is basically pricing in the likelihood that things are going to calm down. It's pricing in the likelihood that, okay, we're going to get some answers to some of our questions. We're going to get, we're going to close some loops that are outstanding, whether it be a government shutdown, whether it be, a Taco Friday, a Taco Monday, whatever it might be. We're going to start to get some resolutions on the table when it comes to the different things that might be happening, politically, might be happening economically, whatever. And so if it's not quite back to contango now, maybe it was a second ago there, Margin Walker. But yeah, so it's good that it's close though, because earlier this morning it was not close at all. It was in significant backwardation. Let's see if I go to where are we at? Oh, here we go. Joel James actually said, Dr. Jim, I hear a lot of hosts talk about backwardation and contango. I would love a session on those things. They sound like made up terms. I think they kind of are made up. It's really, really funny. I don't know the origin of those terms. Maybe that goes back to 1st century Judea too. I don't know. That would be some crazy stuff. Like, man, we got contango in the clay markets. Like, what should we do? Like, I don't know. Just sell everything. I could see that happening. I mean, we could probably read about that in some of the, some of like the Dead Sea Scrolls or something. They probably talked about that somewhere. But yeah, contango and backwardation, you can talk about it in every futures market. You can talk about it in the equities. You can talk about it in the financials. You can talk about it in the commodities. You can talk about it in all these things. The thing that I think is the most relevant for us in terms of what we do specifically is focusing exclusively on the volatility markets. Like, I want to know spot volatility versus futures volatility, because the reality is, when you do get really stretched in terms of backwardation, where the future volatility is actually less than the current volatility, which you actually saw that, earlier today. Let me actually bring up. So we know the VIX was a high of 2272. We looked at that chart just a second ago. What was What was the high? So you can see that the high on the volatility futures was only 2170. So that was about 1 point worth of backwardation. Now, the volatility traders that are out there, like they've got this stuff on lockdown. Like they know like degrees of backwardation, degrees of contango, like what's normal, what's overstretched. I mean, they're doing Bollinger Bands on degrees of backwardation, and they're doing that all within like an Elliott wave framework. Like it's pretty impressive stuff. Like they're really, really like knee deep in the weeds when it comes to, understanding the volatility space. I'm not even going to pretend that I have that type of command or mastery over the volatility space because I don't. But when it comes to just basic understanding contango versus backwardation, I'm like, all right, most of the time, the market's going to be in contango for the reasons we talked about earlier. When things get really chaotic, the market is going to slip into backwardation just like it did this morning. Generally speaking, though, the market does not like to live in a backwardated volatility space. It doesn't mean it can't persist for a couple of days or even longer potentially, but it's very, very common. I know the research team has looked at this. I can't think of any segments off the top of my head, but I guarantee they've looked at this. Look at EME S&P is only down 32. There you go. Contango's back, Margin Walker. Like, don't even worry about it. In fact, it actually is. Oh, it's still not back yet. It's got to be. Oh, it's back. It's back. Look at that. Boom. Contango. There it is. We're back, baby. The market doesn't like to be backwardated from a volatility standpoint. And so when that happens and you notice that, you're kind of setting the stage for potentially a big rally. You're kind of setting the stage for potentially, a pretty big drop in volatility, which oftentimes is accompanied by a pretty sizable rally. So anyway, hopefully that helps a little bit. But let's go ahead. Man, I'm scanning the comments. I see you guys talking about, you guys are talking about all kinds of stuff. The show today in Austin, I see some tuna fish and applesauce comments, and I'm here for it, man. I'm 100% here for it. But let's see. Ashfin in the house. What's going on there, Ashfin? I appreciate you, my friend. Thank you for being here. Thank you so much for being here. It is only because of you that we can do what we do, man. All you guys, I just appreciate you guys so much. So thank you guys so much for being a part of what it is that we are doing. Weiss SGN says, hey, Dr. Jim, pretty expensive, but with IVR at where it is, would it make sense to place a QQQ leaps trade? So it kind of depends, all right? Like, are you doing just a straight leap trade or are you doing like a poor man's covered call? Now, if you're just doing like a straight leap trade, volatility is kind of high, right? So you're going to be paying a bit more for that leap than you would if volatility was a little bit lower. But if you're trying to do this as like a stock substitute and you're trying to do this as like, all right, I want to have some upside QQQ exposure or downside exposure. I don't think you specified one way or another. In fact, did you specify? No, you didn't specify. So it could be bullish, could be bearish. It doesn't really matter. If you're trying to use this as a substitute to have most of the directional bias without having to fork over all that capital, I wouldn't necessarily look at volatility that closely. Because again, you're not really trading it for that reason. Now, again, if you're thinking poor man's covered call, like things like that, that's a different discussion. Like, yes, volatility does play a role there. And typically poor man's covered calls, they kind of work in both environments, low volatility and high volatility. I personally prefer them in lower volatility simply because when volatility is higher, there's so many other things I can be doing. Like there's so many other things that can be available to me. Strangles, ratio spreads, vertical spreads, iron condors, whatever, jade lizards, right? There's so many things that I can do. So generally speaking, like today with the VIX over 20, whatever, I'm not chomping at the bit or champing at the bit, whichever of the two it is. We got to ask Chris Vecchio, who's coming back on Monday, if I'm not mistaken, which is pretty exciting stuff. I'm not chomping at the bit, right, to put on and lay out some new poor man's covered calls. Like I'm looking to do some other things, strangles, short puts, ratio spreads, what have you. And so when volatility is low, that's when I might go to poor man's covered calls. But if you're using this as a stock substitute, I wouldn't even try to game the system, if you will. I wouldn't even really be looking that closely at volatility. Instead, I would just say, hey, I'm looking for capital savings. I want the directional play, upside, downside, whichever of the two it is. And I would just put it on. Because that's you have to be mindful of what you're trying to accomplish and why you're trying to accomplish it, right? And so if it is indeed going to be a stock substitute, then that's what I would do. I would just do it, and I wouldn't really think about it. And so Margin Walker, what's up, Dr. Jim? Cancel crash, buy the dip. Yes, that's right, my friend. Cancel crash, buy the dip. Indeed, we are back. Wow, look at that. Even the S&P is down 27. They really are going to close them green today. That's going to be crazy. Did something come out? Like, did we miss something while I've been on air? Like, did the government make a deal or not make a deal? Or, was there a Taco Friday? Again, I think you've got to amend the Constitution. You want to start doing some Taco Fridays. I don't think you can just do that stuff willy-nilly. But maybe they got that done too. That would be pretty amazing. And so, Big Deal Donuts announced Friday. What's your favorite fried food? Oh man, favorite fried food. Let me think about that. I would have to say, honestly, I would have to go with just your standard plain vanilla Betty Crocker sweet and sour chicken. So I would have to go sweet and sour chicken. Like sweet and sour chicken to me, which is almost always fried. I don't think they ever not fry that. And so sweet and sour chicken to me is one of life's hidden pleasures. Like it, man, it is right up there with chocolate chip cookies. Like it is right up there with tuna fish and applesauce. Like it's in the conversation in terms of, the front runners of life's hidden pleasures. And so you may not put tuna fish and applesauce in as one of life's hidden pleasures, but you probably never had it. So you really can't even speak to it. But anyway, I digress. The Preston in the house. Dr. Jim, you are the man. What's on your radar for next week? Man, I'll tell you what. If they do open the government back up next week, which apparently, according to Polymarket, there's a reasonable chance it gets opened up next week. If that happens, I really cannot wait. I cannot wait. Because did today not feel incomplete to you guys? Like, did today not feel kind of off to you guys? And the reason why is because today was supposed to be NFP this morning. And not just any NFP. Like, today was supposed to be the most critical NFP of all time. The most critical NFP in the history of the financial markets. And yet, we were not able to enjoy that together. Like, we were all kind of, what's the word I'm looking for? Man, I got to get my blueberries back on because I'm missing a lot of things today. We were all, I can't think of the word. It's right on the tip of my tongue. I don't know. But we were not able to enjoy NFP. As imaginary and as made up as it might be, we were not able to enjoy it. And so I'm excited next week there, the Preston. Maybe we get back into some made up prints. And any print is made up. So it could just be anything. It could be, it can be the Montana dry goods report. Like it can be, the Spanish durable goods estimate revision forecast. Like it can be all those things. Like I'm just excited to get back in the swing of, some made up imaginary government data. Like that's 100% what I'm here for. And so Sam L's in the house, Doc, making pies and selling them back in the day. Classic hustle, that's what I'm saying. But knowing you, that apple pie probably had a tuna flavor protein twist just to hit your daily macros. No, they weren't for me. They were for my neighbors, right? And so you can bet you bought a biscuit again that I was sliding in some tuna fish and applesauce into those pie mixtures and those pie recipes. Because, this protein, it's not going to consume itself. And it's like, man, let's calm down those blood sugar spikes. Like, let's put ourselves in a better situation to maybe be a little bit healthier. And so I think that's why I didn't have too many repeat customers. And so they had one little taste of that, and they're like, this isn't apple pie. There's something else in here that I don't really love. But Ordenu's in the house. Ordenu says, hey, Dr. Jim, I'm drinking an energy drink from Italy. It's called Prosecco. Yeah, very nice, my friend. That's very, very, very nice. Big Deal Donuts, deep fried protein balls. No. I do enjoy a good protein ball though. I do. The coffee shop down the street called The Blend here in St. Pete, they make protein balls that are actually quite good. And so that is definitely one of my favorites to treat myself from time to time. And let's see, we've got Samuel, Doc, the true VIX whisperer. Yeah, I don't know about that. Well, the VIX bros must have watched your power of short premium move because look at the volatility delivered today. The power was real. And so were the margin calls. Yeah. And then Doc, as momentum traders, the old if you can't beat them, join them strategy took a wild turn. Now it's just beat them and then short the bounce for extra gains. Yeah, I don't know what it is now, man, but we are going to close green today. That's really funny. It's just too funny. Like it's all so funny to me. But anyway, I appreciate you there, Sam. I'll scramble everything. Hey, Dr. Jim. It's weird because I have to end the show now a couple minutes early because we're all trying to do a much better job of ending a few minutes early so the next show starts like on time, which is amazing. So big shout out, big kudos to the production team for staying on all of us for getting this done. Because you might notice like my show the last couple of days, it has started at 1 o'clock on the dot, 2 o'clock Eastern on the dot. That's pretty cool. And I want to keep that going. And I don't want to be the one guy that messes up the whole thing and it ruins the rest of the afternoon shows. And so I've got to kind of get used to, rather than ending at 1:45, I've got to end at about 1:42. And so, but scramble everything. Hey, Dr. Jim, I hope you are surprised and delighted that it's Friday. No, I kind of knew that it was coming. I didn't know this rally back was coming. I'll tell you that. And so I'm a little bit. I'm definitely surprised. I'm not sure if I'm delighted or not. But looking at the DAL December strangle at 65.50, something in the 600 BPR range. To add to your position page, plus 30 IVR. So DIL. Delta Airlines, my favorite airline for sure. Delta up $1 today. So there's your flight to quality again. Let's see. Hey, Dr. Jim, you looking at a 65.50 in December? I don't know. It looks okay. I mean, the IV rank is looking pretty nice. If I sell a 50, the 50 is a little bit low premium wise. What if we do a 52.5 and a 65? This looks a little bit better to me. While that buying power is super nice. So I actually like this trade a lot there, scramble everything. I like it a whole lot. So the pop is 63. P50 is 83. I mean, everything is looking really, really good. I like this trade a lot. I'm going to put this on, and I thank you for bringing this to my attention. This is a great trade. The buying power is awesome. So if you have a small account, by the way, really quick, this is a great trade for you. Like if you got, $10,000, right? You could fit this trade in there. It's a low price stock, relatively low priced. And we're not talking about Bank of America, right? We're not talking about Snapchat, although I'm pretty sure they went bankrupt today. But it's still not too bad. We're not talking about Tesla. We're not talking about, Netflix, which is going to split pretty soon, actually. So it's not even going to be Netflix anymore. But anyway, this would be a good trade for you with a small account. And so, man, I'm curious, is it going to turn green while we're on the show in the last 2 minutes? Oh my gosh, it's too funny, man. It's too funny. And so, where are we at? Brian Dowdy, hello, Dr. J. Sorry to bring up the covered call again. I normally don't do long-term investments like Starbucks, but since I sold the December cycle, I assume I'll have to hold till December to take eBay off. Not necessarily. I mean, what's eBay doing now? EMS&P's down 10. Look at this. EMS&P's down 9.75. It's too funny. Okay, so eBay is up $2 there, which is great for you. If I remember correctly, you sold the 85 call. It is going to turn green while we're on the show. This is so funny. You sold the 85 call. If this is an investment, right? Like you said it was, then you've got to treat it as such. You've just got to sit tight and go live your life. Like just say, I'm going to sit tight. eBay is doing its thing, and I'm going to go do my thing. Like I'm going to let eBay do its thing, and I'm going to go do my thing. This is not a zig and zag type of strategy. This is not a let me try to figure out a way to get in and out of this position, as quickly as I can or what have you. Like this is really more so, I'm going to, put the trade on, put the position on. I've got premium coming in to cover it now, and I'm in a good spot. Like now you can just chill. Now, the basic idea is this. You don't really have to do anything until the short call goes pretty significantly in the money, or it goes way down, the stock goes way down, so that you can manage the short call and buy it back for, pennies on the dollar. I can't remember what you sold it for, but, like if you sold it for $2, let's say, I don't remember. Generally speaking, I'm looking for more than 50% of max profit on an investment style covered call. I'd be looking to buy that back for like 50 cents. 40 cents, 50 cents, 60 cents. That's where I would get really interested because you want to squeeze more juice out of that short call, in my opinion, because it's not a trade. It's not like in at 45, out at 21 type of deal like we might do with other positions. So you have to handle it differently and treat it differently. And so hopefully that helps a little bit. But man, we're done. Emmett Morrison, I see you. Andres Usma, I see you. Man, I see all you. Ranch in the house, man, I see all you guys. I appreciate you guys so much. If I didn't get to you, please come back on Monday. Come back on Tuesday. Come back every day. Put your comment in early. You can see I typically move through them sequentially, so that will increase the delta that I will get to your question. But I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. CBOE is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the CBOE's SPX pit. Watch Liz and Jenny live from the CBOE, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's going on, everybody, and welcome to the most dangerous show on the tastylive network. It's Engineering the Trade, and I'm your host, Jamal Chandler, and I got a special guest today, Gus Downing, in the house. Wild situation we got going on here, huh?
Yeah, it is. I was just saying to you off air, this is really crazy just how different the entire market environment is right now from when I did 12 to 1 with Errol 45 minutes ago. We got off, and here we are talking about reversals, talking about a green day. It's a whole new world here.
It really is. I'm actually pretty surprised. I haven't noticed anything in the last half hour or so. I don't know if there was news or something, or is this literally the market running out of the sellers basically running into exhaustion? I really can't. I didn't know. I didn't see anything.
I think we are just running out of steam more than anything. I mean, when we were on 12 to 1, we were red, but just moving slightly more towards maybe flipping to green the entire time. We kind of had a firm red doji going on the one day when we got off, and since that has come through and turned into a big old green candle.
It really has. I do see, there is some irony here. I do see the market basically for the last 2.5 hours here started slowly rallying, but I feel like in these last 20 minutes here, it's ironic to say this because again, we proved this with a lot of different data, a lot of different studies we did about a month and change ago about how the government shutdown was not really affecting markets. I will say though, in the last 24 to 48 hours, I think it started to a little bit, particularly with airlines, right? We heard a lot of different noise there. And I feel like I just saw something about looks like they're starting to come together on some things here. It seems as though whoever the sellers are using, or whoever the buyers are in the market are using that as an excuse to sort of buy the market up here from the dip.
Yeah, for sure. The airlines are the first time we've actually started to see that really bleed in. And, honestly, people love to panic. And, of course, the news loves to talk about things whenever there's a government shutdown. But, if we have a 2-3 week government shutdown, I really don't know that should have any tangible impact on the market. Maybe gold a little bit if there's, fears spilling over to the dollar or whatever it may be. But holistically, that really shouldn't affect the market too much. And it's an event that we know will end. But as this one drags on, longer and longer, and now there actually are tangible market factors starting to come into play, it does seem like that definitely started to get involved this week. And the airlines, in particular the FAA situation.
It is kind of weird, right? Like you kind of notice that. I just felt like over the last 24 to 48 hours, that was something that really started to bring a little bit of fear in a couple of stocks here and there. And you kind of see it. But yeah, it's a trip, man. I mean, this is just, let's pull up the platform here. This is just a wild rally here that we've seen in the last several minutes here. Holy cow, man. I mean, who would have thought? Not me. I honestly thought that they were just going to sell off into the weekend just because it's just been that bad of a week.
Yeah, I'm looking at Polymarket here right now, and there has been a shift. November 16th or later it was the favorite for when will the government shutdown end forever. And while it is still the favorite today, it has taken a sharp dip. And November 12th to 15th has spiked. So I don't know what the efficient market is pricing in there, but it seems like there's a little more optimism this thing may end.
Wow. What were you kind of? How was your week trading wise? What was the big thing you were paying attention to overall?
Mainly just trying to decipher if this was just going to be a little baby dip like we've become so accustomed to in this rally, or if it was actually going to be something serious and I needed to start repositioning. I kind of began my repositioning process like a day too late. I alluded to this earlier with Errol as well, but I just I've been on this until proven otherwise thesis forever, and it worked for me for a really long time, obviously, and I'm up on account of it. But I waited until like Wednesday to start peeling off some of my long delta, some of the things that I was reasonably certain weren't going to win. And I just think I should have. What's up?
I did too.
Yeah, I think I should have started that process on Tuesday, hindsight being what it is. But then again, I mean, the information I had on Tuesday, we see these 2 red days make higher highs moves all the time in this market environment. So, tough to disseminate that. But yeah, so that's been mainly my attitude this week, is just kind of trying to look through my long delta and decide what I think is definitely sunk and what I think still has life or might have enough time to recover. So I cut some long Chipotle, I cut some long CarMax. That was what I waited way too late on. I got short some Affirm. I got long some DoorDash off that dip on earnings. So yeah, it's been kind of a mix, but mostly it's been liquidating long delta. My beta weighted portfolio delta has come from the mid 70s down to the low 50s through the course of this week.
Nice. Yeah, I kind of had a similar situation. I unlike you, I wasn't as smart with the CarMax. I still have this thing on. I still got this short put on. I mean, for now, I'm just.
Oh, I was long.
Yeah, well, I'm short of put. I mean, I'm long too. I mean,
you're short of put. I see.
Yeah.
Okay.
Yeah, I'm in it. Like,
I'm involved in my own platform here. I wasn't even looking. Yeah, I see what you're saying. I thought off that dip it might have some life, but now I've started to see bankruptcy rumors swirling and all this stuff. I decided that it was just too much amid the red market. But my entry was bad. I mean, like I was in for like 2 months, just bleeding the whole time. It was I wasn't trying to do anything short. I mean, did you just get short off this down move, or have you had that for a little while?
Nah, I had it for a little while actually. I mean, I've had this on for a while. What is this? I mean, I think it's actually the position I've had on maybe the longest in my portfolio. I know I looked at the other. I think I've had them like 40 days. I've had them for 43 days. Again, this was like a smaller dollar name. I wasn't really worried about it. And I figured, whatever, if it goes lower, it'll be fine. But then, yeah, like you said, recently, just things weren't good. Earnings ended up not being great as well. And there's been other rumors. And so, yeah, I mean, I probably should just close it. But I don't know. Now that we're getting some bounce back in the market, it could be one of the sometimes like the names like this, the terrible names end up getting bought a little bit. You could see it a little bit today. I don't know. Who knows if it comes back up here or not, but maybe I'll hold on a little bit longer. It's just one of those I've had for a while. And actually, it wasn't earnings. I'm tripping. What was the news? There was some news that came out the other day.
I thought it was. Oh, the other. I'm not sure. I think that might be the bankruptcy stuff more recently that did that. But yeah, earnings was when I got involved. September 25th was when I originally opened mine, which I think is just the first day after that dip there. Yeah, bad earnings. That's one of my favorite spots to get involved with is a bad earnings call that I think is a little bit overextended and take the contrarian move. But yeah,
I think I did too. I actually think it was somewhere around here one of these 2 days. I'm sure.
Yeah, that has not manifested for me, unfortunately. But yeah, as you said, I mean, dead cat bounces happen all the time. I was just a little too heavy on it for comfort. But if it's just one naked short, it might be worth holding out on a little bit longer, especially as some buying power starts to come through here, buying pressure.
Yeah, and again, I mean, this one, Carvana, just looking at similar industry, I mean, I know it's had somewhat of a drop too. I figured, I mean, unless this one was absolutely cratering, then CarMax is probably fine. But this one did start to crater a little bit too, and I was just, again, because it was so small, I wasn't that worried about it. But it is kind of annoying. But I've had a couple like that. It's oddly enough seem to be the things that are kind of moving today. I mean, MP was one of those that I have short puts in. That's bouncing back. FI short puts. A lot of these names that have gotten crushed more recently that I had short puts.
I'm in Pfizer as well.
Yeah. They've just been getting beat up and they've starting to pounce back. So I guess for now we hold until proven otherwise. But it was just again, most of it obviously this week it was drifting lower, not violently going lower, right? So even though we saw VIX creep up, you saw that it didn't really like surge because there really wasn't much of a reason to, right? I mean, we're already at, VIX, if you figure, the rule of 16, you figure 20 is just about, I don't know, what is that? 1.16 divided by 20. 20 divided by 16, 1.2 or 3 or something like that, I would imagine. Percent moves in either direction, right? And it's at 1.25. Yeah, I should have known that. 1.25 moves in either direction. And honestly, we haven't really been yielding that that number that much. I mean, even today, I think we were down like maybe 1.1% at one point in time, not an official like huge move. So I think that's why VIX has been staying steady at this level, like as opposed to jumping much higher, right? I mean, and so as a result, it's just been this slow bleed for mostly what we've seen in markets. And I've just been, as a result, because I'm getting to the point I'm getting to is that's why I hadn't really peeled off a lot of these long deltas. I'm like, let's just see what happens here. Let's just see what happens here. Wondering when, honestly, this type of day would occur.
Yeah, Ariel was just asking me earlier. He was like, hey, are you surprised to see that we barely challenged 25 at the VIX and it started to dip a little bit now? And I said no, pretty much on the exact same thesis that you just said. When it's a slow bleed, when it's just these little tiny days, it's like, is there really volatility? I mean, it's volatility doesn't just mean down. Volatility means volatility. And so yeah, with just the slow bleed going on, I wasn't surprised to see no major impact on VIX there. And I'm in the same vein of, keeping some of my long deltas on here. Most of what I've liquidated this week was stuff that was already right on the verge of needing to be liquidated. And then it was like this sell-off was just the nail in the coffin for it to a point of irredeemability. But obviously, 50 beta weighted delta is still significantly long portfolio bias. So I'm feeling exactly the same way. I think you hit the nail on the head.
The big theme, I feel like some of this week was sort of is II a bubble, right? We've been hearing some of that this week. And for the better part of, really like the last 10 days, I would say, since earnings here, right? Earnings for this guy. We've seen a lot of these names sort of leaking lower. Microsoft, NVIDIA as well, the last couple of days. Palantir, obviously, post earnings. Why this sucks is because a lot of times I like playing the calendar calls for earnings, right? And they just simply haven't really worked. I don't know about you. Have you played any of these on earnings recently, or you just kind of stayed away?
No, I've done nothing AI or AI adjacent on earnings as of late. I've been staying away. It's always really hard to unpack these things, and something that's kind of been wearing on me over the last, I would say year, maybe 6 months or so, is that there seems to be this growing trend where people get really scared when companies make big investments, which is really backwards logic to me, and it's why I got long DoorDash yesterday, but it's applicable to a lot of these AI companies as well, namely Meta, who I believe is sliding on, there's a bit of sentiment that they might be over-investing or tying up too much cash in AI development right now. But it's this, there seems to be this fear when companies say, oh, we're going to spend X number of hundreds of millions or billions of dollars on development for, YZ. And stocks tend to move down after that. And so that's made it really hard for me to unpack some of these AI earnings, because they could do something that I would perceive as pretty bullish, like, start building a new facility to manufacture chips, whatever it may be. And then the market might actually react the opposite way to that. And in those situations, I love to get long post earnings. That's something I've done heavily. I'm long Meta out of their earnings dip, which hasn't been paying off too well for me right now, but I'm holding strong on that. So yeah, I like when those spots present themselves, but it scares me away from trying to play the earnings themselves.
Yeah, I mean, in hindsight, that would have been the easier play, really, just to stay away from the earnings. And it's funny because I had somewhat of an inkling. I mean, after Netflix, after Tesla, and those earnings didn't go well. And I usually kind of do that. I kind of say, okay, after like a solid week or so, you get a little bit of data. How are the rest of these earnings going to go? And again, I understand like they don't all do the same thing, but I feel like oftentimes there's a theme around earnings seasons, right? When earnings start to blow them out, especially some of the big names, you kind of see a lot of the other ones follow suit. And I mean, that's exactly what happened here. And Netflix and Tesla were your first tells. Like, even though I think Tesla might have missed, Netflix did do well in earnings. They had some whatever tax issue, but they both fell. And that's essentially what happened with just most of the other Mag 7 earnings, although, Google did not obey that rule. I don't think Amazon obeyed that rule. I can't remember. But the rest of them, for the most part, Meta, Microsoft, obviously, Palantir, We've seen that. And so it makes me wonder, even though it's more than, I don't know, 2 weeks away now, maybe even 3, but NVIDIA probably not going to play that one till the upside. I'll just wait and see what happens.
Yeah, I always think that's a fun angle to take is a sector is reporting earnings on sequential days, and you can sometimes glean some insight into what the next company in that sector is going to do. One of my favorite spots for that is that Home Depot and Lowe's always report earnings one day apart, which is fantastic. I mean, those are highly, highly correlated. And it's sometimes this fun little game where Home Depot has bad earnings, then the market goes ahead and prices in bad earnings for Lowe's. And so now you have a situation where it's like, well, are their earnings going to be worse? Like it's almost like you get a little bit of free play there if you want to take the upside or, whatever those angles may be. But yeah, I mean, things do tend to be highly correlated in the sectors. And, while it might be a leap to say, oh, Netflix had bad earnings, Palantir is going to also, as soon as, the Microsofts and Metas start coming in and looking bad, that does start to give you some serious insight into what the other ones may do.
Exactly. I mean, it's just one of those like, well, what's the sentiment going to be behind their earnings? They may beat, but sentiment might be like, oh, this is too high, or this is too, this has gone too far, at least right now. And I feel like that was the sentiment this time around for sure. And yeah, that's a great point actually with which Lowe's and Home Depot. I think, we always used to kind of, when I was trading at a prop firm, we would always trade stuff like that. Home Depot has earnings, Lowe's has earnings 2 days away. Let's just play Lowe's for Home Depot's earnings, and you get what's called like a free look, like you just said, at how these earnings may go, and your position may actually work out, and you don't have to worry about the ball crush, right? So that's kind of the nice thing you can do sometimes.
Yeah, that's a great point too. I didn't even consider the volatility side of it, but yeah. You're absolutely right.
No, we used to do that all the time, man. This is like the best thing, for real. Let's take a look at, let's see if anybody, again, we're streaming here, guys. We're streaming live on YouTube. You got any questions, the drill. You can always ask us, and we'll see what's what. Let me see. Let me look through here. Of course, people are lamenting about CarMax. Clearly, we aren't the only ones who were in there. I know somebody has been talking about Kava, and any buyers in there. Yeah, Donald, I see you asking about Kava. I know that's one that, honestly, I'm surprised it didn't get crushed on earnings because, well, like we were just talking about, CMG. And it did kind of move lower on earnings, but not as low as I thought. But I thought for sure it was going to be a CMG type move on earnings. It ended up not doing that. And as a matter of fact, it bounced a little bit, surprisingly. And I think that earnings was it after the close on Wednesday and ended up trading yesterday. Really surprising that this thing didn't tank on the day where the market was already down.
Yeah, I was surprised by that action as well. I had a funny moment with Errol yesterday because we have a longstanding Chipotle versus Kava debate, both in a market context and in a personal preference context, and we're always going back and forth. He likes Kava, I like Chipotle. I really am not super high on either, but I digress. But anyway, all of a sudden we saw an article pop up yesterday that said Gen Z is spending less on Chipotle and Kava, and I was like, both of them were both wrong, but it's just true. And this is a issue that extends to the broader brick and mortar restaurant sector as well. I mean, McDonald's is up 1% since the start of 2024. Wendy's is down. Shake Shack is down. Cracker Barrel is down. You name it. It just seems like it's really tough times for these physical restaurant companies right now.
That is funny. So wait, you're the Kava guy and he's the CMG guy, huh?
I'm Chipotle, and well,
you're Chipotle.
In objective eating context, yes, I would rather. My thesis is that I would rather get Chipotle if it's a one-off. But if you told me I had to eat it every day for the rest of my life, it would have to be Kava because there's more variety. But I like Chipotle more objectively. Errol says Kava is better in all contexts, and then in the market, our sentiments actually kind of align. We're both higher on Kava than Chipotle there.
Have we had Kava in the office? We have, right?
I don't think that we have, not to my knowledge.
If that's the case, I don't think I've ever had it actually.
I don't think so either. It's I don't even. I guess you'd have to do like some kind of buffet style setup or something. It's very it's a very specific type.
I mean, it's just Mediterranean fast food essentially, right?
Yes. Yeah.
Yeah, I haven't had it. I guess I haven't had it yet. Which again, I'm fine.
Yeah, I've had it like twice in college. It's what you expect. I mean, it's quality. It's solid. Price point's a little bit higher than I would usually like to pay for fast casual, but that's just kind of true at any fast casual restaurant in the world these days. So it's But I think that's part of why they're starting to get squeezed out a little bit is because these casual fast food places you can go sit down somewhere for the same price.
There's better Mediterranean than that. You know what I'm saying? Like,
well, yeah, exactly. If I can get a Cava bowl for $13, or I could actually, go get a nice Mediterranean plate in front of me at a restaurant with my friends for $18, why would I choose the Cava? And such is true with even everything all the way down to McDonald's hamburgers at this point.
And I'm sure the second version will actually be way more food, probably a lot better. I'm just sure a lot better overall.
Oh, certainly, yes.
Especially in a town like Chicago. Gus, check it out, bro. We're only down 4 handles here in the S&P 500. Like, how about it? How about it? Look at this.
Flying back.
Look at this candle. 116 handles a day on a range. Yeah, like you said, that volatility goes in both directions. That should amount to, that honestly should amount to a little bit of volatility. It's not going to, but it really should, because 116 handles, I mean, that's a sizable move today.
Oh yeah, especially coming off the lows. I mean, the sharp change in direction that we've seen, it is significant.
And you look over the last couple of days, so 110, 109, 98, 60, blah, 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 blah. I don't know let's see the last time we had one bigger than 116. You got to go back a ways. We're already back to there you go. Middle of 1016 was the last time we had a range bigger than what we have today. How about it?
Yeah, almost a month. No kidding.
Yeah. And during that time, we had big ranges, right? You look back there, that's 129 on the 14th, 115, 118, 146. What the hell was that day? Was that a jobs day? It might have been a job. No, that's not a jobs day. That's just regular expiration. Yeah, wow. And so, yeah, I mean, this is, I don't know, it makes you wonder. Last time we had those, right? 17, that was, let's call it 6,700. And we ended up ripping higher, of course, back to 6,900. Not back, but that's initially, from there, we went to all-time highs. Makes you wonder.
Worth noting that was a red to green day also.
Makes you wonder, are we going to see that again?
It does. Yeah, it's always, weekends are always a very strange and nuanced thing. It's always, I always find it tougher to try to make my predictions through weekends. I mean, there's just more information disseminated on weekends without an efficient market to price it in right away, which is one side of that. But I don't know, it feels like sentiment, even without any breaking news or anything, can shift dramatically from a Friday to a Monday, more so than most days, like one day to another.
It does. Doesn't seem like anybody has many questions for us. I think a lot of people already kind of got long into the day and are just waiting to try and take some of their longs off towards the end of the day here. It feels like that's what's going on. And I would imagine that was probably a lot of the trade today for most people.
Yeah, I would imagine the same, and I'm interested to see if that means that we get some kind of sell-off here in the next 30, 45 minutes into the end of the day if people got long off the bottom there. Clearly, a great deal if people got long off the bottom, or we wouldn't be moving back up.
My best trade of the day, and this is something I kind of honestly, learned this week. That's what's so dope about where we work. I actually have this background, right? Like from working at a prop firm, I have all this sort of knowledge that I've imparted at times. But again, a lot of the retail trades that we've done, I mean, are stuff that I like. As much as I learned about theory and deep options trading theory, there's a lot of like retail type trades, obviously, that are smaller trades where you can win on. I never really did or learned from. And so, like case in point, I didn't know the idea of a poor man's covered call until I came to Tasty 4 years ago, almost 5 at this point. But my whole point in this is the open heart butterfly. You ever heard of this? This is something new to me this week.
I have not. I actually was just seeing this discussed in chat the other day while I wasn't able to listen to audio. I know that this is a emerging trade here in the Tasty community. Tell me about it.
Yeah, it is. It's essentially one where in this case, I did it's a downside butterfly to some degree, but you spread out instead of making 2 of these 690s, we spread that out 20 points wide here. Right. And then I also did another 20 points wide between the downside put that I'm long versus this instead of doing equidistant, this part is 20 points wide on this bottom put spread. And essentially you put this on for a credit. Right. And then if the market bounces back, in this case, it bounces back because it's a put butterfly, essentially. It bounces back. You can eventually roll this. I'm not sure if I can do it yet. I can eventually, hold on. I can eventually roll this such that, I don't want to do it yet. I did it for $1.70 credit earlier. Maybe, and I guess maybe I wait until I've made half of that credit, and then I can roll this and then make it equidistant such that I basically have it on as a riskless position. So that's what I did the other day on the upside. Essentially with the upside. Let's see the upside here. Boom, 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 boom. That, and then you can see here that on the upside, when I was able to roll like the upside part, once the market dropped down yesterday, I was able to roll like my further upside long put, and basically I have it on as a riskless position. So that was kind of nice. So I waited today as we had that big move to the downside to put on the put side of it, and essentially I'm going to try to do the same thing at some point.
Yeah, that's awesome. That makes a lot of sense. That's I think that like the managerial aspect of trading is really what I think I've made such strides in since starting to work here. And as you imagine, it's amazing getting to work in a place like we do, because you just absorb all these things through osmosis. They're around you all the time. But yeah, things like that, it's innovative. I'm really bad about thinking when I'm putting on a trade, can I create an angle that with later management could be more profitable than whatever I'm doing right now? I'm always thinking very linear, very binary in my trading style. And so, yeah, anytime a new strategy like this emerges that requires a little bit of management for a little bit of extra profit, I'm always all ears. That's really awesome.
Yeah, I don't know if they came up with an open nomenclature. I don't know why open heart butterfly, but essentially, yeah, when you
it's because the middle's open. I'm seeing that immediately. It's like instead of being stacked on the same strike, it's like it's more like a little mini strangle in the middle, kind of.
I mean, I guess, but truth be told, once you actually do this part and it's equidistant, I mean, this is nothing more than a call condor. I mean, that's what that's called already. I mean, I don't know, whatever. I don't know. I guess maybe, I don't know, but it works. It works. It's an open heart butterfly when there's a little bit more space in between. So it works, man.
Yeah, we're gonna start calling this thing the butterfly eating condor here if we're not careful.
Sooner or later, man. Well, I think it's time for us to wrap up. But dude, thanks for coming on the show. It's always good to see you.
Yeah, of course. Pleasure to be here. I love it when you have me in. Looking forward to seeing you again.
Appreciate your insights, man. Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, trade them often. Have a great weekend. See ya.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hey everybody, Tim Knight here, and we're wrapping up a very cool week. So let's review what's happened recently. Let's today's Friday. Let's go back 2 Fridays, I think. So 2 Fridays ago, the U.S. was dispatching their trade delegation to speak with the Chinese delegates and try to figure out this whole trade war thing with the rare earths and the soybeans and the tariffs and all that. I suspect the deal was already done, but they had to do the PR, so they fly out there, and Saturday straight away, it's like, well, we've worked really hard, but we have a framework in place, and we're going to have a 1-year hiatus on these higher tariffs and the rare earth bans going away for a year, and we'll all figure this stuff out. And so generally speaking, it seemed to be kind of the last big obstacle to dealing with the trade wars that started with so-called Liberation Day. And naturally, that Monday, that is 10 trading days ago, the market rallied. So on Sunday, futures open, they gapped higher, everything blasted higher. China solved, and everyone's all excited. And so for the next few days, everyone's falling all over themselves to buy stocks and every other asset. As we stand here now, 2 Fridays hence, it's no deal. Just last week, Bessent was saying, we'll have signatures next week. There's no signatures. And China's talking about, maybe we're not going to totally let you have rare earth mineral. So things are starting to get a little bit shaky. It doesn't matter. I mean, I kind of prefer if they did have a signed deal just to get this hope out of the way. But suffice it to say that the excitement from the ostensible China resolution pushed things to lifetime highs, and those lifetime highs have degraded such that we're exactly where we were 2 weeks ago before any of this happened. So it's been just like a giant upside down U. Along with that, the AI mania, the semiconductor mania, the hyperscaler mania is starting to rot to some degree. There's a lot of sour feelings toward it now, rather hurriedly, and we're going to look at some of those. But the tone of the market's definitely changed, and the one thing the bulls have been hanging their hats on is seasonality, because November is, I believe, statistically the strongest month, if not the strongest. I'm pretty sure it's the strongest, but one of the strongest of the year, but I'm pretty sure it's the strongest. Whereas October and September especially is supposed to be quite weak. Doesn't matter. None of that matters. We're in a house of mirrors now. September and October were very strong. Clearly, seasonality doesn't mean a thing. So I wouldn't count on that at all. I would just use the charts. So let's catch up with those and sort of see what is going on out there. And as usual, we'll begin with a spider. And as usual, we're going to talk about our friend the wedge here. And here's the wedge, which spans for, half a year or more. And lately, as I said, we had this leap higher, and we peaked on the 29th of October. And since then, it's been getting a little bit ugly. Nothing dramatic. The market's down 4 or 5% off the highest point in human history. And it's still wildly overvalued compared to every reasonable metric, whether you look at the Buffett indicator or anything else long term. It makes the year 2000 look conservative. So, don't let a 4 or 5% trimming make you think that, happy days are here again. This is, I think, just the beginning by way of a tone change that's been going on. And it certainly changed my style of my own trading, because I've gone from very defensive, 2 weeks ago, that is to say 10 trading days ago, I was at about a 40% commitment level. I entered today with about 175%. I did trim back some because the profits were too good to resist. So I went from 175, right as I stand here now, it's about 115%. So I've taken some profits because I do not trust this market over the weekends. But the opportunities, I think, are more clear, and the stop losses are more clear. So I've gone from sort of defensive to an offensive position. And that we'll talk about that at the right time later on as we bang through these symbols. Another individual stock, which I think characterizes nicely this tone change, is Oracle. Now, this leap, this enormous gap that took place, you'll recall, was based upon their earnings report, but not really, because their earnings report stunk. What it was really based upon was this sort of doe-eyed, techno-optimistic Shangri-La that they were talking about just how many hundreds of billions they're going to make real soon now off hyperscaling. And people went berserk, and it hit the highest point it's ever been. And in that time, we have gone from like 345 to 237. That's huge. What is that, 30%? I can't do the math that fast, but it's a major diminishment. every penny from this giant gap has been laid waste. So it blasted higher, and that was kind of the time to get out right there, because since then it's been like blorp, blorp, blah, 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 blah. Those are the sounds it was making all the time. This is a simulacrum of them, but it's close. So it's really gotten devastated, and we have blasted through that gap. And, it's all about hyperscaling. It's all about AI. So, yay. Tesla, very much in the news yesterday. Elon's been very good to my family, so I temper my words. And I watched the shareholder meeting yesterday from Austin. But the $1 trillion pay package was approved easily, 75% or so. At first, the market was rallying yesterday. Tesla was rallying yesterday afternoon, based upon the very positive shareholder meeting. It's peeled back. That's to some degree. It's down 2.72%. I don't think it has a whole lot to do with the compensation approval. I mean, keep in mind. Some would have you believe that they just hand him $1 trillion check. No, he's got to grow the place like 700% to achieve those targets. There's a lot of very high bars that the man has to leap over to make that happen. But he's staying, because if they had turned it down, he was heading for the exit door, I think. In any case, Tesla's still pretty near lifetime highs. The actual peak was last December. And so 11 months later, it's a little bit below that. But that big question mark in terms of Elon leading the place or not has been set aside. Now, more general stuff. The diamonds. The good news is the diamonds have finally broken the trend line. Finally. It's taken a long time. It's all the way back to the, of course, April 7th bottom. But today, for the first time in this whole long, grueling awfulness, we have broken the trend line. The not so good news is that we've rallied back above the trend line. But as I've said so many times about broken trend lines recently, the damage is done. And as I said yesterday, I kind of perceive the market in physical terms. So, that 2x4 over there has been beaten with a sledgehammer some, and you're starting to see some splintering, and it's not as strong as it was before. So, this is there has been some damage there, so that's a good thing. SMH, the semiconductors, are down, but not nearly as much as they were. And I came into the day very short SMH, and I covered right quick. But you know what? I got back in again about 20 minutes ago, because this is very intriguing that we have broken well below the wedge. We've got a nice clean gap here. And just like with Axon, a day or two ago, I just want to take advantage of A, the fact it's broken, but B, the strength from folks who are buying it based on the fact it's on sale. It's not on sale, it's changed. And so there we go. I'm short SMH again. Within that, of course, is NVIDIA. And NVIDIA has had, how many is this? 7 red bars in a row. And then finally down here, even though we are net down for the day, a little bit, about 1%, it too is well off its own lows. Maybe Jensen Huang's backpedaling the China's going to win shtick. But the thing is that here again, the tone's changed. This breakout has failed. And this is not big. I look at charts where we've got patterns that are 15 years long. This is like a couple of weeks, But it's not nothing. And this little line here is morphed from support to resistance. The cubes, getting very general about this, these peaked on the 29th, just like the diamonds earlier. And they tried to muster another rally, but that flopped. And then it's been sinking like so. Yesterday was the big down day. And so just to back it up a bit, Wednesday, my perception was that we sure better fall, or else this is just going to be another bullish victory. Mercifully, yesterday we fell hard and we stayed down. We've closed pretty near the lows of the day. And today we sank and then are rallying here. But we do have a new price gap, and here again, what had been resistance and was leaped over has now morphed into, what had been support is now resistance. So this is just across the board, everywhere you look, because we did our typical thing where it like plunged and then the buyers rushed in and rallied things up, and so as is normal, the bottom was like at about 9 this morning. All times I state are going to be PST, so just do the math. But yeah, 9 a.m. is oftentimes the bottom, and that's what happens today. So another very successful critter was EEM. It's the emerging markets, and as with the SMH, as with the diamonds, we have finally cracked the trend line. And the other cool thing about this is that we've also got a gap. Today's been a very good day for gap making. And so let's just put down, boink, a line right there to designate that new gap. Conveniently, it just happens to be right about where that trend line is. So it's extra spicy. So that's another very positive development that we've got kind of a 1-2 punch going on right there. MicroStrategy. I keep saying that because it was MicroStrategy for a quarter century, so I'm sure you'll forgive me. Strategy, MSTR, the symbol doesn't really line up with the name, does it? Is up for a change. It opened quite weak. It had been down about almost 60% from last December, but it's trying to fight back. But as you can see, the trend is clear. Yes, from time to time, you're going to get these green bars like so, but it really won't matter in the end. If you told me this is going to be a double-digit stock next year, wouldn't have any trouble believing that. I'm not going to trade it because it's not a particularly pretty chart, and crypto is crazy. But it could well take place given the risks of putting everything into crypto, into Bitcoin. Some other odds and ends here, just a few shorts cooking. As I said, I trimmed I came into the day with 30 short positions, 175% commitment. I've trimmed that down to about 115 and 24 positions. And not necessarily in all these, but just here's a few interesting ones. So AMD, again, has been a good one. This is down once more, about 3%. So we've been kind of bleeding off nicely from that. And it may well be that this doesn't stop falling until we close this gap way down here. And that must have, I don't know what that gap was all about. Perhaps it was earnings or something like that. It doesn't matter. But the price gap's way, way down there. Caterpillar, a lot of these kind of classic industrial stocks, like GE and GM and Caterpillar are very close to lifetime highs. But I've gone ahead and I'm short this one as well because long-term it's very lofty. CGNX, Cognix, this has also been quite good. This has been sinking nicely. I'm just tightening up stops along the way. So that's kind of the tasks of the day is just, chart by chart, examine it. Either let the stop be if it's appropriate or adjust it. Usually tighter, on occasion is a little bit more liberal. Or if it's really, gone about as far as you think it's going to go, take some or total profits on it. In this case, I'm just kind of tightening along the way. Corning, GLW. This one seems to have reversed away from that peak. It's got to sink lower though. We've got some support down here. Pretty tight little range on GLW. Micron has been rather vexing. It was at a lifetime high yesterday. It's very close to still those lifetime highs, but I'm hoping it'll join the semiconductor sinkage party before too long. It's been very robust. A more thinly traded one, which I've mentioned, I took profits on this one, but I'm thinking seriously getting back in because it's rallying right now. This is OKLO. You can see this fairly well-formed head and shoulders. If I was going to grade this, I'd give it B+. But we are rallying on this. And the neckline's probably just about where the bottom of that rectangle I've drawn is. So that might be a good one. And a couple more. Here's ON Semiconductor, ON. This one's starting to sink. We're down almost 3% on, and yay. And then a little more speculative one, Rigetti, RGTI, the whole quantum space, whether it's QUBT, QBTS, IONQ, you name it, has been sinking after their mega rally. And this is no exception. Funny enough, one of the weakest stocks out there all year is the rather ironically named Bull. This is Webull. I think they're a brokerage. I believe so. But yeah, they've gone from nearly 20 down to, well, they're single-digit stock now. But it's sort of unfortunate that such a good ticker symbol looks like this. But just to kind of put a bow on things, let's just look at a couple of big futures markets out there just to put an end to the week. So here's our friend, the Russell 2000. And it spent time chipping away at this trend line, and it finally gave way. First hint was here, and then more, and then more, and then finally rock and roll. So there's that. And so now this very important line, it represents critically important resistance, like so. Should we rally, which I'd appreciate if we didn't, but should we rally, that line is very important not to exceed. And then finally NQ, which is still down about 156 points. We cracked this a while ago, but still rallied, did an incredible job pushing right up against the underbelly of the trend line. Perfect kiss right there. And then down we go, hundreds and hundreds of points. And I think we've got a potential trend change in the works here. So anyway, a very good week overall. Hope you've done well. And I'll see you here on Monday. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, for the closing bell. And what a day it has been. We have E-mini S&P 500 futures. I wanted to give a shout out to my man, Andrew, in the chat, who was also at San Diego, our event. I'd like to give him the first nothing burger of the day. Take your drink, Andrew. E-mini S&P 500 futures, they're down 10 right now. It doesn't really tell the story of what has been a 120-point intraday range today. A wild, wild day in the markets. NASDAQ down 156. The Dow down 26, basically unchanged. And the Russell is actually green here. It's had about a 60-point intraday range. Wild, wild move in the markets here. Oil catching a little bit of a bid, or continuing to stay bid, I should say, 59.74. The other story of the day is volatility futures near the lower end of where they've been trading. They got up to 21.70. It looked like all hell was about to break loose here, and they just bid them up from there. The VIX itself below 20 now. You have bonds down 4 ticks. They've bounced off the lows. They're in the 16 handle here in the early part of the session. Gold back above 4,000, it's up 17 and change. You got silver up 26 cents, and Bitcoin having a surge back from the 99 handle. We're up to 103 and change on the future spot there as well. That's been about a 6, 7, or about a $4 or $5-ish thousand intraday range. Some huge moves in equities. I mean, NVIDIA, $9 intraday range. Meta bouncing off the 600 handle. It's basically unchanged now. Apple has actually gone from green to red, but Microsoft, another one where, it was down to 493. It's now back up to 496, basically unchanged on the day. Netflix was another one that I was looking at that was down to up. Just some wild, wild moves in the market. Some awesome two-sided action. Palantir, another one that went, $4 or $5, was at 168. It got back up to 178. I mean, it's just been a wild run today.
Yeah, crazy.
Just surprising into a weekend.
Yeah, definitely. Well, there was some potential market news. There was a proposal to end the government shutdown if healthcare subsidies were extended by a year.
Mm-hmm.
So that, if you look at when the move happened and the reaction of the move, but also prediction markets, you can see the swing in probabilities from government shutdown ending November 16th plus to ending this weekend or next week. The probabilities for ending this weekend or next week skyrocketed, and the November 16th plus dropped. So, a little prediction market hypothesis for you that, yes, there's people in the YouTube chat asking, what was this off of? Is there government opening news?
Getting roasted a little bit in the YouTube chat here. I don't know what I did to you guys. Come on. What is this?
But yeah, crazy move in the E-minis. I mean, what an insane bar.
Yeah.
This morning we were hesitant, but still buying the dip a little bit. But I would not have told you that
I didn't think
I thought my 0-day SPX trade was going to be a winner.
That was another thing. When we were, and I've been scalping NASDAQ futures all freaking day. It's been amazing. The last week or two have been just great to scalp around. But I did not think that SPX put spread that we put on this morning would have had a shot to be profitable today. And we just got to bounce back. I closed mine. You closed yours.
Yeah. I closed mine for 50-cent winner. It's definitely a bigger winner now. Yes. But, I mean, I watched the E-minis go from down 80 to down 20. And I was like, okay, I got to take this winner. Because if this reverses, I don't want to...
Take that blessing.
Yeah, I don't want to have a 50-cent winner turn into a $300 loss.
Yeah.
So, took the winner off, closed it for 50-cent winner. Now it is trading for... It's worthless now. So, if you just came into the market right now and you place that trade, it is basically a 100% winner. But what a crazy move we saw in the E-mini specifically. NASDAQ coming back a little bit, but not nearly as much as the E-minis, which is interesting. Bitcoin bouncing off that 100K low, and we'll see if we get a moonshot in the market next week if the government does reopen.
It sure seems like risk is back on. It felt, I mean, like that sort of move of 100-point-ish move, high to low, that's the sort of thing that you live for. And that seems like it was kind of like a capitulation there, which, you know, it's been a nice down move from 6,900, 6,700. Nice little dip. I don't think that was the crash everybody was looking for, but definitely working for us for a lot of our positions. I took today as an opportunity to take off some of the short delta. I scalped from the long side. We put on a whole bunch of trades today, which were mostly bullish. Think about like the Lulu short put, the Roblox, Jade Lizard, VRT. We sold that put. We got long Microsoft, kind of near the lower end of where it was trading. I had a Costco position, and it was a good trader's day today, taking off a lot of short delta stuff that worked into the down move. Synthetically getting you a little bit of long delta just via taking short delta off the table here.
Yeah, for sure. We did place a bunch of trades from Fast Market as well.
Yes.
So from this morning, quad U position, short put at 15 with a 2025 call debit spread on top of it. Mm-hmm. So a Super Bowl, or the stupid as we like to call it, in December. But collecting $1.60 credit, so it's still a high probability trade with just an upside kicker. Roblox bought a 110, 120 call diagonal spread, and that was for a $5 debit. Oracle sold a 230, 220 put spread for $4. Mm-hmm. And then, bought back the SPX trade in the 0 day for a 50-cent profit. And I rolled my IBIT position into this rally. So I rolled the call down from 75 to 65 in December.
You wanted that round number.
I did. You see that? Did you see
No, but you mentioned that yesterday.
Yeah. So I routed it exactly for $1.13. So my net credit received is exactly $3,000.
There you go.
Which is crazy because we started the year with a $500 strangle, and we've worked it up to a $3,000 credit. And now we have plenty of room for this thing to move, but we'll be in a good spot for the end of the year, and it will be a great anatomy of a trade.
Totally. Just to put it out there for some of the earnings next week, I mean, we're kind of at the end of earnings season, but you do have Rigetti on Monday after the close. CoreWeave is there as well. You have Rocket Labs and ASTS. I know some people are YOLOing around in some of those trades. You got Nebius Group, which is MBIS. I know that's a hot stock right now. You have Oklo next week, Beyond Meat, one of the newer meme trades. Circle is in the middle of the week. You got like Cisco, Pan American Silver Co., PAAS, which I have a position on, and somebody gave me that for a what's your assumption. Disney is in there, JD. So there's still a couple names, AMAT after the close on Thursday. So there's still a handful of names that are tradable next week. It should be an interesting one as E-minis get to basically the high of the session here, only down 5. I mean, we got to close green, right?
It would make sense. The narrative would be in. If we close, so there's a question in the YouTube chat actually of if I think that the deal is not going to get done, how would I play it?
It's a great question.
I would just play for the inverse of what we're seeing today. You're seeing the biggest rally in the E-minis relative to the others. If you look from bottom to top, the Russell actually might be a bigger rally than the E-minis, but the NASDAQ is still kind of lagging a little bit.
Yeah.
But yeah, I would just place a defined risk bearish trade in the E-minis or the Russell. I think those would be the two that I would pick if you're trying to fade this move that we just saw.
Are you long NVIDIA?
No.
Is now a spot to get long? You're back down to 180-ish or 187. I'm long, so I'm in, and I have
fear is over.
Is this the sort of thing you look for? I mean,
yeah.
You know, like when you think about down moves, you got a $20 down move, and just using NVIDIA as an example, it's about a 10% move over the last week or so from highs. Now that's kind of a spot, right? I mean, there was a time where, you know, NVIDIA got below 100 and it was off to the races after that. You got earnings coming up in 2 weeks on the 19th, just before the November monthly expiration.
Mm-hmm.
Is this a spot you dabble with a call diagonal if you don't have something?
So I think what could be interesting is, and I'll do this right now.
Mm-hmm.
I'm going to do the 195 calendar, but I'm going to buy December.
Okay.
And I'm going to sell the 7-day option.
Okay.
Because the 7-day has $180 of extrinsic value expiring on Friday. And what I can do is if we do get the rally up in NVIDIA to 195, I can buy back the 7-day and roll it to the 14-day into the earnings cycle and turn it into a diagonal spread. So I like the ability to sell the 7-day option that's going to zero next week and roll into the earnings weekly cycle, which is the 14-day, and pick up a ton of premium if I need to hedge further. So it's a $7 calendar spread with the ability to roll into a weekly cycle or the 14-day cycle. And right now, if you look at the difference in price between the 7-day 195 trading for $1.80 versus the 14-day 195, it's trading for $5.50. So you can pick up a ton of premium just by rolling into the 14-day. So I was just filled on that for $7.67.
There you go. Hopefully you don't even have to roll. You can just be taking a winner off on Monday when they announce some big, beautiful spending bill, bring back the government. You know, you get all that stuff moving. We're basically at the highs of the session here. You got E-minis only down 4, the NASDAQ down 126, the Dow actually ticking into the green here as well. It's up 13. You got the Russell, the strongest of the group. It was the weakest on the way down. Bitcoin is up about 3,000 on the futures, 1,200 on the spot. Gold and silver both rallying here. Volatility at its lows, 30 cents. It's at 2011. I would love to see it get below the 20 handle into the close here in the next, what do we got? 13 minutes. That would be the all clear, I think. You got a sub 20 handle VIX. Well, the VIX is sub 20 handle, but vol futures, you get a sub 20 handle. And I think it tells you all you need to know about this weekend.
Yeah, agreed. I mean, they're flattening out right now.
Vol futures, you talking?
Vol futures. I mean, the gains from today are gone. So we're basically unchanged on vol futures.
Yeah, on the vol futures, the way that we like to put this in, maybe we'll have some features coming soon that'll make this a little bit easier. But if you put in each of the vol ticker symbols, so like, you know, the current vol is the X25 contract, Z goes into December, and then we get into the early part of next year, you can kind of visually see the curve. We're back in a little bit of a contango as we saw a little bit of backwardation today. Did we see that? Did you mention that today or yesterday?
Yeah, today.
It was today.
We had a 20-cent backwardation this morning.
You got to love that.
And then they said, wait, what are we doing here?
And they said, no, we're buying the dip.
Griffin Jones, this shirt would be interesting with a green screen. This shirt is a green screen.
Yes, we're please you spend your weekend. There you go. Just putting something on Mikey, and we'll show those. Please tweet at us.
This is my party polo. I've decided.
Yeah, it's a good one.
Thank
you. Good one. Find you in a crowded place, no problem.
Easy. Couple minutes left here.
Yes, E-mini's selling off a little bit. They're down 14. Nasdaq down 117. The Dow is now down as well. What's moving the Dow? Let's see what.
Yeah, I think the narrative is in play. I think we saw the fact that the market would like the government to reopen.
Mm-hmm.
And if that happens, I think that could be a bullish catalyst, especially if you consider some of these stocks that have been just beaten down. Microsoft, Meta, Nvidia.
It's a little Johnny trading Walmart. I was looking at the Dow stock list, and Walmart back to 100. They got that little pop to 110 on the OpenAI deal. It was one of those we're going to integrate Walmart into the OpenAI search, so you could just buy your groceries when you're asking about how many calories your can of beans has. You could just order it straight from Walmart.
There's always a use case for everything.
That's true. Costco was a nice dip buy as well. That stock now down on the day. It was up earlier this morning. You got any interest in that?
I've been interested in telling everyone my favorite new Costco find, which is, the juices, the pressed juices, like the acai berry and like the greens. You can get a box of those juices, 8 of them, for a low price of $14 or around there.
Wow.
Which is a steal when you consider if you
it's
go to
sub $2 per.
Or if you go to a place, you're paying $6-7 for one bottle. So there's my Costco plug. Use my promo code. But yeah, I like Costco when it's at these lower levels. I think Costco could easily be a stock that goes well above 1,000 over time. And yeah, I think any of these stocks that are near the lows of the trading range, especially ones that are big household names, are opportunities if you have a long-term horizon.
Look at this vol candle, dude.
Yeah.
Well, almost 22. Are they going to tick this below 20? Are they going to do it for us? Just give me the all clear. Give me the all clear. We had our
blast off mode.
Blast off mode.
E-mini's
only down 6. They've bounced back. Nasdaq down 130.
I think we will see a nice end of year rally, especially if the government reopens and things are good. Yeah, the Santa Claus.
The sleigh bells.
Yeah.
You hear it? Okay.
I hear them. Very faint.
Very faint. It got a little scary there for a second.
They were retreating, but now they're coming back. But we do have a 300-point implied move with current implied volatility through the end of the year, which would put us right at 7,000 if we get to the expected move to the upside. So it's well within the probability scope here.
Yeah, you got Meta moving higher here, up $1. Tesla, another one that's had a pretty wide range today, about a $20 or so intraday range. It's kind of near the higher end of where it's been trading recently, 429 here. Nvidia, let's see what that's doing. That's basically unchanged on the session. Microsoft, do you think we get a 500 print on Microsoft on Monday?
Yeah.
Maybe.
Look at Meta. Meta's a crazy bar.
Yeah.
Crazy.
But that's some pain. That is the 10-15% drawdown. That's a big move. That's, the things can only go to 0. So 10.
Most things.
Yeah. Yeah, we did have an oil.
We had a negative oil print.
We did have a negative oil print. VIX futures 2005. Are we going to get it? Are we going to get it into the close? Come on. They're going to take this thing.
Sub 20, yeah.
Yeah, we're going to take this thing green. And
I think E-minis will end green on the day.
Okay. If they're green, then you gotta get a little vol crush into the weekend.
Remember yesterday? Was it yesterday or 2 days ago where you were like the 250 buy button just doesn't exist anymore? You're seeing it in real time right now.
No. This buy button happened at noon.
No, but look at 250. We've rallied 20 points from the 250.
Tried to smack it a little bit. 20. We're gonna get it. We're gonna get it. Look at this vol chart. Give me it. Give me the 19 print. Call up the peeps at CNBC. Tell them to buy the dip. Is it gonna happen?
The VIX is sub 20.
Yeah, the VIX has been sub 20 pretty much all day. What a day this would be if you get vol futures, if you get vol down on the day on a day like today where it felt like all hell was breaking loose. That would be something here.
That's just the craziness of this market. It's just like any trouble is just wiped out in a matter of hours. Like it's felt like that's how it's been this whole year.
I agree. I think this was a longer dip than has been the case. It's been like 24 hours, if that, for most of them. This one was a little bit more. And here we go. We got E-minis only down 1. Vol futures below 20.
Got to goose them into the close.
Yeah, they got to. Here we go. Come on.
We got some people in Austin.
Yes.
It was a great show. Saw some pictures. Looked fun.
Yeah.
I saw I saw Liz in her cowboy hat.
E-minis ticked green.
Yep.
They're green, 25 cents.
Talk about a vol collapse day.
Unbelievable.
Insane.
Unbelievable what a day today was.
I had a poll in the YouTube chat. Will the government shutdown end next week? 57% say yes. 43% say no. That's on 170 votes. So
good.
Majority say yes, which is in line with the probabilities that we've seen shift over the last couple of hours. But yeah, again, it appears that the market would like that. And I think some of the biggest opportunities from a bullish standpoint are clearly Bitcoin for me.
Yeah. You get that government shutdown and that's going to be a big candle.
Yeah. I think Bitcoin and Microsoft too.
I think Nvidia is the play.
Nvidia too.
I think Microsoft is going to be a catch up, but I think Nvidia, if nothing happens this weekend, like if we get the government back open and it's back to status quo, Nvidia is going to be 200 and 205, and everybody's going to be like, why didn't I buy it at 180?
Yeah.
We're going to say that to ourselves again going into earnings.
Yeah. It's rare that you see a chart like Microsoft or like Nvidia where you see it rally and then you get a 10% haircut. It doesn't happen all too often.
E-mini's up a point. It was, it
was fun.
It was an inside day. It was, a nothing burger of a day. There you go, Andrew. Drink up again.
I mean, I just can't believe it. I can't believe it.
Yes, you can.
I can believe it.
You can believe it.
Yeah, I can believe it,
yes,
and I actually expect it. Like deep down, I expect it.
You're like, of course.
I'm a good trained millennial to buy. Like I buy most dips. But it's still unbelievable that this happens intraday.
We talked about this. Volatility pops. You get a down move. You've had short delta. The opportunity to take some chips off the table and add some long delta is there. You don't have to go full bore. It's not like we bought with both hands at the bottom today, but it was an opportunity certainly.
Yeah.
E-mini's up 2, NASDAQ down 90. You got the Dow up 40 and the Russell up 12. Volatility futures 1919. The VIX at 1938. They're smashing vol into the close. They're buying stonks. What do we got here? We got something good?
Oh, yeah.
Little cash.
Money match. tastytrade.com/money match.
Yes.
Scan that little QR code, bring you to the landing page. But 1% cash match and 30 days commission-free trading. And the 1% match is on any and all deposits within that 30-day window that you have when you've opened a new account. So check it out. We also have refreshed our referral program. So this is cool. If you scan this QR code, or you go to tastytrade.com/referral, which is actually pinned to the top of the YouTube chat. But this one's fun where we've refreshed it. So with someone that opens a new account, if you refer them, if they throw in $2,000 in initial funding, you both get $100 each. So it's a nice little 5% boost if you just do the $2,000 minimum. But yeah, build your own trading community. Drop
Get some
them in the
cash
YouTube chat.
for it.
Get some cash for it. And yeah, this one lasts until the end of the year, and you can refer up to 24 people per calendar year. So share that code. You can find your referral code on the web-based platform in the Manage tab, as well as your mobile app. You can share the link directly, or if you just send the copy link, it'll bring them to a landing page with the code appended to the URL, and they'll have it ready to go. So check that out, tastytrade.com/referral.
As we get into the close here, E-minis up 6. It's a rally.
It's hilarious.
E-minis up 7, NASDAQ down 80. You got the Dow up 60. You got the Russell up 13. Oil staying bid throughout the session. Volatility futures 1985. Bitcoin at highs, gold at highs, silver at highs. VIX at 1922. That was great.
Yeah.
What a day.
Market is telling us that maybe we see a little government action next week.
I think so.
And so do the
maybe get some China, like China news, something.
Could be all over. We'll see. Volatility collapsing though into the weekend, and the market ripping is a
chef's kiss.
Oh my God, the VIX futures are down on the day now. 1983.
Unbelievable.
Great year.
What a wild ride of a day. I hope you all had as much fun as we did. The great thing about this is that we get to come back and do this all over again on Monday. So we're going to take a quick little 90-second break. We'll see you on Sunday for the Open for first call, as well as Monday morning. We're back at it. I hope you all had a great week. We'll see you then. Peace.
Peace.